Will be on YouTube also. All right, Anka, I see your screen now. Are you ready to start?
I am ready to start.
Okay, let me just fix one last thing here. Okay, I'm gonna start my official recording in just a second and do a quick intro. All right, hi everyone. Welcome to Analyze Your Trade number 225, uh, live on TimingResearch.com. So just a quick reminder for everyone, we're going to be doing live chart analysis here for the next for for the next several hours for all day today. So just a reminder, of course, all of these sessions are for educational purposes only. Trading is not suitable for all people, and please consult a financial advisor and only trade with money you can afford to lose. So to open the day for us is Anka Metcalf, and I'm going to turn it over to her.
Good morning, everybody, and welcome. I am ready for your questions, for your stock picks. Let me know what you're looking at. I have a chart of the SPYs here, and pretty impressive, right? We're heading back into resistance. And the question is, are we going to make a new high this week, all-time high, or are we going to wait for next week? All right. All right. We have our first stock. It's EVER. All right. So this one is bottoming right now. It has a double bottom structure right here into the $13.50 area. And it's still consolidating, so not much happening with it. And a lot of times there is a reason why nothing is happening for these stocks. Oftentimes there is news, and a lot of times it's technical. And in this case, it could be both. I do not know the fundamentals for this stock. However, I can talk about the technicals right now. And from what I'm seeing here, and I want to make it very clear, is that we have a really hefty level of resistance. This resistance is coming from a prior low. More so, it's coming from this band right here. So as you can see from the left-hand side here, since 2021, the price action has been struggling with this area. So from 2021 all the way to 2024, the price action was below this threshold of about $18. Then it managed to stay up there for some time, and it decided to test the area again. So this prior resistance area decided to test it again this past few weeks right here. So we have been having this base since the week of February 9th. And we have a confluence resistance here. So we have the resistance that is coming from a higher multi-year resistance structure. So from a minor resistance, multi-year structure here that is putting tons of pressure on price. Number two, to add on, we have the 200 SMA, which is very flat and could impact in a negative way the price. Plus, we have a declining 10 EMA. This is the third factor to our pressure in price that is literally putting a lot of stress on advancing. So, with that being said, this area right here is very difficult from $17 to this very high right here. This high is $17.59. This candle right here where I have my cursor. So it's around the $18 area. So $18 area could potentially release a little bit more buying pressure. I'm not very optimistic on this one. And I'm going to give you another element why I'm not. And that is because we have another area of resistance that is coming from this double bottom right here that really didn't hold as much for the upside. So this stock obviously has a lot of issues right now. And especially when you're having a dominant bullish market, when you're looking at the Qs, the SPYs, you're looking, at a lot of stocks that are powering higher, and you have this one that is not moving. this is not a good sign. You want to be more than in sync with the market. You want to make sure that you are looking for stocks that are rhythmically stronger than the Qs, than the SPYs, and there are thousands out there. So what I'm trying to say is that this may take a little longer here. It's not one of the best case scenarios, and it may still linger here for some time. Keep in mind, this is a weekly chart. So if you count the weeks in which if you're in this stock, you pretty much have been a sitting duck right here. So it's like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks in which this stock has not produced anything. So basically, it's, not, the money's not working for you if you pick this stock. So if you're considering buying this stock or even shorting this stock, I could give you some parameters. This is not something that I would choose though, but if you wanted over 18 bucks, try it. I would try it with quarter R, something insignificant, place the stop below the bottom here. Or if you want, it could potentially go lower because, like I said, there are strong elements of resistance here. So it could be bearish under $14 and it could potentially start moving lower. And I could give you another example if you want, Steve. Like I have been in a garbage stock for a really long time and I kept on adding to it because it kept on going lower, and my garbage stock is BULL. Okay, finally moving a little bit. Yesterday it started moving because it had some news, so finally moved a little bit. But this is what I mean. This is, this is kind of like I call them like garbage stocks because they're not doing anything. So what I kept on doing to this stock was like add to it, add to it, add to it, add to it, so I get a really better average. But yeah, this is the kind of stock that and these are the types of stocks where you have to wait a very long time before a decision is being made on it. Patrick is asking about ONDS. Okay, this is another one that is into a lot of cluster, and I know that a lot of people are looking at it. This is so pumped in social media. It is ridiculous, and it's literally not doing anything. So if you look at the overall market structure, and and there are a lot of individuals that are very stubborn, and probably they have a lot of position in these types of stocks like Bull, ONDS, and a lot of these stocks. You understand why they're pushing it because they want other people to get in. Here are the pros and the cons for this stock. Number one, the price action is below the 50 SMA and the 21 SMA. From this standpoint, it's bearish. From the trend standpoint, I could literally count about 3 lower highs right here. So I have the high, first lower high, second lower high, third confirmed lower high. The positive about it. So the positive is that it's sitting on the 200 SMA. As you can see here, it really tried to hold the support here. This is just a peakable low, and it went a little bit higher. Here, it confirmed another higher low, but it's confronted with a lot of resistance. I would say that if this stock manages to get above this descending trend line, it could potentially run a little bit higher. However, keep in mind, you still have tons of resistance over here. So your risk to reward ratio is not going to be as great. This is just my 2 cents about this stock. And this is the daily chart. So it's very conflicting. It's not participating with the market in any way, shape, or form. Okay, ready for the next stock. All right, any other picks? CAH. All right, really low volume in CAH. Once again, this stock not participating with the market. It's into a heavy resistance area. It had a prior high, November 2025, that is impacting the current price action. It has the 50 SMA, which is flat, and also has the 21 SMA, which is a little bit below that. And it's sandwiched in these areas right here. Now, I'm not going to get into detail about algorithmic action for these type of stocks, but because I really don't have that much time. but there's not going to be a decision anytime soon, as long as the price action is going to hold. And I don't mean the range of the day, but I mean the price action throughout the day. If you have a close into, let's say, this 21 SMA where my cursor is at right here, the price action is still going to go back and forth between the 50 SMA and the 21 SMA. Also, on the other hand, you also have another structure of support in case you don't know where this pivot is coming from. We have a price structure low. I'm sorry, high here from December 24th, 2025. So from last year in December, and we're holding the December highs right here. From the structure standpoint, it is not as bad because you have a low, higher low, you have a higher low from the gap, you have a higher low right here, and you're holding a higher low in here. However, you're still confronted with a lot of pressure in here. So the price action needs to take out these highs. So you need to see the price over 200, I would say $218, because you need to, and not that you need to see it print above, you need to see a daily candle close above. Because when you get the close, that is when the rally is going to start. If it's just going to test it, it's going to put a new high, and then it's going to, ding back down, and it's going to leave a topping tail with a shadow, like a tail behind a wick. That's not going to be good, because it means that the price action is going to get back into this really I was going to say crappy pattern, but it is the crappy pattern. But yeah, you need 218 in order to explode higher. And as long as you're having these higher lows, this is not a good pattern to short. But once again, you're going to have targets into probably 222 and back into these highs, 230 to 234 for now. And then if it takes this out, you can run some extensions to see where some institutional money is parked to take some profits in it. I really don't like it because in this case, we have very low volume. So the volume is really decreasing. So that means that there are not many people interested, not many investors that are interested in this stock. The money has rotated into tech stocks right now, and it's going to stay there for a while, probably till next week. And then we're going to see some other rotations on Tuesday or Wednesday. All right, the next one is ARKG. All right, ARKG, we have, again, level of wild support. And then the price action went higher. Notice that the price action is trading right now above the 200 simple moving average, which is good. It's approaching resistance into the $30. Still has a little bit more room to go to 32 and to 34, but it's on track. So it's not bad. This one is not bad. So it has a very wide level of support right here, and volatility created that. But other than that, it's looking good for a continuation higher. But keep it in mind, I mean, it's not yet out of the blue because you have tons of resistance from this pivot at $30.50. So around $30, which it reached it today. That's why you're seeing that tail right here, because it read the resistance in the whole number. Now, keep in mind that all these stocks that are trading, these are called like baby stocks, like all the way to $50. These are called baby stocks. They are reacting very strongly to these whole numbers, $30, $20, $50, whatever it is, because they're smaller in price. And a lot of traders, have not only targets as, technical levels, but they also have whole numbers as targets. So, all right, Amazon. I have been in Amazon since last year, and I thought like, oh my goodness, like when is it going to start moving? So Amazon here by the way, I'm in Amazon since October of last year at the 200 SMA rotation. It went higher. I took some profits out, not all. And then it gapped down here on earnings. I still kept it. I held it throughout. It did a double bottom support. It finally lifted above. See how difficult it is for the price, because we had the first stock that we were looking at, EVER. And I was telling you guys that, it takes a really long time for the price action to digest a prior a prior low, which means minor resistance right now, really hard for price. And it took this price forever from February all the way until April to digest this resistance and finally move higher. Now, it is trading into resistance right now. Currently, it is trading in an inside bar, but it does have room to move higher into the 258. I just want to show you very quickly the monthly chart to show you how robust that is. We have an all-time high, which is sitting right here. This is in November, the 258.60. And if we take this out, go back to the daily here. Okay, so if we manage to take this out, we are going to have a really massive, target above this. So if you're holding it, I don't know what your plans are, whether you want to swing or if you're holding it for a longer term. I'm doing both with it, so I'm a little bit flexible on it. But it does have a huge target above. So once it clears that area out, I'm looking for at the end of the year and going into next year for about 350 bucks. And this is my ultimate target right here for Amazon. So I'm holding that. And we are into our swing trading program as well. We are into Amazon, and believe it or not, we're still into the Q, speaking because they have a very similar structure. And we have actually positioned end of November for a potential rally going into NASDAQ. I added into December, and towards middle of December, I added over here, and then the market, I don't need to tell you what happened. We had a peakable low over here, and now we kept on I added over here, and then we are back into the resistance. So we're really well into the money. But this was a trade anticipating window dressing for last year that didn't work out. So I'm happy to see that even if it takes a little bit more time, it's finally starting to work out. But this was planned as a swing trade. It's almost like a core trade right now. All right, so this was Amazon SMMT. And by the way, you've noticed that even the Qs are lower volume, right? So we have low volume in the market. Investors are not quite ready to dive in. Let's see what next week brings, because next week we may have some maximum turbulence into the market. Not saying anything else. All right, so, but mark your calendars for next week. It's going to be wild. Anyways, so SMMT, this is again therapeutics. Okay, I'm just going to stick to the chart. Now I'm going to give you my thoughts on therapeutics and healthcare stocks. But it's trading above the 200 SMA, so that is actually a positive. I looked at this stock before, and it does have room to go into resistance of about 25 bucks. Okay, so that would be the first layer of resistance, the second layer into 30 bucks. Again, being a baby stock, watch for huge reaction into the whole numbers and fulcrums like at 25, 30 bucks and so on. But it is looking okay for now. And again, low volume, but low volume is everywhere. Okay, the next one, AVAV. All right. Oh, this is ugly. Really ugly. All right. So it has a death cross here. This makes it very bearish from this point. Is trading lower, is trying to create a support level into the $174 area, is really fighting this. It has been in this area for almost a month. And it is trying to lift above. Now, the positive about this is that, I don't know if you guys can see it. I'm going to try to zoom in a little bit more so you can see the candles. The price action closed borderline above the 21 SMA, which can potentially bring a little bit more optimism to the pattern. But again, the problem here is that minor resistance, right? So you have one level, which is over here, which is fine because it has not reached that area yet. But you also have a volatility aspect of it with this tail, which is right here, right? So you're seeing why the price action is not zipping higher immediately, right? Plus it had some kind of news here. I don't know what it was because I didn't check the fundamentals side on this one. But it had some mega selling action going on here, right? So you could see the huge volume. So I'm pretty sure that somebody that owned a whole bunch of this stock really wanted out, really wanted out, because this is a massive, massive sell. Whether it was news or whatever it was, the volume here speaks to us. And they tell this volume is showing us that they ditched this name. They don't want to be in this name. But watch this level if you want to trade this. This is the support. Any break over this minor resistance can potentially bring it back to the 50 SMA and confluence with the prior pivot low. All right, next one is GLD. Okay, so bottom line in GLD is that, let me see here. No, I don't have the notation. Now let's start with the weekly. So GLD has started to rotate into March, into the week of March 30th, and is trying to go higher and is doing baby steps. Now, last week we had an inside week, which shows a lot of compression, which shows that it could potentially start moving a little bit higher. I like the fact that finally the price action on March 30th got above and stayed above the 21 SMA, but very slow progress has been made so far. And the reason for that is that we still have some residue resistance from these lows and from the gaps. You can see here we gap down, we try to manage a little bit higher, but we have another gap over here, and we have the 50 SMA. So we still have this pivot low right here and this gap down. This is an isolated island gap that produces a lot of resistance here. So the price action definitely needs to take out 450 in order to start moving higher. And now keep in mind that typically after a massive move is happening in gold, gold has a tendency to base, and it could base for a couple of months or a few years. So if you look back on the chart, you will see that gold has the tendency to base for 3 years, 5 years, 10 years even. So I am not into a position in gold. And I certainly don't plan on being in gold until it proves that it has a better structure. All right, HOOD. Robinhood. All right, Robinhood again. There's some news that came out yesterday that popped. Obviously, all the broker dealers, platforms, you name it, everything went higher yesterday on the SEC news that came out about the pattern day trader. So this is the news right here. Gap up. It could potentially start moving a little bit higher. Be very cautious. You can see here that the volume lifted. This is a very good sign for it. So if you're in, stay in, continue to trail diligently at the end of the day, and it should continue a little bit higher. Now, keep in mind, it does have resistance over here. So from this prior high, so you may encounter a little bit of divergence. But it's trading above the first area of resistance, which was this pivot. It could potentially do a squeeze, but keep it in mind, I'm not sure if it's going to reach the 200 SMA, but it could potentially reach this pivot low right here. So about 100, I would say like 100. And then see what happens from this point. You would have to reanalyze the stock and see where it's at. Okay, USO. USO is literally a geopolitical, right? It's all about the geopolitical context. So if next week some really crazy stuff is going to happen, then you're going to see USO on fire, and you could see it like 150 bucks or even more. Okay, like USO. Let's see if I have this over here. No, I don't have it. Okay, so I talked about on my X account on social media, I talked about the fact that this could produce a breakout over here. Okay, now I want to show you something very interesting in USO. Although I discussed and I said, you know what, if oil is going to start taking out the 125, it will start moving higher. And this was before this happened, right? So we were talking about it. You could go back on my X and you can actually see what we discussed on USO and oil futures. But we were trading right here when I talked about it. So I said, this is a range. This is very bullish in all aspects, and it could potentially break out above, or it could break down below. Okay, so it could break down below. This is what I talked about. Now, I didn't take the trade, even though you kind of read, and you not kind of, but you read the price action and you anticipate based on technical analysis what can happen. I don't want to trade it. So it's not for me. I don't go for volatility. When I see volatile stocks or indices or ETFs or what have you, I take a step back. I look elsewhere to have safer entries, to have safer profits, to make my money actually work for me and not kind of have to wake up at 2 o'clock in the morning and say, oh my God, where is oil? Okay. Or you hear a headline and you're like, oh my gosh, a tape bomb again. Am I going to survive? Am I going to, have the same stuff? Because here's the thing, it is bearish below here. Okay, so this is the first breakdown, and this is exactly what I had on my X fade. So it would have been bullish above and bearish below. So where did this bearish below go? Nowhere. Okay, so it rotated back because it's in strict correlation with the headlines. And I don't know about you guys, but I don't trade headlines. I trade the reaction off the headlines, and definitely I'm staying away from this crapiola that is going on here. And then we have the rotation price a little bit higher. So getting to where it's at right now, from the technical standpoint, it could be bullish above yesterday's high, and it could have a continuation higher to 133 and 144. Do we have any guarantees on that? Absolutely not, because we don't control the Straits of Hormuz. All right, I don't think I have time for anything else. Dell, I'm going to take this one. And that's because I'm in the trade. Okay. So I'm still in Dell. Dell is very, very strong. It's just having a resistance kind of back and forth action. It's trying to digest that resistance, but it's looking really good for a continuation higher. If you want the projections that I'm looking at, I could give them to you right now. So I'm looking for a target. Okay, here it is. So I'm looking for medium target into the $194. Then I'm looking for 205, and then longer term, I'm looking for $230 in it. So these are the targets that I'm looking at. And I think my time is up. I may be wrong. I may be right. I don't know if I have
Um,
time for one more.
yeah, the next analyst is not in the room yet, so if you want to keep going, go for it.
Okay. All right, Stuart, Caterpillar for you. Okay, so Caterpillar, by the way, beautiful stock, is going to report earnings on the 29th, and it's consolidating into the highs here. This is super, super strong. Okay, see where it's pulling back into, and look either for a rotation or a break above the resistance, and that's going to be super strong. Caterpillar continues to deliver. Personally, I love it. The pattern is fantastic, is amazing. The only thing I don't like about a Caterpillar is that it's at $800, and I can't take a lot of shares, but I love it. I love it. Chart pattern wise is awesome. And I think we have until David cuts
Okay.
me off.
Yeah, Matt's here now. So,
Okay. All right. So thanks so much, everybody. I'll see you guys next time. And if you're interested in my stock picks, you could actually go. I'm going to put the link right here. You could go on this page and you can find out about our program. Thanks so much, everybody.
all right. Thanks, Anka.
Thanks, David.
All right. Thank you to Anka Metcalf of Trade Out Loud for opening the day for us here. And just a reminder, I am live streaming to YouTube, so if you have to leave the Zoom room for any reason, you can find it there. And that archive will be available instantly as soon as the day is over. And put the link right there. And then also I am recording each session individually, and those individual recordings will be available as soon as possible as well. So next up is Matt Timpain.
Hey, David.
Hey, Matt, how are you?
Not too bad.
You should be able to share your screen now.
All
Yes.
right.
Oh, okay. I see your chart now. So,
Perfect. Let me just get the chat back up. All right. There we go.
okay.
All
Are
right.
you ready to
Yeah,
start?
I'm ready whenever you are.
All right, great. I am just double checking everything. Okay, I am recording again now.
All right. Thank you, everyone. Happy to be back here. Please, please, please throw any tickers in that you're looking at. The market is kind of obviously, you know, going on a wall of worry run. I mean, I guess that's very cliche to say, but that's exactly kind of what this has been so far on, I don't know, some people might call it even a dead cat bounce, but we will see. I mean, we're already back to basically all-time highs here. We might have even broke over them as we were kind of, yep, well, we're right there. So, um, we'll see where this goes. I mean, so far momentum is on our side if you're bullish, but this is a big, big, big level here on the SPY. So, it's something we've been looking at for a while here. We were talking about, I think at the last AYT, the consolidation, if it broke down to, and again, if this wasn't at the other AYT, we were saying this other places where we saw there was a potential for this move lower. One of the levels was about 630. The next one was going to be about 600-ish. So somewhere between really 610 and 600. We saw a lot of SPY put levels in those areas. And then the 630 also coincided with the 2024 year-to-date anchored VWAP level. So that was kind of an interesting level there. And the 252-day moving average as well. I believe that was, or nope, that's another anchored. So it was anchored from an event. That's what it was. I believe it was post-Liberation Day, if I remember correctly now, or post-Election Day. One of them was. So um, it was kind of an interesting spot, and there was always that possibility to bounce there. If not, you're going to get a further sell-off, and then kind of hopefully get that bounce around that round 600. But we got kind of the taco trade here, and ever since you can see for me, I kind of coded this where my green candles are bullish momentum. It doesn't work as well on indexes, I'll say, but as it does on individual securities, and I've noticed that in the future. But it's a turning point, right? That we're seeing some bullish momentum kind of come in, so we're trying to capture it. So it's not a holy grail type of thing that I've coded, but it's something that says, hey, a little bit more bullish activity right now that's happening in the market. And it kind of just says, hey, this is where other people are seeing it as well now, finally. So if you can catch, some nice little turn areas, it works out really well. All right, VVX is the first ticker that we have here. And if not, I mean, I'll just go over some random tickers. I got screeners up. So, but seriously, put anything that you have in here and we will look at it. VVX, V2X. Let me pop this out just because I feel like I obviously have looked at this one before for someone. And this is an AYT profile, so we've done it here before. Commercial services, so I just gotta get familiar with it. It's not a name I particularly trade on a regular basis here, but that doesn't matter. We can take a look. Defense clients globally, all right. Integrated solutions, cross operations, logistics, aerospace. All right, so great sector to be in, longer term, right? Let's just take a look. I think whatever I did here, you can kind of see previously. So I'm gonna guess it was probably at a previous AYT, maybe in February. These were the levels that we're looking at. We're looking at that 64 level as kind of like a pivot to the downside, and then really for what we're looking for a breakout level was 71 and a half here. We really wanted to kind of take this high out, and it does look like, I'm not sure again if I did it in February or if it was in the March one, but either way we had this kind of fake out breakout, and then you're back below it, and now you can see year-to-date anchored VWAP right here, this little purple-ish line. I have two different purple ones. That's 2024, that's 2025, just so going forward, you can kind of see that's kind of held support, right? Even on this big whoosh lower, you got this move down to 64. You likely had a little bit of a buying opportunity there. It gets nice to find risk if you could have caught that the other day. But you got this other move up. You're still getting this rejection from this January high here earlier in the year. So you got the rejection again. So now we're just kind of stuck again in no man's land in the range. Not a bad spot if you're a long-term investor, say, hey, like we can take a shot. I have defined risk here against 64. And then if I get this break above 71 and a half, yes, now you are going to have to take out 74 to 75 kind of level. Really, you want to see it above 75. You know, some people are really steadfast on closing prices. Others like wicks. I kind of look at them as a zone. So that's how I usually would draw it. I usually would actually use more boxes. It's quicker to do it with just lines during AYT, but you know, you would basically make a box here, right? And this is your risk zone of failing, right? So once you clear that definitively, like if you get up to 75 and a half, this would be off to likely, I'm not sure if it's all-time highs. Yeah, all-time highs. There we go. So um, you'd be in the clear. You'd be in blue skies, sailing pretty. So right now, you're still kind of stuck in this range. You know, again, longer term, you have nice defined risk down here at 64. If it breaks below that level, you can just get out clearly. So if you're still in this, you know, you're not in trouble at all. You're just kind of, you know, losing opportunity costs, right? Like, but if it's a name you really like and you think you don't want to miss that opportunity, nothing wrong with hanging out in here. Otherwise, re-look for a break above 170, 150 again if you want to be more aggressive. Just remember that somewhere between 74 and 75 will be a potential resistance zone. All right, our cat. And I'm not sure if VX2 or whatever VX or VVX is a drone company. I did see that's aerospace, so I'm gonna guess that's where we're going with it. Very similar to our cat as well, right? Um, you know, our cat is if I remember correctly, it also does something in the drone industry. Yep, engages in provision of distributed data storage analytics services and for the drone industry. So, another good company to be in with the thematic theme that we've been seeing in the last, 6 months, especially, but over the last year even. I mean, it's been a good theme to be in. Right now, very similar, very similar here to the last one. You are stuck kind of in this range. It's a little bit wider of a range with RCAT here. And again, probably something I did at another AYT since it is on this chart. This is a name that I've traded and followed a little bit more though. Uh, so right down here, and again, kind of sloppy, but about $11, 11.20. Again, play it with zones a little bit. Don't just say it's $11 and that's it. I can't tell you how many times you people get faked out when you're just like, this is a hard line. You got to give it some leeway on your upper side and lower side. You can see it here too on the upper side as well, right? Like, during the day, if you would have said, hey, this is a breakout, obviously you rejected it all the way back down. Same here. Um, so you got to give it some time and a little bit of leeway. But still, nothing wrong right now with the pattern. Below 11 could get ugly in this name. This is the 252. It has held, it looks like, once before, maybe a couple times before here. Obviously, it's got a big move, so we'd have to scroll over here and kind of get it readjusted. But so 252 is like your final backstop if you're an investor, right? That's the 1 year moving average is how I would look at it, and that's about $10. Um, I probably, as a trader, would get out of it since we do dominantly trade options. So we would look here as this $11 as kind of the line in the sand with you got the 200-day, you got the 2024 year-to-date anchor VWAP level, you got support. Um, so not a bad buying opportunity down here if you're willing to take some shares. You're not at an optimal buy point. Not like, when you kind of came down and retested here on February 26th or February 11th here. Or again, even on February 27th, or even again on March 30th, so those are kind of like the areas you're kind of looking for. You're looking for these moves into it, see if you can buy up into it a little bit, and then, see if you can hold that level. Again, not bad. You just got to be willing to kind of add down to that level. So if that's what you're kind of looking for, the play back to the top of the range, nothing wrong with that type of play from here. It does look like it's a little bit of a double bottom. You can see here, we can put, if we want, we can put some little concaved curves here for you. But as of right now, I mean, you got the double bottom going for you, and I don't see a as a bad situation. Definitely possibility to play back to about $17, maybe even $18 depending on kind of the velocity here. So that's where I would look at say, hey, if I have some shares, take some off. If we can get that breakout, then you're kind of smooth sailing. All right, A Matt. Hey Matt, it's a name I've played long and short over the last year. I like the name. It's a little bit choppy, but it is volatile. So it's really actually good for options, especially in short-term trading. Um, as you can see, as soon as we kind of get like this positive momentum signal, I mean, other than like when we got this melt up, but when you get these pullbacks and you get these positive momentum signals, you get these big moves. So it's been a fun one to play with options, and even when you get the negative momentum, even though been in this trend, you can see here you've had a lot of opportunities to get nice short-term trades out, because it likes to move and it moves quick. Um, so I'll say this has actually been one of the better ones that I've traded this year. We haven't done it for AYT yet, so let's just kind of take a look at where we are now. So right now, you kind of got this round 400, right? Resistance kind of starts at 395. But, round 400 really big round number. That's something that I'm going to want to see clear if I'm long-term bullish, right? So if I'm going to be playing this for the trend move higher, that's where we're going to really want to be clear. But right now, you're kind of pulling back to this gap level. I don't mind those setups. You just got to be careful with them. If you moved into this gap here, it can quickly revert right back down to about 356. So um, look for it to kind of pivot, use this 10-day likely as kind of a entry guide here. So as long as you kind of hold that gap level, and then you can kind of drill down onto like an entry level chart. So like look at your 65, look at your 10 minute, or 15-minute, whatever you want to do, right? But you're going to want to see this kind of pull back into this previous high here. And then you want to see a little bit maybe of either a stalling or a rounding. And then try to take that entry. And then maybe you can get back up to that round 400, 395 area and say, okay, we're sitting in this good. We can raise some stops here. We can play for this breakout. Otherwise, if you get into this gap, another way to kind of trade it, depending on what traders you are out there, um, you will have a potential to be able to get off a short-term kind of trade here that you might be able to get a put down towards that 50-day, right? So that's not a bad way to play it either. Just use defined risk, and then if you're doing something extremely short-term, how I would probably do it in this market right now is a lot of the times we're known for, taking, losses at 30, 40, 50%. But one thing that you can do in this market is you can size down. So if you took four contracts to begin with, take two or take one just even, and then just size it for zero instead. Because we're getting these fast moves, but we're also getting big reversions. So it's really kind of hard to, sometimes control those losses, whether you're on the put or the call side. And you can see they can run a lot longer in this market than you can expect. And it goes both ways, right? So that's just what I've been doing to kind of help with position sizing. But yeah, that's kind of how I view this. Down here around that 50-day, anywhere between that 50-day and that three kind of 30, 320 level, right? 330 is another opportunity to kind of try to get long against this kind of pivot area that we're seeing. And then you can just use that as like a defined risk area to stop out against. But generally, I'm going to guess you're looking for something like a pullback here to this gap and then out and up. Or if you are looking for puts, you're probably looking for that gap kind of move that can move real fast, 1 day, 2 days tops, right? Fill that gap, pop and go. So take opportunities of that. AVGO. Looking good. This is the name that we were kind of talking about. I was talking about with some friends on a Stock Twits podcast as well. A lot of these semiconductors were looking really, really good. And longer term, I mean, this has a good look to it, right? Like, I mean, it was in a nice big weekly flag pattern. And I'm not even the biggest flag pattern type of person. I really try to look for pivots and I do a lot of short term and intermediate term trading. To even some long, I mean, obviously I have my long core holdings and stuff, but a lot of times I'm looking for swings anywhere like 90 days, all the way down to trading, 5 days or less. Sometimes intraday scalps. But so AVGO, you have this huge level here again up at 400. So very similar to AMAT with the 400, right? On the weekly scale. But so right now is not an optimal time to just say, I'm going to go long this right here. You're going to want to see kind of this either you can take a little bit on that 400 break, just know that you do have this previous high, right? So like there is risk that you're going to get stopped out at or at 412, it's going to get rejected 413. And that is the 2025 high. So I would expect that to be at least stalling action, if not like a reversion pullback. And we're super stretched from these moving averages. So my preference isn't even to take that. That would be like a very short-term trade. My preference is we get a little bit of a pullback here, and maybe we get into a level of like 370, even if it's deeper, say something kind of happens with, the situation in Iran and talks look like they're going to stall a little bit. If we can get a pullback down to the 350 region here, this gap doesn't necessarily need to fill right now. Um, obviously, if you get into it, you're probably going to fill it. Same with these. I mean, you have a lot of open gaps. That's the story with a lot of these stocks. But somewhere around 350, you could have these moving averages, kind of coming right up here with the 20 and the 50. Might be a real great buying opportunity here. It does kind of seem to act like as a pivot. Let's just pull it down to 65. And sometimes you can kind of just get a bigger picture of this, right? Yeah, so you can kind of see here 350 is kind of a pivot zone, right? You had multiple highs. Yeah, some moves above, but 350 is kind of it, 350, 352. So that would be the level I'd be looking at, 352 and a half. I'd start getting curious about this and say, hey, let's try it here. Um, so that would be my opinion on that. All right, 12 minutes left. Throw a few more tickers in. CIFR. This is a name, we might have discussed this last time too. I have been a big premium seller on. The reason why I pointed out last time, we're in a very, very choppy pattern. And that has somewhat changed now. We have broken out whether you drop from the high or whether you drop from, multiple 4 points of trend here. Um, we are now out and up. There is still zones. You can see that zone is where we rejected yesterday. So doesn't matter where you really lay it. But so around 19 is where we rejected. I would expect you're going to also have problems around 21. You have these previous highs here. Sorry, kind of anchored to that quickly with the magnet, but you're going to have that. So these are tough zones. It's not all clear. It's definitely worth a long opportunity on maybe a pullback. A lot of the times, what we see is we get these breakouts from trend lines, right? And people play them right away. They look for the swing, and then you kind of get this fake out move back down lower. So that's something you could be looking at here. So, kind of how I would do it is we look at the breakout point. So, yes, we have this wick up here, but we look at this kind of breakout point here. So, a pullback down into that level reasonably would be an opportunity. Or you can even look for the pullback to that previous trend line. It's weird, not everybody does that, but I've seen it so many times it comes back to this trend line, undercuts a little bit because obviously the trend line's going lower. And then we get that bounce higher. So we've talking about this. The market's really trying to fool most of the people most of the time, right? Like that's a famous quote from Livermore. There's David Einhorn's book that has a similar title to it. So that's kind of how I think about things when like, hey, yes, we want to follow momentum, we want to follow, price action and technicals, but they're a guide tool and you're, people know about these patterns. People know about using technical analysis. This is widely, easily done on a lot of platforms. It's how to trade those patterns. So that's kind of how I would look at this. Again, I still think probably a good premium seller just because you are in a lot of chop areas here. Yes, you can get some nice moves. I probably wouldn't play options if I'm going to go long premium. I would play stock on this instead. I think that would be the much easier way because you'll be able to, you know, add shares lower here, take some shares off if you get back up to 19, and then take some more shares off at 21, and still keep a rung, of shares to play up to those previous highs at 2025. Let's just pull back quickly on the weekly. Looks good. Momentum shifted. You definitely have a good chance, to get back to that 23, 24. You can see it doesn't always play out. We had it back here. There's other moments where we've had the momentum shift and it hasn't worked out. But, a lot of the times you get this momentum shift and it works out really well. So definitely a name I would look for an opportunity. If you get something around $16, I think it's worth taking a shot here to the long side and then just being able to layer out on some gains around 19 and 21 to try to play for that 25 or even that breakout. So I'd probably break it up into fourths. That way you at least have a fourth left if it breaks out. All right, anything else? Looks like we have about 8 minutes left. If not, I will throw something in. Let me just take a look quick. Here's an interesting one. It's acted horribly, but I did see that it popped up on the screener. DoorDash. Yeah, so you've retaken beautiful low and retook kind of this pivot, right, on the weekly. So you got that 2024 kind of early 2024 high. You got this pivot level that you retook out. Now you're through the 50-day. You are approaching a risk zone here, but any opportunities on pullbacks on Dash doesn't look so bad. It does look like you're also breaking out of a trend line here. This one's taken a big hit. And a lot of it I would say is probably due to the AI scare, that software like this is going to be able to be replaced, but there will be some kind of moat to some extent uh, around existing companies, right? So it's their job to innovate. So there's obviously that risk there, but this is something that could get interesting, right? On pullbacks or anything like that. So, or even if you see continued momentum above 180, could be an interesting kind of play here. So let's see. Any other tickers? Mm, all right, we'll go over one here. We just traded this in our in the money program this week. It's doing well, and I know it, right? Looks horrible. But the interesting thing here about Snowflake, again, another dead software name. What we did was we bought the 119 calls on Friday in this name here, and they expire this week. So we've already seen a 300% gain in this on those calls. We bought it into this downdraft, and then it retook this April 2025 low here, right? So that is the 2025 low, big level. What does that level also look like? Or what also is that level? Well, Snowflake IPO'd at 120. So not a lot of people knew about that. How many of you actually knew that Snow IPO'd at 120 just by quickly looking at the chart? These are things that you got to keep aware of, right? Like these are big levels. They're psychological levels, right? Really, right? Like, so somebody remembers that a little bit, it's in the back of people's heads, institutional level. So that just kind of adds to the drivers, right? So we also had a huge put strike down there. So we were able to kind of get this, and then we bought those 119 strike calls. We're up at 141 now. It's looking pretty good. The real target's kind of 146 and a half here. Hopefully we can get there in time. Doesn't always work out that way, but we got to get through this 10-day moving average right now. PLTR. This actually was on my list last week for this particular trading service as well that I just did snow in. So You can see here I have done it in AYT as well, but this is a name I'm very familiar with. So 2024 year to date, or the anchored VWAP level down there. We also had major kind of pivot areas here around 125 and then 133. You can see we got that wick. We got it off the prior low in February. I liked it a lot. You are starting to approach some resistance here now. You got the 20-day moving average. You got the 50-day moving average. Again, not a deal breaker or anything, but always a chance that those do kind of act as resistance. So a little bit harder to get in here if you're in it, like from this low. I know it looks scary a lot of the times if you buy there, but that's kind of how you want to look at these entries, right? When you're looking for pinpoint, especially options entries, you don't want to front run your drivers, and sometimes it looks scary buying. So if you're in it now, good. You can play back to this top of this range at 152. That was that previous low here. You can see we tried to break above it previously and we couldn't hold it, so we had a failed breakout. Again, I think this level will be tough once you get up in here into these 150s. But let's take a quick look on the weekly. Yeah, we haven't seen a momentum shift on the weekly yet. And the last time we did, it didn't actually work out. A lot of the times it does, a lot of times it doesn't. So, um, I think it's not bad, but you got to be willing, if you're trying to be in this longer term, to buy back down now to 125. Um, just my 2 cents if you're looking longer term, and if you're looking short term, you're kind of in no man's land here. Um, you can play it up to like 152, but your risks are much higher than if you would have taken the entry down around 125, 130 here. All right, 3 minutes left, and I don't have any promotions for you today. Just come check us out is all I ask. Again, my name is Matthew Tupane. I'm over at Schaefer's Investment Research. Feel free to come over to our website. We have all kinds of free news that is option analysis as well. So, broad macro. We take deep dives on options on stocks or seasonality, all kinds of different things. So we just actually had, 2 weeks ago, if you checked out our indicator of the week, we actually talked about how the call put skew was so extreme that we haven't seen it like this, and the dip was only 10%, or on kind of from the all-time or from the highs, right, or 7-8%. So we're talking about, we had the data that supported that, hey, shallow dips like this with such an extreme call put skew, you can see huge rallies out of it. So we try to give you information like that there, and everything that's in like the media commentary, all that is free. Let's just take a look, see if there's anything going on. I ran to decide whether to hold new rounds of talks. Let's see if that's hitting the market or anything. Doesn't look like it. Kind of holding up here. Um, yeah, I mean, we have 1 minute left. I guess I'll probably cede the rest of the time here. It does look like we are taking out the closing highs right now, all-time highs. But we still got this wick here from back in January. So we'll see how the day closes. Your website, yes, there it is. Perfect. Thank you, David, for putting that in there. Um, if you guys have any questions, feel free to reach out anytime. Had a good one. Take care, everyone.
All right. Thanks, Matt.
Thank you, David.
Thank you for being here. All right. Yeah. Check out Matt's site, TimingResearch.com. Also, if you didn't see this earlier, I posted it. There's a special presentation from our, oh, sorry, hold on just a second. Special presentation tomorrow from my friends at NetPicks. So if you haven't heard about that yet, check out that link in chat. And next up is Dave Landry. Dave, are you there? Looks like you're muted still.
Okay, I'm here now.
All right. Yeah, sounds good. So you should be able to share your screen now, get set up. And just a reminder for everyone too, I'm live streaming this to YouTube. So the archive is available instantly. And then the individual sessions will be available later today after the event as well. And okay, Dave, I see your chart now. So right, everyone start entering symbols for Dave, and just let me know when you're ready to start.
Yeah, I'm ready to go. I'm gonna
Okay.
I'll go over a couple things real quick while we're waiting for picks to come in, and I'll keep an eye on that chat too while I'm
Okay.
at it. One thing that was kind of interesting lately is obviously we had this big spill in the markets, and this is the TFM 10% system, and it's a really simple system. You're just looking to exit a market when it's 10% or more away from the 50-week closing high and below the 50-week simple moving average. And you can see we came fairly close to a trigger. Now it has to close below there for it to be an official trigger. But this was kind of interesting. And I don't follow this directly. Every now and then I'll take a signal, but I do use it to time my daughter's leftover college funds as opposed to me in and out and trading them like a madman. I prefer to just kind of be a little bit more hands off in that. But anyway, 3 weeks ago, I was thinking, why should I wait for a signal? Let me just bail them out, get them out of the market. And then, of course, we went straight back up. And so you can't, when you get caught up, you can't get too caught up in what's happening and just what is. And to my amazement, we've gone straight back up. Okay, DBD, we'll take a look at that real quick. And there's a few more things we'll flesh out too with the market. DVD looks pretty good. The only thing here is I would wait for, let's get a little bit longer chart in here. I would wait to see if they could continue to break out past these prior highs and then look to play pullbacks along the way. But that's looking pretty good as far as a potential setup. But it's got to clear this prior peak decisively for me to get excited about it. And then I'll look to play a pullback after that. The market has been doing really well. Let's just shift over to this screen real quick. And let's do a new share. So let me hop into this TC. And by the way, this is the list of stocks I call my Landry 100. And it's just 100 of the top stocks out there. And my only criteria is stock has to make a new closing high. So in this case, this IPO, I added it in yesterday at 14.85 on the close, and it did take off today. Obviously, they don't always do that, but it is a testament for following the trend and following momentum. And you can see that we've had some pretty good winners in here. We have some losers too, but when the losers, when stocks begin to lose, we take them out of the list as they begin to weaken. So some of these energy stocks will be coming out soon. Now, speaking of energies, and y'all let me know if you have anything you want me to look at. If not, I'll keep going. If you take a look at the oil service stocks right now, OIH, okay. So we made all-time highs here. Okay, and then we pulled back and took off. That's pretty nice. That was a nice little pullback to the 30 EMA. I'd call that Landry Light pullbacks. In fact, let me show you in a different chart what that means. Yeah, keep the picks coming. Okay, well, we'll get back to Landry Light in 1 second now that we have some picks. Anyway, the point I was making is it pulled back to the moving average, which is really nice. A really good setup. Keep an eye on that 30 EMA, and I'll explain that setup in a second. If we have time. But anyway, we pull back to the prior pullback, and it always concerns me when you break out past a prior high and then you pull back into it. And that's exactly what all stocks have done. Now, if you take a look at where they are now, these service stocks, that is, we're at around 402 or so. And you go all the way back to February. So that's March and April, coming up on 2 months of not a whole lot of forward progress. So here's a market that has lost some steam. And the aforementioned Landry 100, last night I took out quite a few of these oil service and energy related stocks there. Okay. CRDO. This is not something that I would get excited about just yet. First of all, it looks like an electrocardiogram for the most part. It's up, it's down, it's up, it's down, it's up, it's down. And then now it's straight up again. So there's no structure here for me to work around. Now, back here, you can see nice thrust higher, fairly persistent move. Look at this pullback to the 30 EMA, like I was just talking about. Nice run out of that. So that was pretty good setup back there. This stock seems familiar. I wonder if we traded this one. I'll have to look it up if we have time. So I would leave that one alone, CRWW, for now. Now, what you might do is you might put that into your watch list, okay, for it to improve. So here's another case where it's kind of all over the place and we're at multi-month highs, but this stock would actually have to get past this overhead supply and then pull back. And yes, the momentum's been there lately and it has bow tie to the upside side. A bow tie is just when the moving averages, the 10 simple, the 20 exponential and 30 exponential come together quickly and then spread out again, giving the appearance of a bow tie. And I'll show you a couple of those in just 1 second, but it has bottomed according to that, but I prefer these bottoms to be like at all-time lows or like 10-year lows in stocks and things like that. So it has turned the corner, but it does have some overhead supply to deal with. So I'm going to pass on that one. BE. Okay, now this is something that's interesting. Now this is, it's considered electronic components, but you can see the massive breakout yesterday, and then so far it's following through. So maybe on a pullback. The only case with this particular one, it's almost too much of a good thing. Sometimes you get these huge pops in the market. Let's see what that was. That's 24% in 1 day. That's kind of hard to sustain. So we'll see what happens when it pulls back. But out of all of your picks, I do like this one the best because it is obviously breaking out with some serious momentum. Now, let me show you real quick. We'll change screens here. And then I want to show you the Landry Light pullbacks, and I also want to show you bow ties too. So let's take a look at the bow ties first. So if we come back here, now bow ties are for trend transitions, okay? So when you have uptrend proper order, it's green, meaning that the 10 is greater than 20 and 20 is greater than 30. 10 is simple, 20 is exponential, 30 is exponential. And it can do a really good job of helping to keep you on the right side of the market. Now, I like to call my indicators illustrators because they don't indicate anything. They simply illustrate what's going on in the market. Now, if you take a look at the P's, for instance, with the bow ties, and if you look at what happened recently, we had this rollover, and you can see they were in downtrend proper order for quite some time, okay? So not that you want to trade that mechanically, but especially when you're coming off of all-time highs, like this, you want to pay attention when you have these bow ties flipping from uptrend proper order, the green, over to red, which we did a while back. Now we are right here at all-time high, so that's certainly a good thing. Believe in what you see and not in what you believe, and that's how technical analysis works. A client recently texted me because I've been, I wouldn't say bearish, but I've been very concerned about this market being overbought and due to correct, especially when you get into the VIX action, which if we have time, we'll take a look at that too. But anyway, so we are once again back close to uptrend proper order once again. So that's obviously a good thing for the markets, but we are very overbought. It could do to correct. So I'll get to that in just 1 second. So let me just show you Landry Light pullbacks real quick. I'll give you something to take home. And then keep the picks coming. Yeah, we should have plenty of time to get to all of those. Okay, Landry Light pullbacks. It's a little hard to see in the light here. Okay, so Landry Light is simply the number of bars. It's a count, okay, below the 30 EMA, and you could use whatever EMA you want. In that TFM 10% system that I just used, I used the 50-week simple. But one of my favorite moving averages is the 30 EMA, and the 30 EMA can really help keep you on the right side of the market. And you can see that we had lots of Landry Lights to the downside. And of course, you need to always look at the market. What did the market do? The market had a nice sell-off. And then now we're retracing, and we actually have Landry Light to the upside. Now, if it's flipping back and forth, green and red, or green and red, or green and red, I should say, or green and none, okay? So green would be lows above, none would be across of the moving average, but not below it. The highs are not below it, okay? So this is green, none, green, none, green. One bar of red right here. You can see it down there, okay? So when it's flipping back and forth, you know the market is likely going sideways, but always draw your lines on the chart and always look at the chart, okay? Today's move is very important, even though we're so overbought. It's kind of scary. I wouldn't want to rush out and buy it right now, but if you think about it, anybody who bought during this range or even held through this range was likely looking to get out at break even. But if we exceed the range, that selling pressure comes off of the market. So that's kind of an interesting juncture that we're in at the moment. So let me just show you real quick. So the idea with the Landry Light pullbacks is this is a stock we're currently long, but you look for the market to pull back to the moving average. Now, in a case like this, it didn't quite get there, but that's a pretty substantial, what I would call a knockout type of move, a trend knockout here. And we got long right around here. It bounced around a little bit, but finally took off and hit the initial profit target. So that's one. I'll show you another one that's actually not really working out until today, or recently, I should say. But you can see this one here pulls back to the 30 EMA. So all you're looking for is upside Landry Light, 10 to 20 bars of that, followed by a pullback to the moving average. And that's a really cool little pattern. And I'm always shocked when I go back in and look at all my trades historically, how many of them were just based on this really, really simple pattern. And we'll get back to bow ties in 1 second, but we have some stocks coming in. So let's go ahead and take a look at those real quick. IONQ for Barry. Okay, Barry, this stock is definitely in a downtrend, okay? And notice all the red down below. And now it's just beginning to wake up a little bit and push through this overhead supply. Let's take a look at the bow ties on that. By the way, 90% of my analysis, or 95% of my analysis is done without any moving averages or indicators whatsoever. But there are a few little things I like to look at once I like a blank chart, okay? Such as the Landry Light and the bow tie moving averages. But you can see we hadn't bow tied to the upside just yet, and it does have some overhead supply to deal with. Now, if this keeps on, if you can get through this overhead supply, then I might be inclined to take a position in something like this on a pullback, okay? Ben wants to take a look at MRVL. That's going to be a semi, which should be doing well. Yeah, look at that. Okay, there you go. So that's what you want your stocks to look at. Look at that. I feel like Tiny Elvis. Look at that stock. It's huge. But yeah, look at this trend here. That's just absolutely beautiful. Let's get back to the year to date. Now, a couple things are happening here. This stock has persistency. Persistency is a stock's ability to go up day after day after day after day. You could mathematically, it's equivalent to linear regression, but I just like to draw a line through the chart and intersect as many bars as possible. So on a pullback, Dan, this stock looks fantastic. So on a pullback, I would be looking to get long this particular stock. So I like that. NBIS, that's going to be a biotechnology, I think. NBIS. Communications. Okay. Yeah, this is another good looking stock. So on your momentum lists, you want to have these type of stocks in there. Okay. So that's looking pretty good. Let me change gears. Let me go to a different chart. And we'll take a look at that too. Okay, so IONQ. Okay, that's IONQ, MRVL. Okay, so that's looking pretty good. So far, so good. Again, on a pullback, take a look at the semiconductors overall. That's SMH. So that's the persistency I was talking about. This is going straight up as of late. So on a pullback, I think that might be worth a shot. Okay, the NBIS looks pretty good too. You can see it's taken off, but it's going to need a little bit of a pullback or a trend knockout type of move, a big wide range bar like bam to the downside. I think CLMT was the pattern. Yeah, you can see back here it had this knockout move. It made a gap lower and then it continued lower, selling off fairly hard. So that helps knock out some of the nervous Nellies. It helps to attract some eager shorts in. And when the market goes on, or if the market goes on to make new highs, then what's going to happen is those shorts will get squeezed out, and the people who got knocked out will have to put up or shut up. FCX, that's going to be, what's that, copper? FCX. Report back moron. This was one we were actually looking to short not that long ago, but it didn't trigger. And that's a testament, of course, of waiting for triggers. For me to get excited about this stock, it would have to actually take out these prior highs and keep on keeping on. So at the moment, even though it's super strong, it does have a little bit of a triple top look to it. So it would have to break out past these peaks, these two peaks here specifically, and then maybe on pullbacks, it might be worth a shot. Let's take a look at the VIX real quick, and there's something I want to flesh out here. Years ago, I worked with Larry Connors, and I did programming and research for him. And Larry and I hit it off because not only did I know how to program, I wasn't the best programmer in the world, but I could figure things out eventually. But the reason he liked me and the reason we hit it off is he would give me an idea to program, and a lot of the programmers would just give him exactly what he wanted. And I would take it and noodle with it a little bit, flesh it out a little bit, and throw in some new ideas. And one thing that Larry taught me was that the VIX tends to revert back to its mean. It also tends to overshoot a little bit, as volatility will. And I took that literally, reversion to the mean, and created some VIX systems based on that. Now, I don't trade these directly, but I do use them. And the reason I don't trade them directly is since that was way back in the 1900s. I'm from the 1900s. The VIX type of systems could print money, but the problem is occasionally you get whacked, and that's just with any short-term system. If you're only in the market for a short period of time, we're talking like days, or like some sort of fixed amount of time within so many days or whatever, then you only have that much time for something great to happen. My daughter just texted me. He's like, she was telling me that she wanted to know if I followed her advice to buy gold. I was like, well, we've been in these stocks, gold stocks, we recently just got out of for over a year because they've been going up. Okay, so I'm a trend follower at heart, but with this VIX type of stuff, when the market gets stretched away from the moving average, the VIX, it tends to pop back, and then the market tends to correct from there. Now, it's a little bit more extreme when you're dealing with market peaks, and this is the S&P 500 in the background, okay? And you can see this, the VIX just shot higher, pulled way far away from its moving average, and then what happens is the market begins to rally because that's a bit of a panic, okay? So I wouldn't trade these systems on an intraday basis, like over short-term basis, because something bad could always happen. And getting back to the gold stocks, I would say it's like we were in gold stocks for about a year or so, so we're willing to stick with trends as long as they move in our favor, and that's where the real money is in the longer-term trends. Yes, something bad could happen over the long term, but if you're up 100% or 150% or whatever the case may be, and you give up 30-40% in the end, that's okay. At least you made a lot of money. But if you give up that much money over the short period of time, it's going to take you a long time to kind of chip away at it and make it back. So with all that said, one thing I would watch for is an intraday reversal in the S&P 500, because we're still stretched quite a ways, 19% away from that 10-day simple moving average. So this is the VIX, this is the S&P 500, and this is the 10 simple of the VIX. Okay, CRVW, I think we looked at that one. What about GOOG, G-O-O-G? So let's shift gears over to that. Google is certainly improving. You can see back here, we had a bow tie to the downside after all-time highs. So this was a short right here, and we had a pretty good sell-off from that. And now it's trying to go straight back up. For me to get excited, it would have to make brand new highs, and then I would look to play pullbacks along the way. Microsoft, MSFT. Okay, so there's nothing here for me with Microsoft, okay? It's been in a long-term downtrend, and now it's just kind of bouncing off its lows. And yes, it could form some sort of transitional pattern, but if I was, for me to get interested in it, it would have to make like 10-year lows and then make some sort of, or even 5-year lows and make some sort of transitional pattern. And the other thing too to think about, Stuart, is notice this overhead supply up here. Now that might be a good problem to have, but if you were to buy it, let's just say today, your gains will likely be capped by this overhead supply. Now, I like to have unlimited possible, let's just call it headspace when I get into a trade, or if the overhead supply is let's say it's 100% away, I'm not too worried about it, because if I make 100% on a trade, I'm happy enough with that. That'd be great. But in general, you don't want to handicap yourself by having overhead supply. And granted, it is a ways away. It's another, 50, 60 points away or more. But that's close enough for me not to take the trade. And the one thing I like to do, and I think MU is going to illustrate the point here. Ben's asking about MU, is match the pattern to the market. Okay. So you take a look at like the semiconductors, they're going straight up. They busted out to all-time highs. They're looking good, right? Take a look at the market. What's the market doing? Well, the market's trying to break out. In fact, technically, I guess it's broken out as of this webinar, right? So I want to look at stocks like, let's take a look at MU, okay? Well, MU is not quite to all-time highs, but what was one of those other ones earlier, semis? Was it Marvel? See, I'm more interested in a stock that looks like this on a pullback than I am at something like Microsoft bottoming out. So getting back to MU, you can see that you have a bit of a triple top in the works here. Okay. So in the semiconductors, let's see what TSIM's doing. Yeah, you want something. You see, notice this breakout here, followed by this pullback / trend knockout type of move. That's what you want your stocks looking like right now, since the market is sort of breaking out. Now, when the market was rolling over, we went short VSCO, and I still have a position there, full disclosure. It just kind of barely nicked a stop here by a few cents and then rolled right back over, so I stuck with it. This was a bow tie, and this was a setup back here, and this was a trigger, and you can see so far I'm underwater on that one. But if you go back to, let's just throw in the S&P real quick. What was the S&P doing? Well, the S&P had bow tied to the downside. It was rolling over. So I would encourage you, now's not the time to be bottom fishing. I would encourage you to match the pattern to the market. Now, if we get into, God forbid, a long-term bear market or longer-term bear market, then by all means, start keeping an eye out for those transitional patterns, such as the bow ties and things like that. Also, the first thrust type of patterns. Did we take a look at CRWV? Yeah, I think we looked at that. Core weave. Yeah. Let's take a look at that Landry 100 real quick while we're waiting for the next. Keep the picks coming. Be happy to. I'll take a look at anything you want me to. So if you take a look at moves, take time. Okay, so like this AXTI was put on 10/27/25. By the way, I don't trade this list directly. This is hypothetical, okay, for all intents and purposes. But I do occasionally own stocks that are in this list. For instance, I took a trade on what was that, XNDU or whatever one that was earlier this morning that was taken off. That one, okay. So I will kind of use this as fodder for research, okay. And it does help me to see where the money's flowing, even though it's a lot of work to keep up with this list. It's a really good exercise because stocks are going in at all-time highs, or 50-week highs, I should say. 52 is where the parameter or the scans are set now. So stock has to have ample volume and be at 52-week highs for me to put it in this list. Now, if we get into a bear market or something, then maybe I'll just look at 90-day highs or something like that. But this is a testament for trend following and sticking with the trend. So notice 10/25/25, okay? Now, if we take a look at the losers, okay, look at the losers. These losers will put on when? In March and April, okay? Notice that the winners will put on way back in October and even before that. Going on, look at this one right here, all the way back to March. Okay, we're getting some setups coming in. Okay, DFTX. This looks pretty good. Let's see. It needs a little bit more pullback. It does have some issues way back here, but that's so long ago. I'm not going to get too worried about that. Hopefully, a lot of these people have gotten washed out. I mean, this thing went down to a couple of bucks a share. Maybe on a little bit pullback, I might be interested in that, but that's kind of interesting. I'm Dave Landry, and my website is DaveLandry.com. The newsletter is DaveLandry.com/newsletter, and that's free. You can get to know me first. VIX looks pretty good, okay? On a pullback, again, you've got a base here. It broke out from the base. So if this pulls back a little bit, but not all the way back to the base, that might be worth a shot. I appreciate thank you for that link, Dave. And thanks for asking about the website. Okay, SS wants to know about FIX and GEV, FIX. Yeah, that looks good. We just talked about this one. You can see it's broken out on a pullback. GEV. Yeah, GEV, another one that's broken out, and it might be worth a shot again on a pullback. Okay, we got a few minutes left. If there's anything else you guys want me to take a look at. Now, just an FYI, you don't want to rush out and buy stocks, only buy stocks that are making new highs, although you'd probably do a lot better than bottom fishing doing that. But in a case like this, where I have 100 stocks, it's broad enough to where it can work. So if you are going to do something like this momentum type of thing with buying new highs as opposed to buying setups, make sure you're buying enough of them to get paid. Otherwise, it might not be worth your while. But yeah, there's that XNDU. And you can see a lot of these stocks have pulled back recently and could be setting up soon. I think I just saw a trend knockout. You can see right here, I don't know if this is the best setup in the world, but technically it is a trend knockout. You can see this bar here. We got a couple of minutes left. Yeah, I probably wouldn't take that setup for some reasons. It had lost some momentum, but that's the TKO type of move I talked about a second ago. Anything else? We could squeeze a couple more in. There you go. There's a pullback. Okay. Let's see. Any more? Well, while we're in impasse, obviously I want to thank all you guys and girls for attending. Just punch them in if you have anything else. I'll be happy to take a look at it real quick. You can find me at davelandry.com. I'm also on YouTube/Dave Landry. Twitter is T, or X now, is T following moron. ATI, let's squeeze that one in real quick. That funny little thing on the bottom. Okay, problem with ATI is that it's just bumping up against these, it's bumping up against old highs. So for me to get excited about it, it would have to take out these new highs with a little bit of vigor. That is that's metal fab. I don't know if that'd be considered metal, but in the metals, take a look at like lithium. You can see just made all-time highs and now pulling back. So that might be worth a shot. QBTS, if that's quantum, that's probably gonna be a good thing. No, it's not doing so well. Yeah, this is just kind of bouncing off its lows. I wouldn't get too excited about that one just yet, but QNTM, is that, what's the quantum computing? Quantum computing has been doing really well lately, so I think we're getting ready to run up against a hard break here, but I can't find it on the fly. But QUTM, nope. Okay, well, it looks like we're out of time, but just take my word on it. Quantum computing has woken up again. Lithium's woken up, so a lot of areas are waking up, especially semiconductors. So keep an eye on those areas. I do a webinar every week. I'm doing one again tomorrow, every Thursday at 11. So if you want to join me there, you can come and ask questions, and please bring your favorite stock picks. And you can find that at davelandry.com/webinar. If you have any issues, Dave at davelandry.com. Dave, I'm going to turn it back to you. Dave Cosmin, I appreciate you inviting me back once again. Thank all you guys and girls for attending today. And hopefully you'll have me back in the future because I really love doing these shows. Thank you, Dave.
Yeah, definitely. Thank you for being here. All right. Thank you to Dave Landry. And then next up is Wally Alapade. Wally, are you there?
Yes, I am. Can you hear me?
Yeah, sounds good. You should be able to share your screen now.
Okay.
And hold on.
You should be able to see my screen now.
Yes, looks
Okay.
good. And I'm just double checking. Are you ready to start?
Yes. Yeah, absolutely.
All right. All right, I'm going to start my recording, and then you can start your analysis. So I'm recording again now.
All right. Well, good afternoon, everybody, and welcome to another episode. Thanks you so much, David, and thank you, Anka, for putting this together. Let's start off by asking any questions as far as stocks that you guys want to analyze. I don't mind taking a look at that. See, Stuart had IONQ from the previous one. So IONQ, let's take a look at this. For those of you guys who might not know, I created this software, very, very awesome software, institutional grade at a fraction of a cost, quite frankly. But what it does is like it allows you to just use quantitative and technical data to kind of see what's going on with the stock. So when I look at this stock, I know some people might not be eager to jump into a stock at the bottom, but I love finding stocks at the bottom. And one of the ways that I can do this is by, typing in a stock and then kind of see what happens. So the way this works is this sentiment that you see on the right-hand side over here, where it says sentiment is bearish on the daily time frame. So I know that it's bearish, right? The cool thing is based on yesterday's data, because this is end of day data information, by the way. Based on yesterday's data, it's telling us to exit longs, meaning that we should not jump in just yet. But what I do like is this gauge right here. You see this gauge right here at the top? It's telling us it's getting time to buy. So what I typically like to see is I like to see a green gauge, okay? And then either today's directive being green, which would tell us either buy, it will tell us to start buying, or it would say something different. So kind of like if you go back over here, before this move happened, so we were over here in the red, and then as soon as it was ready to buy, notice how today's directive changed it to a buy cover, meaning that you should cover all your shorts and it's time to start buying. And then what you'll do is like you'll see it kind of keep on going up. So for 3 days, August 25th, September 1st, I'm sorry, this is a weekly time frame, by the way, so I need to go back to the daily. But that week of August 25th, it was telling us to buy. The week of September 1st, it's telling us to buy. The week of September 8th, it was telling us to buy. And then after that, you just wait and kind of watch what happens after that. Now, notice that on this week right here, on October 13th, the directive changed to long stop, exit short, meaning that you should have stops in your long positions. And then what ended up happening was the stock went down. So if you were able to catch it as soon as it started changing higher, that would have been one of the best times to get it. So I'm definitely into buying stocks right when they go from a bearish sentiment to a bullish sentiment. And this helps us with that. First by identifying that the background is red, and then you'll see the sentiment here. Then once it's saying into a bullish sentiment, it will turn green. So when this box turns green, then I know this is a stock that I want to jump into. So right now, considering the fact that last week, this stock was sitting over here, I see that the gauge is turning green. So it's telling me there's momentum behind this is beginning to come off the bottom. And notice what I said, it's actually here at the bottom. So that means it's coming off the bottom. So chances are this is a stock that perhaps by the end of this week, maybe next week, we'll probably start seeing it turn green like we saw over here. And then that would be a stock to jump into. So I like that. Now we can go to the daily time frame to kind of see what's happening here. And you can see right here, yesterday, it told us, hey, it's time to buy. And again, once the sentiment went from red to green, this says get in short or get out. So it's either you stay out of it until you see something, or if you do buy it, just make sure that you protect yourself, like either have a stop in place or get some insurance to protect this downside. But it's super, super early is what this is telling us. So you would have got this, place your stop at the low of that. And what would have happened is like yesterday, it would have told you to buy. I'm not sure what the stock is doing today. I don't really worry about it because I know every single day it will tell me what to do. Okay. And so that's a cool thing about what this is. So if you were to ask me, is this a stock to buy? I think the previous speaker was talking about how quantum stocks are beginning to take off. Yeah, I totally agree with that. I can see it right here. Notice how we have a green gauge, we have a green sentiment, and the directive is also green. This just lets me know, yeah, it's time to buy, and we need to go forward from there. All right. Steve said ENVA. Let's take a look at ENVA. Did somebody say something? Okay. ENVA. Let's go here. Okay, so if I look at this on the daily time frame, Steve, I can see that we've already ran out of steam in a sense, like now we're at a stage where it is risky to jump in on that daily time frame. So you have to be careful, right? Also, notice what the director says today. Directive is saying that we should wait or hold. So not necessarily want to chase this as of right now. You know, we had our opportunity to get in on April 6th, April 7th. Those are times to get in. That's when you had the buy signal, and then now it's doing this. Okay, so now the only other thing I can do is whenever we're at the risky, this just lets us know, hey, go ahead and start taking some profits just to be on the safe side. I could switch to the weekly to see if there's any opportunity for this to continue going further on the weekly. So now take a look at this now. So if I go here to the weekly, look at this. Lo and behold, we are just in the beginning phase of this. So what this tells me is that this stock definitely has room to go higher. So although on the daily time frame, so this is where your objective is going to have to matter. If you're the type of person that can't stay in a stock for weeks on end, then this won't necessarily help you. But if you're the type of person like, hey, I don't mind holding this for the next 2-3 weeks, then you are not too late to the party. Does that make sense? The reason why you don't want to do the daily when it's risky is because, you know, you might have a pullback and then it'll go back up again. Does that make sense? So we could potentially get a pullback. But this weekly right here, we are just beginning the move. I mean, look at this. The directive is telling us it's a buy. The gauge is just coming off the bottom of the weekly. What does that tell me? This tells me that, man, we got a long way for this to go higher. And then if I zoom all the way down here, we have what is called a harp line, which gives us our target. The upper band here on that target is saying that this stock can go all the way up to $183 with a potential 19.3% return on your money. What is the harp line? Visually, it looks like this. So what this is showing us is that if anybody gets in this now, and over the next few weeks, and that's the only problem, we don't know how many weeks. It could be 2 weeks, it could be 6 weeks, it could be 10 weeks, I don't know. But over the next few weeks, this could go all the way up to about 19% profit easily, or that's the expectation. If anything should go wrong along the way, right? Anything go wrong. So one of the things you want to pay attention to is, okay, if there's earnings coming up or something like that. But if anything goes wrong along the way, today's directive will tell us what to pay attention to. It'll tell us, hey, place some stops. It would say get insurance. It would tell us get out, or it'll just tell you wait and hold. Don't do anything to it. Just let the stock keep on growing. All right. So this is a really cool tool to use to kind of help us see. So from the gauge telling us that it's ready to go higher, from the sentiment telling us that we just turned bullish, from the directive telling us that it is time to buy, from the harp line, which is it lets us know if it's healthy, if we're buying a stock at an attractive price, if we have minimal risk and giving us a profit potential. That's what HARP stands for: healthy, attractive price, minimum risk, and profit potential. So it combines all that together, lets us know it's healthy. If it's trending up, we know it's a healthy stock, and it's telling us, hey, profit potential 19.3% as of yesterday. And so the expectation is, as long as there's no earnings in place, which we can go over here, go back to our daily time frame, and then just click on this earnings tab right here to see if there's earnings coming up. And if there's no earnings coming up, which we don't see right now, we just have to like see if there's any coming up in the future. So it's probably towards the end of April, beginning of May is when we can probably get that. Then chances are this would be a stock that I would definitely be interested in. So thank you for this one, Steve, because this didn't even come on my radar, but definitely a stock. Oh, I can see why it doesn't come on my radar. We're doing this challenge in our community where we have this grow your $500 account. And so right now we're only sticking with stocks between $10 and $50. So that's probably why this does not show up on our scans when we ran our scans. Okay. So I hope that helps. Let's see. Okay, so I'm gonna take ones, Stuart, and because I see some other people too, and I know I've already answered. Well, actually, I'm gonna go with the Okolo, or if there's anyone out of these four that is more pressing that you would like to know, Stuart, let me know, and I'll go with that one first, and then I'll come back to the others. So give me the one that you feel like is like, okay, I really, really want to know this one over the others. Okay, Eli Lilly. Okay, very good. So let's go with Eli Lilly. All right. Okay, so we're going to start off with a daily time frame. Notice what we have here. Eli Lilly is not necessarily, as of yesterday, not telling us it's time to buy just yet. Okay. Again, if anything happens, I'm not sure how it behaved today, but if it goes up today, then we'll find out by the end of today, and then we can make adjustments at that point. But right now, Eli Lilly is telling us that, nope, it's not ready to be bought. The sentiment is bearish. It's telling us to sell short. We go over here to the weekly time frame. Again, sentiment is still bearish. it might start heading higher, but sentiment is still bearish, and it's telling us to not jump in just yet. So I would hold off just a little bit. Now, I don't know, how did it do today? Again, we can wait till the end of the day and find out what it's doing by the end of the day. But let's just see. Yeah, it's not doing well. Okay, so again, before I even knew what was happening, as of yesterday, it was telling you to short this. So if you had seen this yesterday, you would have known, hey, let's go ahead and short this, and you'll be on the right side of that stock right now, which is to short. So hopefully, at least you have an idea. And the description tells you, again, it's time to short. And then if you, in this case, you look at the lower band on this because it's a shorted stock, so it can drop as much as 8.5% is what this is showing me here. So I can put on my harp line again. And so the expectation is it could go all the way down to this level here, which would be about a negative 8.5%. So if you were in this stock, I probably would not want to hold on to it just yet. If you have reasons to believe that it's going to go higher, give it some time. Come back and check this on our platform, and you'll see when it's ready to go. Okay, so there's no need to guess. This is the coolest thing about this. No need to guess. It'll show you what you need to see. Let me go to Ben. Ben had CRWV. Let's go to CRWV, and then Stuart. If I don't see any other stocks, I'll come back. Like, maybe what you can do is give me your next best one on that list. So let me go to CRWV. Okay, so here's CRWV. Let's analyze this one. All right, so again, you had a chance. If you had seen this, who asked this question, by the way? Who's asking CRWV? Ben. Okay, so Ben, sorry about that, Ben. So Ben, if you had this software, you would have been able to get in as early as April 2nd when it first told you to start buying, and it gave you another chance to buy on April 7th, and then again on April 8th. And then after that, it's just a wait and hold while you let the stock just grow and do what it needs to do, right? And so you would have been able to definitely partake in that. Now, where are we today on this daily time frame? Now that it is risky, again, every time we see the gauge turn risky, it just, and I probably need to change that from saying risky to just saying take profits, right? It's letting you know, take profit. But the reason why I put risky is so that nobody tries to jump in just yet, all right? So I don't want you to see this, because this is what typically happens, especially people who follow breakout stocks. And there's a strategy behind breakout stock, but just rather than just trading breakouts blindly, one of the things I want to make sure is, like, we're not just chasing anything. So the first thing is always, like, protect your profits. Yesterday, I learned this thing called JOMO. I don't know if you guys heard about it. JOMO, instead of FOMO, FOMO is fear of missing out. JOMO is the joy of missing out. So I would rather you have that peace of mind knowing that, you know what, this has gone too far. I'm okay not taking that risk. Let me go find something else. And so how do we find something else with this software? What we do is either we go find a completely different stock, or we switch to a higher time frame if you're okay trading on a higher time frame. And right now we only have daily, weekly, monthly. So this is starting off on the daily. It is already too risky on the daily time frame. So now we're going to switch over to the weekly time frame and see if there's an opportunity there. And lo and behold, look at what we have. It is time to buy. So now all this does now, Ben, is it just makes you have a different, you have to adjust your duration in the trade. Does that make sense? Now, you could still kind of like just, oh, I'm just buying it for the day down tomorrow. But understand that now that we see this on the weekly, what this now tells me is that, hey, this is a stock that can go for a next few weeks so to come. Does that make sense? And so if that's the case, how do we want to play that? Okay. Now, if you go here to our upper band, it doesn't give us a number on the upper band, and that's because right now the harp line is still bearish, right? So in a way, it's like, okay, yes, it might be turning around, but you're still dealing with a stock that is not super healthy yet. So, and that's fine, because again, we can see since June it's been struggling. So now it's like somebody falling ill, and now they're just beginning to get better, right? That's fine. And we know that hopefully the more they get better, the better it's going to be going forward. But, why not go find the ones that are healthy right now, that are strong, with a lot of vigor and energy and power, that are just ready to take off? We can do that too as well. So for that reason, we don't have a necessarily target, because you can see we're already at the top of the harp line. And but nevertheless, what this is telling us is, okay, we're in the beginning phases. We are just literally 2 weeks into the bullish sentiment of this stock from a weekly time frame point of view. And so You just have to manage this on a daily basis, on a weekly basis, daily basis. Come back, check it, make sure that it's still telling you. Now, every day is going to tell you what to do, whether you should buy more, whether you should hold on to it, whether you should sell, whether you should place your stops, whether you should get insurance, all kinds of stuff that it will tell you to do. All right. So this is a good one. The other thing we could do is also look at the seasonality just to see if there's anything based on seasonality. And what I like here is if I put on this full trend right here, notice what we have here. This is showing us that historically, this stock tends to do well from now all the way up until May. So you might have something on your hands over here, Ben. And this could be something to definitely pay attention to, because now that I have the seasonality that's telling me this, might want to definitely look into that. Okay, so but the biggest thing I would say is you don't want to like sell too quickly. If you buy this, give it a chance to really grow. Does that make sense? All right. What's the website? It's called rightside.trading.io. Rightside.trading.io. That's the website. It is a subscription-based site, so please be aware of that. I'm going to give you an offer at the end if you want to take advantage of the subscription-based offer. Okay. All right. So let's see. Elizabeth said PSLV. That almost sounds like a silver stock. Let's go take a look at that. PSLV. I'm going to try to zoom faster now rather than explain too much more. And let's go back here to the price chart. Let's go here to the daily time frame. All right. So yeah, like a silver stock. So again, where are we today? It's telling us to wait and hold. All right. So all this is kind of like, right now, wait and hold. It's risky on the daily time frame. So when it's risky, it's like, look, take your profits or find another opportunity. How do we find another opportunity? We switch to a bigger time frame, or we go find a similar stock like this. So if I go here to the bigger time frame, I want you guys to see something here. What this is now showing us is we have 2 greens out of 3. We have the gauge is green. We have the directive is green. So you can see this. This is green right here. The gauge is green. 2 out of 3. Whenever that happens, and notice what it says, place a stop on any existing long positions. Okay. If you are buying, make sure to place a stop right after you buy. So usually when we have the buy cover, we don't even worry about placing stops. But in this case, it's just saying, look, you can still buy, but make sure that you have a stop in place. Because what this is now showing us is like 2 out of the 3 is happening. This is a stock that is very, very soon going to go from a bearish sentiment, which is what it is right now, into a bullish sentiment. And so, again, I know some people don't like buying at the bottom, but it's like, I like buying at the beginning of a new trend. There's nothing that makes me feel better than buying at the beginning of a new trend. And what this is telling me is like, this is about to turn into a new trend, a new bullish trend. So, again, there's strategies around breakouts. I created my whole software around strategies of trying to catch the very beginning of a new trend. And so if you're the type of person that loves jumping in early on a new trend after the stock has been beaten up, you know what I'm saying? Regardless of the news, we don't even pay attention to news or anything. We just try to make sure that we can see that the trend is about to turn. What this is telling me, 2 out of 3 right now, is telling me that it's getting ready to turn. So do not be surprised that silver or this stock itself turns into a bullish sentiment. And then what ends up happening is you'll see moves like this that took place like this. Oh my goodness, why didn't I catch it at the beginning? This is how it looks like when it's getting ready to turn. So I got 2, the gauge and this, the directive. Sometime this week, maybe next week, we'll probably see it give us a buy signal. Sentiment would turn bullish. You have this ready to go. Okay. PWR. Let's go with PWR. All right, PWR. You see this. And by the way, we can scan for these things, right? So if you are ever the type of person that's like, hey, is there a way to scan for this? We can scan for a lot of these. All right. So here's a stock that, again, too risky for the daily time frame. The directive is like you should have already got in. See, you should have already got in on April 8th. You had April 9th. You had those 2 days to get in. And now it's telling you, look, just sit back and let it just grow, or you know what, take some profit because it's now getting risky. Again, we can switch to that weekly time frame and say, hey, where is it going? Notice what it says here. It's also risky on the weekly time frame. All right. So we can try one more, go to the monthly and see if there's anything there. It's also risky on the monthly time frame. Look, in a situation like this, I don't want to know what's going on. All I know is like, look, this stock is too overextended on all time frames. It's too risky. Does that make sense? So in this case, because I couldn't find an opportunity on a different time frame, I would try to find stocks that are similar. to this and see if they have a better setup than the stock does. Because now I would be, if I try to jump into the stock, I will be taking a big risk. Does that make sense? Could it work? Yes, but I'm not in the business of taking those type of risk. I want to see things that I know for sure already do what it needs to do. Okay, so I would skip this one personally if this was me, because no time frame, not a single time frame. Monthly is not telling me to buy. Weekly is telling me to hold off, and the daily. Now, if I own the stock, I don't mind owning it. But again, the idea is once you see risky, it's time to take profits. Because have you ever owned a stock where it was doing really good, you didn't take profit, and the next thing you know, you lost it all? Well, that's what this is letting us know. It's like once it gets past the top, because the cool thing is we created this to kind of let us know when we're at the bottom and when we get to the top. Most people don't know when stock gets to the top, but once we get to the top, okay, should we sell right then or not? But once it gets that risky, take some profits. Take some profit. We literally just did that with Netflix. Let me show you this on Netflix. We literally just did that. If I can spell Netflix correctly. All right. We literally just did that on Netflix, right? Took our profit on Netflix yesterday. Not sure what Netflix is doing today. Let me see what Netflix is doing today. All right. So only marginally up, marginally. Okay. Is what it is. And then it has earnings coming up. So I'm like, look, why take the risk? Take our money, walk away. We can always jump back in when earnings comes up, which, by the way, we have a whole strategy on trying to identify when a stock's earnings, what it's going to do on earnings. Let me just show you guys this very, very quickly and I'll move on. So this is Netflix coming up on earnings, and I can go over here and I can say, show me what Netflix is going to do. And what this is showing me now is that Netflix is likely going to gap down on earnings. That's what this is showing me right here. It's slightly going to gap down on earnings. And I don't want to go into the other stuff right here because that's not what today is for, but definitely something to look into. So don't be surprised if Netflix does not do so well. All right, on earnings. All right, let me see. What else do we have here? Okay, I like this. Show the scanner for uptrends. Let me show you this very quickly. Go over here to my strategies. I'm going to go with buy cover. All right, and then we'll do daily or weekly. Let me go with weekly time frame because I really like what I'm seeing on the weekly. And by the way, the reason why I'm picking weekly, so the way we always do this, we follow the S&P 500 is what we do. So right now you can see the S&P 500. This is the weekly time frame. Just give us a buy signal. So that's what we follow. So we look to see where the buy signal is coming from on the SPY, whether it's on the daily, weekly, monthly, wherever that shows up. Then we start running scans on that. Does that make sense? If I go here to the daily, we're already at risky levels, meaning take profits. We switch to the weekly. That's why you're seeing some of these stocks that you guys were talking about, where on the daily it seems already too far gone, but on the weekly they're showing a great opportunity. That's because the SPY is showing that too as well. All right, so I run this scan. I'm going to run it on the weekly. All right, and I'm just going to pick the major index right now, but we can pick from these right here. Let me just pick S&P 500. That's what I'll do, S&P 500, but we can select based on sectors and all that stuff. We can select based on exchanges and everything. But anyways, I'm gonna just pick that one right now, and we're gonna run this scan on the weekly time frame, just kind of see what shows up, and then this would give us, it takes about a couple of minutes, a couple of seconds, 18 seconds left, 5 seconds left, and then voila. And now we have all these stocks that are now giving us buy covers. Now, you see that HARP? I want the ones that are heading up, so I'm going to click on this twice. And so now I know that these are all healthy stocks that are ready to go higher. Does that make sense? And then it kind of even gives me an idea of what the target could be. So now I can choose whichever one I want and put that in there. So it's like now I have ALB is ready to go up. Ball Corp is ready to go up 9%. Allstate is only about 2%. Okay. So I can, and then what I can do is I can also sort this and see if I do something like this. So now Google, oh my goodness, we've been in Google. AMD, who asked for AMD? Somebody asked for AMD. Let's click on AMD right here. Now, weekly time frame, AMD, what is this showing us? Yep, AMD still has room to go. We haven't hit the top yet. Is it by cover, right? Another 14.8%, almost 15% move that we can get on AMD, right? Here's our HARP line. Oh yeah, healthy. This is a healthy stock on its way to make another 14% more on this. Why would you not want to be in AMD, right? Google is the same way too. We've been talking about Google for almost 2 weeks now, and you can see why. Google was a bearish sentiment, now turned bullish. Oh my goodness, what is the profit potential? 19%. These are things that a lot of people are oblivious to, and they have no idea what's going to happen. And then I put on my Heartline, it's like, hey, we are just in the beginning phase. We are nowhere close to the top. We got a lot of way to go. We don't even need to take any profit. So understanding this, you stay in that stock for as long as you can until the software tells you to exit this. CLS, let's take a look at CLS. All right, here's CLS. Okay, so CLS is getting to that top now. All right, so it's just turning risky. It still have about another 9% to go on that weekly time frame on that one. The daily time frame already exhausted out. Let's go to the monthly, see if there's any here. On the monthly is also exhausted too. So the biggest thing I'll say, the weekly is still kind of there. You know, still a wait and hold. It's not telling us to sell. We have about maybe 9% more to go before things starts pulling back. All right. And then I like to look at the seasonality just to make sure there's nothing going on with the stock. So if we go over here to the future trend, you know, it still has it, but more in May. May is when, you know, it really, really kicks off. So if I wasn't CLS, if I was in, I would hold off. Would I want to jump in now? No. Okay, because you can jump in. I would rather jump into Google, AMD, what was that other one that somebody PSLV, you know, these ones that are like literally just beginning. And look at this. This is so many of them. Goldman Sachs, all these companies, you know, Goldman Sachs just came out with earnings, right? And it beat earnings, but the stock dropped. But look at what this thing is doing now. This is where a lot of people miss out on, right? Another 12% move in the coming weeks. And people wonder how they can't make 5% in a month in the market. Anyways, there's a lot to go on. And so I've ran out of time. Let me see if there's anybody in particular. Let me do one more. I see HNRG. Steve had HNRG. Let's look at that one very quickly. All right, so you can see here, hopefully, if based on what you guys are seeing me do now, would this be a stock that we want to jump into on the weekly time frame? The answer is no. All right, let's go here to the daily time frame. What do we see here? Nothing. It's risky. Sentiment is bearish. It's telling you to wait and hold. Stay away from it. Weekly time frame, risky. Sentiment is bearish. Wait and hold. Let's go to the monthly time frame, see if there's any opportunity there. It's telling you to sell. So the only thing this is good for is to do what? Short the stock. Okay? You don't want to be buying. Fair enough. All right, let me end with this. The link that I have for the special, if you guys want to get access to the software, it is rightside.trading.com. Let me, it's https://. Oh, there you go. Thank you. Thank you, Dave. So you see, Dave has already put that in there. Oh, thank you, Elizabeth. Appreciate that. And thank you too, Ben. Rightside.trading.com, no, rightside.trading.io/pricing. Now, if you put in the code word year special, this exact word year special, please put that in there. It allows you to get a whole year for just $600. I think right now the premium service that we have is going for $149 per month. But if you click and you type in year special, you'll get the whole year for $600, which is saving you more than half. I think if you do the $149 per month, you'll be spending almost like $1,400 by the end of the year. All right. But with this one, but that year is only that year special, the code is literally only for today, please. So please understand that after tonight, it's gone away. But if you go in there, type in that year special, you'll see a bubble that comes up where you can click on it for $600. You can pay for $600. You'll also get to come join us every Monday night as we go through this and pick out the stocks. I mean, we've been calling this bottom for, you know, we started seeing the bottom was going to bottom like late March, early April. A lot of people were worried about what's going to happen with the situation with the war in Iran, but you know, we just went with what the software showed us, and we're on the right side of the market. Okay, and so that's the whole thing about this right side trading, being on the right side of the market with data, quantitative data, and technical analysis, and that's what this does for us. So come join us, and I promise you, you'll see how this can really, really improve your trading overall. All right, thank you, David.
All right. Thanks, Wally.
You're welcome.
Thanks for being here.
Yes, sir.
All right. Yeah, be sure to hit that link in the chat and check out that special offer from Wally. So, all right. All right. We still have about 3 more hours of live analysis for you. So next up is Michael Filguera. Michael, are you there?
I am. Thank you.
All right, you should be. Oh, Wally, I gotta turn your screen share off. And Michael, you should be able to share your screen now.
Okay.
And just a reminder, in case anyone did not hear this, I am live streaming this to YouTube. So the whole archive for today is instantly available on there. Or if you have to leave the room for any reason today, you can still live stream it from YouTube. I see several people are watching on YouTube, so welcome to you all. But then also I am recording each session individually. And as usual on TimingResearch.com, after I can get them processed, all the archives will be there individually to review at any time. So, all right, Michael, I see your charts now.
Yep.
And
I need to
double checking everything. And okay, are you ready to start?
I am.
All right, I'm recording again now.
Good morning, good afternoon, and good evening, depending on where you are located within our world. My name is Michael Filguera. I am sole proprietor, chief cook and bottle washer for Traders Helping Traders and also logicalsignals.com. And primarily what I do right now is I am a day trader. I have over 40 years experience trading. I was originally an options market maker, and I have traded and been a member of the Pacific Exchange, the London Traded Options Market, the European Options Exchange in Amsterdam, and also the DTB, which is the German exchange. I've been a day trader since 2013. And basically my focus is the S&P 500 and the NASDAQ. And so what I actually do is I am on YouTube, by the way, for those that are watching on YouTube. You can go to Traders Helping Traders and then look for my name, because there's one other person that also lives in San Francisco that took that name. And so they also have a YouTube channel called Traders Helping Traders. In any case, you'll find me. I do a morning and an afternoon, so a morning and a daily on the S&P 500 and the NASDAQ 100. And I also do weeklies. So, and those are in the form of a podcast. I think everyone is getting a little bit surprised at the strength of this particular rally. Whether or not that you actually recognized when it started, I think more importantly, what is important right now is the fact that it is underway. And according to my own analysis, I had mentioned again, probably several weekends ago, when we started to see how the market was going to respond to anything attaching itself to the problems that were involved in Iran. And that continues. But at the time when it was really starting, just because of how and it was beginning, I had made a statement because I initially was counting this particular high right here as that was it. That was the high that on an Elliott wave basis went back all the way up to a cycle third wave. And so I've had to pull that down, go to an alternate, which puts it still within the final fifth wave up to complete all the way up to that minor third wave. So here we go again. But as I commented a couple of weeks ago, I talked about that should the market turn and flip and run higher, and that the fourth wave does get moved over because previously it was here. And so this would have been the final fifth wave up to complete all the way up. And that was the first wave down. So changing that to an A, B, C, and for the fourth wave coming in here, leaves us with a fifth wave up to finish. And within it, we have done 1, 2, and I believe we are in the finishing stages. If not, we've already finished minuet wave 3. I keep pushing this higher because it keeps extending. But we have to kind of consider that this is Monday's low. Monday's low at 67.67. Today's high basis the futures market is, come on, 7,040. It's a very impressive rally. And my view on the whole thing is that it is just all about volatility. And it's interesting when we get to compare or just bring in that when we have a volatility expiration, which we had yesterday, and everything closed yesterday, the actual expiration was this morning on the opening of the SPX. So that opening print, those options expire and they get the price and everything gets settled. But actually, you could not trade the options this morning. So everything got prepared and done Monday and Tuesday for this expiration that occurred first thing this morning. It was a large expiration, and now it is happening prior to our monthly April expiration, which is this Friday. And so there have been times when that occurs, we tend to get a little bit of a push and a shove from the volatility expiration, which we definitely did. And what has happened is that if those of you that may also have a little bit of a background or understand, this is interesting. David, I'm not seeing anything in this chat box. Am I got the right chat box up? Because I don't know if anybody's asking yet.
Oh, yeah, there's no new symbols yet, but yeah,
Okay.
so everyone post some symbols for Michael.
But it's okay. I'll just keep talking about my analysis, which is also fine. No problem. I just want to make sure I wasn't missing them.
Yeah.
Okay, so what we're talking about is volatility, and volatility has taken on a new life. I mean, the volatility, the VIX used to be called the fear index, right? Because the higher that it went, that kind of translated that traders were afraid, they were fearing of a stronger downside move. Well, it actually doesn't carry that same. It still is called the fear index. And when it spikes, people can take notice of it. But the thing is, it's like it doesn't have the same power that it did in the past. And the primary reason is because now volatility is widespread. There is a volatility index, there is a volatility future, there is a VVIX, which is the volatility on the VIX index. And there's so many now derivatives of all of the measurements that actually, as it comes out, you're just kind of wondering, like, wow, this is kind of weird. But once you can get a grip on it and put it together, it becomes a very useful tool. How you can see why a lot of things are happening the way they are. Steve has put on WPM, since my duty here today is to help do Elliott analyze these particular stocks. So Wheaton Precious Metals. Okay, so this is obviously going to have some tie-in with the precious metals, gold, silver, platinum, probably copper. I'm not sure what sits inside or what they might, if they're miners. It's a very nice price for a miner. Okay, so I'm going to first start on a daily chart so we can see how we got up to this level. Obviously, this thing did go right along with gold. I'm sure we can go look at gold to see what it on March the 2nd. In fact, you can do that really quick. When we look at March the 2nd, I think it actually topped out before then. We topped out in January, end of January, and on March the 2nd, we hit the top of a B wave. That's interesting that that the stock made its top at the top of a B wave. That's interesting, which kind of gives me a little bit. This would be right. That's right in line with when gold did top. In terms, for me, that's when it topped in an intermediate third wave. And so I actually, wow, this very interesting. Thank you, Steve, for bringing this one up, because what could be going on here is this is A of the correction, right? So if we're going to coordinate it along with the gold future, then this would be the end of intermediate wave 3. And then this could be wave A of intermediate wave 4. Wave B of intermediate wave 4 is a little bit of an irregular. And I'm going to show you one thing, because if it matches up, I'm going to be like, wow, that's what it was. Oops. I'll leave it up there and then I'll switch it around. And I'm just going to move this very quickly down to that low. Wow, look at that. Okay, so wave A, wave B was irregular. Now, here is the deal. When you get an irregular B wave, which is what it's saying, is that it went up and made a new high above the A wave, and totally acceptable. Now, when you get that second leg, or the second part of the decline, which is the C wave, its fib levels are 1.618. Look at where it got to, 1.618. So, and recognizing that gives you your high, your top was here, and then that was A, that was B, and we have a C wave down, perfect, comes right into that support, and now we're starting to rally again. So in essence, I could use wheat and precious metals to kind of give me some clues in gold, because I'm wrestling with in gold, it hasn't really finished its correction, and it's now starting the next section, the next leg up. And if that's the case, because this one's kind of saying, yeah, that's exactly what we're doing. So I'm finding this is great. Thank you very much, Steve, because this puts a lot of insight into my work in gold. So I would say that this is an ABC. I would put a 4 down there and see if we're going to get, this could be 1, 2, and then we get 1, 2, 3, and then a little 4, and then a 5, or 3, and then a 4 and a 5. We should, in this being wave 1 of a new rally phase up. So now that rally phase would definitely be expected to get above 165, obviously. And a little early, and I don't really have enough back here to support where I can start putting this in to like wave 1. Because I would go, if this is a fourth wave, I'm going to go over to what I would mark as intermediate wave 1, draw a straight extension line, and then cut over and bring it up here to wave 1. And that's going to give me what I should see in this next leg up. So on an intermediate 5th wave. Now, of importance here, because it does have a relationship with gold, in the precious metals on an Elliott wave basis tend to extend and expand in the 5th wave. Normally, if we're using Elliott wave and we're doing it in any other product, basically, so within the stock market, within the equity market, within the bond market, it's the 3rd wave that's the longest and the strongest. But particularly in gold and silver, it's the 5th wave. And so if that's the case, this could be extremely explosive to the upside. So thank you very much. That was a good starter. Thank you. Okay, we're going to go over and take a look at cotton. And okay, so the symbol is not CT, but I'll put it out there and see. That's CT Vision. You're looking for cotton. I don't know what cotton symbols are. But CTV26, okay. But is it going to be this, I think? CT number 2 futures, right? V26. Well, let me see if I got to put a little space in there. Is it October? The V, is that October? Because I'm on Thinkorswim and that would have to come out something like this. October 26. Nope. Sorry, George. Unfortunately, 26. Nope. It's not either that or I don't have the permissions to get them. This is cotton number 2. Let's go do it this way. Can't find that symbol. Okay. V26. Shoot. I don't know. It's not doing it. I'll give it one more try, and then I'm going to have to keep going here. CTV26. No, it's not pulling it up. So unfortunately, I am unable to do that for you. Even if I just pull up, yeah, it won't even pull up anything. It's a separate futures now, and they've broken everything up. And I'm sorry to say that I'm not able to do it, but I will do Discovery Silver for you. So yeah, I know. George, let me just go do Lou, and then I'm going to come right back and we'll do that Discovery Silver for you. Okay, Lou. Energy, boy, yeah, hasn't this been a wild ride? So again, not knowing what type of energy they're into or what they're supplying, if anything. Let me go out and let's see if I can't. Let's go look at the monthly. Okay, the monthly just shows it's been a straight, strong rally, and that was a major high at 464. And wow, has it really kind of come back awfully quickly. Let me see if I can do something here. This could be 5. 1, 2, 3, 4, and then this gets really ugly. Kind of a bizarre chart for me. If I just kind of bring it down, still looking at that top being a major top. We'll come down to the daily, see what we're coming up down in. 1, 2, 3, 4, 5. So we did 5 down to here. That would be the first. So either it's A or it's wave 1. This obviously is a 3, and that's a very strange little ending for the C wave. And so I would put a wave 2 there. And then we started another 3 down, and there's the first 5. And wow, getting a little clogged up here. Something is bringing a little bit of confusion into what they want to do here. So what exactly, because if this is correct and they're doing that, would be A, B, is it the same? Yeah, I could. 1, 2, 3, 4, 5. Yeah, I put the first wave to there, A, B, C, the second wave to here. So it could be A, this could be B, and we're looking for C wave down. And it actually could have come in right there, and that could have finished a 3-wave correction. So that would be then putting the weight on here, because coming off of that, if it is, then what we need to see is a 5-wave structure up. Now, the daily isn't necessarily going to show that right away, but let me go down to the 4-hour, and we're going to go to that same spot. And it isn't. It isn't even developing into a 5, because you see that was a pretty deep, even if I did 1, 2, and then did 1, 2, yeah, you can see it's very choppy. So I would have to say it's still a part of this correction coming down. And as much as I'd want to say that that should finish that correction, it's telling me here that it's not likely. So if I go back out to my daily, the deal sometimes is that you have to be careful of when we're coming down. A, B, and this could just be wave 1 of C. So it's a little bit larger. And then this is a wave 2 because it does look more 3-wave pattern rather than a 5. So I've not followed this company. I'm not sure even what they're into. But if I had to say, I'd say you got a choice of either it's done and we start to rally with some true strength, which is not appearing, or we're going to do another ABC down. Or let me just say 1, 2, 1, 2, 3, 4, 5, 3, 4, 5. Oh, it could be that we're inside this little 5th wave, and that is just wave 1, and that's 2, and now we do a 3 and a 4 and a 5. And if that's the case, wow, see, it's hard to even put in where your support and resistance should come in. 1, 2, 3, 4, 5. That's the first 5 down. So I'm even leave it. Let's just leave that alone and just put in a straight filter for if it should do 3 waves up. Well, you got 208, 234, and 255 should be an ABC. Even 208 came close. So that would be a very shallow pullback, right? Because if I'm looking at this is a 5, and if that's a 3, and then we still got more to go. Well, that's going to be pretty deep. If they can get up higher, it's still going to be deep, but it shouldn't look that bad. And I need additional height to get a more accurate reading for what the next leg would look like going down. So sorry, but I can't go much further than that. I do believe it is corrective after doing a nice rally up above there. You also can just take a look at, where were we before? Well, I was on that monthly chart. Because this whole thing is 5. So you could almost run like this. That would be very, very big. A very big picture, because you're going back to 2016. And here you have it. So we're still, oh, look at that. But that all works out, because what we're doing is we're just measuring what a pullback should look like. It's already come down to 618 of the entire rally. That's actually a good sign as well, that maybe this is all complete. It could come down but you see there's a huge gap for it to get there, and it would lose a lot of value. So I'm kind of thinking that it's going to rally around and stick out here and finish this correction and then start another rally phase. Now, what you also can do is you're going to be looking at, if I get rid of that, and we have that one, and you just start putting in your fibs for upside move. And then you have these, and of course, they're always going to be hard. There you go. So then you can see coming back up, if this is going to be A, and now you're looking for a 3-wave for a B wave, or yeah, this is all going to be like a 4 or some type of a corrective structure down and complete, and you're starting the next rally phase, you can watch it here. And you can see it if it's coming up in 5. You can now, look at how high it can get, because a corrective phase, if it's an ABC, you're looking at 279 to 350 to be an area that should complete it and contain it. If it's going to be larger, as if this is a finished pullback and correction, and now we're on to the next impulsive wave, well, then you're going to go up in 5, and you're going to break these fairly easily, and then break that, and then eventually just break this and keep going. And then as you're coming up, you'd be able to use Fibonacci internally to kind of start marking as to how high it can get. It's a little bit difficult to do right now because there's nothing there, but there are Fibonacci sequences that you can put together to kind of map that out for yourself. Okay, and so we're going to go to DSVSF, DSVSF. And that's Discovery Silver. Wow. Okay. 1, 2, 3, 4. It's got one more, George. That's my maximum monthly. It's got one more to get itself up there. See how nice? 1, 2, 3, 4. A, B, C, 4. And you can always double check. See if it came in anywhere close to some fibs, and it did, almost down to the 50%. So that's a goodie. So I would say that is complete. And I'm not putting any outside labeling on it, like, okay, what would this be on the big picture? Obviously, being a monthly, I'm just saying it seems to be 5 waves up, or a 1, 2, 3. Excuse me. Just right now it's 3, but I can see how this one breaks down. And so 1, 2, well, 3, 4, 5. Yeah, it could be. Could be 1, 2, 3, 4, 5. I'm not sure what I'd put up there, but this looks kind of complete, and you see it's turning around, which is nice. Now, this obviously is going to get attached to silver. I'm going to say because of its pricing, and when it started trading, that this is a new miner or a new mine. So very difficult to kind of start attaching things to it. Again, if this is 1, 2, and this is 3, and this is 4, then I do something such as this. And that's just taking 1 and putting it up here to 4. And you can see that's not going to work. We're already way beyond anything. So that's useless. Because often when you're taking wave 1 and you put it up to a wave where the bottom of wave 4 is, you're going to get some fibs as to what wave 5 could do. So obviously this isn't 1, 2, 3, 4. I would have to say that this is 5 waves up. And what it's completing, since it's an all-time high, not sure, again, because it's newer, but I'd say you're going to have a larger 3 coming down. And this might be A, B, C, and that's just wave A of a larger 3. And how you can measure that, I could go from here or here. And I'm going to take it from there right now, and we're just going to put up fibs. And you see it's got the 50%, but maybe it needs to come down to 618. And this could then be, this would leave it as a 4. Let me give you the other one. I'm going to bring it from here and bring it up to here. Oops, did that wrong. Go like this, here, and put it up to here. And now you can see the 50% is 4 3/4. So it could be like A, B, and then you have a C wave. C wave down. And I could take you to 475 to 372. So, but if it is actually following silver, which is a good idea, it also has a big, oh, it's big in gold. Okay, that's interesting because I'm expecting both to eventually resume their rallies and both actually to go to, again, new all-time highs. Big new all-time highs. So that's kind of interesting. I'm going to do uranium, and I'm afraid that's probably going to be all I got because we're only here for a half hour. URNM. George, here it is. It's still sitting here exactly the same as the last time you and I looked at it. But let me just kind of get rid of these and see, because we were doing it to there, and now I have to actually activate and go up to here. So what we're doing is now we're just looking to free the pullback all the way. Because this is pretty deep if you were to measure it from here. And so let me just take a look. Let me bring this guy. No. I'm going to activate it and pull it up all the way to there. So you can see how it's coming back 7.786, which is way too much for a corrective move. So that was just to say if this was a completed, then you'd only look for a lot less, but it's not. So it is completed in the other direction. And we're going to bring it back down to there so I can get accurate. And you can see we're almost at 50%. Depending on what, if this is a first wave and this is going to be a second wave, that can come down to 618. Or it's finished and we begin to rally again. I'm not sure what uranium actually, thank you, David, what uranium actually tracks. They sit on a truly huge property in silver in Mexico, not permitted yet, but they have big gold properties in Canada. That's this one. Oh, this is Sprott's uranium and miners ETF. Because I have such a high thing with Sprott, I love them. I think their products are like stellar. If you're bullish on uranium and you think it has a lot of things, I'd just be adding to my position on pullbacks because it's going to be a long term on that one. And I normally don't make any recommendations, but that's what I would do. I'm going to kind of wrap it up there and give it back over to David. As far as like what I am doing, I'm actually shifting gears a little bit, and I am still looking at the possibility of doing a live stream on YouTube. But more importantly, I'm shifting and going back to my roots, which is options. And currently, I am working on a couple of algorithms. And one of them is very sophisticated and very high level. And the other one is more for day trading. But day trading using my tools, using what I use. And so it'll be very interesting. So thank you, David. Thank you guys for the stocks. And good trading. Have good trading.
All right.
Back to you. Yeah,
Thanks, Michael.
you're welcome.
Thank you for being here.
You're welcome. Oh, you took me down. Okay, thanks.
Yeah. Okay. Yeah, thank you to Michael Filguera of Logical Signals for being here. And next up is Matt Buckley. Matt, are you there?
Yep, David, I got you loud and clear. How about me?
Um, your voice sounds a little muffled or something. Can you say something again?
Microphone. Let me try. How about now?
Oh, yeah, that's much better. Yeah.
Okay.
Okay. Sounds good. And I see your chart and let's see. Are you ready to go?
Yeah, always.
All right, great. I am just double checking my setup. All looks good. Okay. I am starting my recording again now.
All right, folks, good afternoon or good evening or good morning, depends on where you are on our big blue space station zipping through the galaxy, the cosmos, the universe. Welcome aboard. What was it? 30, let me do my math. The S&P 500, ladies and gentlemen, hit 36 cents, just shy of an all-time high. Look at that, folks. We literally are in, well, we're making a little bit of a run again with SPX right now. Let's pull that up for the day chart. Unbelievable, or actually not unbelievable, but ladies and gentlemen, this is, there it was. Almost, man. 52-week high, the all-time high in the S&P 500, 7,002. Can you believe this? Absolutely insane. Ladies and gentlemen, looking at what's going on in the world, some of you would not believe that we're up here right now, but remember that the market is forward looking, right? The market's already done with Operation Epic Fury. I don't think we're done with Operation Epic Fury. I think we got a naval blockade going on. We might still have military action going, but the market has already determined that, you know what, we're done. Where do we make money trading, folks? Does anybody in this room have a broker that lets them trade off the left side of a chart? No, you don't. You don't even have to type no. The right side of the chart, ladies and gentlemen, is where we make money. So we have to project our thoughts forward in space and time. And projecting our thoughts forward in space and time, it's over with, right? The financials just reported, most of the financials just reported earnings. Goldman Sachs, Morgan Stanley, JP Morgan, crushing it, absolutely printing money. Now, before we start digging into some charts and potential trades and stuff like that, let me be clear, because I know obviously gas prices are through the roof in some states. I live in the free state of Florida, and it's not that expensive, $3-4. But you live in California, $9 or something like that. But I get it. Some people might be hurting right now, right? But let me share with you a wisdom. The market is not the economy. And, it's just not even close. And in some bizarre way, the worse the economy gets, the better the stock market might do. And if that doesn't make sense to you, I can teach you all this stuff because it really isn't that hard. So I want to throw a couple charts up here and talk you through some names that I'm targeting. We got some time at the end. You guys can throw me some symbols as well. Way leery of just throwing up a chart and telling you what I think about something. Why? Because you have no idea what the hell is going on in that name, right? I don't, that's not the way I invest or I trade, but I can do that towards the end because I want to share some explosive charts with you. And also potentially help you with some trades. Well, the first one would be the S&P 500. Last week, we put on a trade called a bullish double vertical, right? Or, you could call it a bullish on America trade. Let's just open up the chart of the S&P 500 for 5 years. Does anybody see a trend there? Actually, I'm going to pull up another chart here. Markets tend to move up and to the right over time, don't they? Everybody give me a vertical head nod that you understand that. Markets tend to move up and to the right. Let me go find this one presentation, this chart. I started I'm going to age myself. I started trading in 1991. I've been on Wall Street. I've been a managing director of a multi-billion-dollar volatility arbitrage firm. I mean, this just I kind of know what I'm doing here. But let me show you. Here it is right here. View, slide sorter. And I'm going to show you a longer term picture. All right, so let's look at this one. This, ladies and gentlemen, is a chart of the S&P 500 since, I love talking like this, the turn of the century, right? Of course, if you're my age, you think 1900, right? Well, no, look at 2000. What happened in 2000, folks? Well, I was an instructor pilot in a Marine fighter squadron in Miramar, and I was day trading. The dot-com boom. Look what happened. S&P 500 imploded. Then what happened? It recovered, and we had a rip your face off rally. Then what happened? I was in the Chicago Board of Trade. I was at ground zero, the SIBO, Chicago Board Options Exchange, when this happened. What happened? The GFC, the global financial crisis. Oh my God, Wall Street's going to implode. We're all going to die. Did we? No. The Federal Reserve jumped in to save capitalism right here. And we have never looked back. Now, where's the scandemic? There's the COVID pandemic. There's Joe Biden's bear market. There's the tariff war from Trump. And then here's Operation Epic Fury. I'm a political science major from South Jersey, folks. Does anybody see a trend in the S&P 500? Now, let me show you from where I started trading. Okay, look at that. 1991 at Naval Air Station Key West. There's the dot-com boom. There's the global financial crisis, and we never look back. So, folks, look at the trend. Look at the chart of the S&P 500. Now, we are making breaking news right now, ladies and gentlemen. I was waiting for this. Let's go look at it. Ladies and gentlemen, as of right now, we have just hit an all-time high on the S&P 500. You are here for it, man. S&P 7,000, ladies and gentlemen. Everybody give a golf clap to the market. So here's what I'm going to cover a trade, and then we can keep looking at charts here. Folks, if you're bullish on America, right, meaning the S&P 500, let's just open up this chart of the S&P 500. Let's go 10 years here. Do you see a trend? Of course you see a trend. So after looking at the chart, I'm always a guy who after looks at a chart and says, you know what, is there a trade? Yeah. I'm going to show you a trade right now. Hop in your time machine and fly. Let me deselect this one. And fly as far into the future as you can to December of 2031. Okay? Why would I do that? Because that's as far out in time as I can go in the options world, and looking at the chart of the S&P 500 moving up and to the right, not a straight line. There will be a pullback. Hell, we might be in a recession right now with oil and the war and everything like that. We will see another bear market. I don't know, this year, next year. These are cycles, right? Everybody knows the S&P moves in cycles. Okay. But look at this potential trade you could do. You could go out years into the future and as high as you possibly can on the S&P 500. We just hit 7,003, the all-time high. In the next 5 years, do you think it's realistic that we could double? Do you think the S&P 500, which is at 7,000, let's just draw a little bit here. Do you think it's going to do this? I do. One more time, I'm going to remind you, not a straight line. We're going to have pullbacks on the way up. But this is why I call it a bullish on America trade. This is a Warren Buffett type of trade. He does this exact type of trade, and I'm going to show it to you after looking at that chart. All the way out into the future, do you think we could double in the next 5 years? If you just said yes, that would be S&P 14,000. Do you think we could make 14,000 by December 31? I do, easily. You could just buy one of those calls, right, and put it in your filing cabinet. I don't do that. I'm cheap. How about we sell the highest strike call we can against it, a 16,000 call? Looking at a chart of the S&P 500, I just did this trade. You can see it down here the other day. Ladies and gentlemen, I just gave this trade weeks ago to our TGO members right here. Let's look at a chart of the S&P 500. Where? Let me go to the 9-month chart. I didn't time the bottom perfectly, but we were pretty close. It was about 2 weeks ago we did this trade, and it's already up like $3, $4, $5,000. But look at the details of this trade. You ready? How many of you would risk $4,600 today, or pay $4,600 today, to potentially make 200? Allow me to round up, $200,000. And I'm pausing to because I want that to sink in. The reality of I've done these bullish on America trades for years. I put these in the background and they make 6 figures every other year. I just kind of leapfrog these things. This is in my retirement account. And you could actually do more contracts in that. Let's do, I don't know, 3. Would you risk today 14 grand to potentially make over $500,000? Give me a hell yeah. I mean, let's just round up $600,000. So, ladies and gentlemen, since we're talking about charts today, look at the chart of the S&P 500 of all time and tell me what you think is going to happen. One more time, there's a pullback. There's a global financial crisis. There's some other things. But again, I'm a political science major from South Jersey. This chart is moving up and to the right. There's a lot of bad out there, folks. We're 37. I've lost count. Somebody, what are we, 37 trillion in debt? There's, war still happening in the Middle East. I guarantee you in 2027, Xi Jinping moves to take back Taiwan. The semiconductor market will implode. The market will implode for a little bit. There is still a lot of bad out there. But what happens? We figure it out. Capital money finds a way. So if you have a snipping tool or, you can hit your Microsoft print screen, take a screenshot of this trade and look into it, man. Let me just put one contract on there. For one contract, $4,600 a day, today, looking at a chart of the S&P 500, Wiz, I think it could double in the next 5 years. I completely agree with that. If you did this trade today at $4,600, you could potentially make 200 grand. That is awesome looking at that chart. The next chart I want to look at, and then I'll throw it over to you all to look at, is Definium. Definium, what is that, like nuclear power or something like? Folks, Definium is up 20% in the past couple weeks, and I'm going to tell you why. You need to buy this stock with both hands today, and I'm going to tell you why. So I was in a live trade brief about an hour or two ago with my Top Gun Options members. I give them these proprietary reports. This is a huge name in the psychedelic sector. What? Yeah, you heard me. Ladies and gentlemen, the psychedelic sector is at an inflection point. There are multiple names in this sector that are completing, they're in late stage phase 3 trials for what? TRD, treatment-resistant depression, GAD, generalized anxiety disorder, and MDD, major depressive disorder. COMP360 is the first classic psychedelic that the FDA is they're potentially going to approve by the end of the year. Here's what I want to look at with Definium. Definium has been the standout in the sector, 20% over the last 2 weeks. It's got 2 phase 3 readouts coming in the next couple months, and here's why you need to buy it today. This time next week, there's an investor day that's scheduled for April 22nd. And I can tell you, a little birdie told me that they're going to have some fantastic news. So here's the section where I talk about Definium and all the news in it. Here's what you really care about, speaking of charts. My 12-month price target for Definium is 28 to 40. And in a good world, I think in 2 years, it's an $85 stock. Easily. Now, this is, I don't know if I can share, this is a proprietary report given to Top Gun Options members. I think I can share this with you guys. If not, you can shoot me an email or something like that. I can't. It's not letting me share this report. But hey, I'll tell you what, Wiz, or topgunoptions.com. I'll give this to you for free. I mean, I'm in a good mood. I'll put the ladder down. This is our biosector brief, and I show you the four names in the psychedelic sector. Down here at the bottom is my targeting order list: Definium, Compass, Atai, and Help, and what's going on with all of them in their commit criteria. So let's go look at Definium's chart real quick. Up 20% in the past couple weeks, with great news on the phase 3 readouts and an investor day coming up. So on this little bit of a, we're peaking right here with this breakout. I'd buy it with both hands, period. This name, let's go, and Compass too, CMPS. I just got back from a conference at Harvard on psychedelics, and you wouldn't believe what is going to happen, what is happening in the psychedelic space. I own names in all of them: Definium, Atai, Help, and Compass. I have a ton of positions in the psychedelic sector. So Definium is the name I would be buying today. So I can turn it over to you guys, or I can keep cooking here. But those are the two charts I wanted you to see: is the S&P 500 and also the strongest name in the psychedelic sector right now. But if you'd like access to this report, I can email it to you. You can just shoot me an email. This is a hedge fund report. This is what I used to deliver when I helped start a hedge fund in Chicago. This is usually only available to Top Gun Options members, but I can give it to you guys as well. Steve, I don't know if that was for me. That was a minute after I started. CSTM. Was that for me or somebody else? CSTM. I see. This is why I don't do this stuff. I have no idea what this name is or what it does. Basic materials. No idea what Constellium is, but clearly it's been on a monster run in the past 2 weeks. It's given some of that back. Do you guys know about Max Payne? So Max Payne, let's go look at this. CSTM. Let me remember that. Max Payne shows you where all the options activity will pin for an individual name. CSTM. Let me bring this up. So Friday is when CSTM, Friday expiration is the next expiration of that. And let me scroll down a little bit. So there's not a ton of options activity in CSTM. There's 24 or 34 call options that expire at 24, and there's puts. So if anything, looking at the chart and looking at the options activity, I'd be bearish. Not bearish meaning it's going to implode, but this name looks like it's way overextended and looking to pull back here. I don't know if there's been recent news that caused this thing to rip. Really high conviction from Deutsche Bank. It raised its price target $1 from 28 to 29. Oh wow, that's great. So I know nothing about this name, and I hesitate to trade or to talk through names that I just don't follow. So CSTM, not sure what it is. So you know what? Let me do that. Let me show you. If you're interested in Definium, I don't buy stock. Buying stocks for chumps. I trade options, man. So we could fly, even though there's probably going to be FDA approval of their I hate using the word drug medicine around January, the beginning of the next year. I'm going to give this trade more time to work. I'm going to fly all the way out into the future to Jan of 28. And you can see my existing position right here. I already have an existing position. It's making money right now. I did it when it was at 17. We're up at 21. Here is what I would do. It's called synthetic stock. If you wanted to buy 100 shares of Definium today, you'd need $2,200. Okay? But why would you buy the cow when you can get the milk for free, right? So remember $2,200. I can use options. If I sell an at the money put $20 and buy an at the money call $20, it creates a position called synthetic stock. You see this? That's long stock P&L, and the thing underneath it is the options P&L. It's the exact same thing. But look at what Uncle Wiz did for you. Would you rather spend $2,200 or $300? It makes 0 cents to buy another share of stock ever in your life. Now, you might be sitting here going, well, Wiz, you use the term synthetic stock. What does that mean? You didn't buy 100 shares. You're using options to be long 100 shares. So since you're not an actual shareholder, you don't get two things, and two of those things don't matter at all. The first thing you don't get is the vote. You're not you don't own the shares, so you're not like a shareholder who can vote. I think in my entire life, whenever I owned shares and I got some voting thing in the mail from whatever company I owned, it went right in the recycling, right? I'm fairly certain there are people out there who own probably more than your 100 shares and your vote means nothing, right? And the other thing you don't get with synthetic stock is a dividend. And a biotech psychedelic stock like Definium ain't producing a dividend, right? So the two things you don't get by not buying the shares doesn't matter for this name. So once again, why would you buy 100 shares of Definium? It makes no sense at all. But some of you who are really smart looked and said, well, Wiz, the max potential loss is what? It's the same as if you bought the 100 shares. What's that based on? Definium in the next 2 years going to zero. Well, what's the probability of it going to zero in the next couple of years? There's not enough decimal point. You know, the odds of getting eaten by a golden retriever are never zero. So the odds of Definium going to zero in the next couple of years are probably 0.001 or something, but they're obviously not zero. So you know what I tell TGO members to do? Buy what I call a disaster put. What's a disaster, right? If the market goes down 20%, what do the commentators say? Oh, we're in a bear market. Or if a stock implodes 20%, what do they say? Oh, Apple's in a bear market. It's down 20% from its all-time highs. So why don't we buy what I call a disaster put about 20% underneath the stock? So what does that do? Well, I mean, it costs a little bit more in the trade because you're buying insurance, you're buying protection. So the cost went from $295 to $765. But instead of risking the 2,300 or whatever, look at that. I cut the risk of this trade in half. So, ladies and gentlemen, it's a rhetorical question at this point. Why would you spend 20, whatever it was, $300 to buy 100 shares when you can do the synthetic stock with the protective put? It's only $765. And the most you can lose if Definium implodes and goes to zero in the next couple of years is $1,300. Now, one more thing I'm going to show you. I'm cheap. You know what I do? What's Friday? The April expiration. I can sell a call option in the front month against it to bring in a little cash. Look at that. I just lowered my cost basis by $30. Ladies and gentlemen, I can sell calls in the front month. These are the back months, right? Those are years into the future. This is this week. You can sell against your long-term bullish position each week, and in time, this is paid off. Obviously, stock goes up, you're printing money too. But folks, even if Definium stayed flat, you can sell calls against it every week, and this trade will be free. It will have not costed you, not only didn't cost you anything, you're making money on it by selling calls against it. So, ladies and gentlemen, I strongly recommend you take a screenshot of that. And like I said, there's an investor day coming up on April 22nd. And the people I talked to said, dude, they can't tell me, obviously, but when they say, yeah, good things are going on here, that's all I can tell you. I'm like, got it. Ain't no insider trading, it's stupid to do any of that. So I will tune in like you on the investor day, but I've been long-term bullish on this name forever. Okay, so Definium, I would buy with both hands today. And as we covered earlier, I would do that bullish on America trade with the S&P 500, SPX. Now, don't get me wrong. I think we're going to run out of airspeed here. This rally is going to fade. Look at this. We're trying to stay up here. There's your all-time high. 7,003 and 82 cents. You were in a live trade brief with me when that happened. We're going to look back, folks, I guarantee in a couple years, and at S&P 10, I remember Dow 10,000. We will look back and be like, wow, you remember S&P 7,000? I can't believe we're at 10 right now. So you don't have to do anything, but I would seriously consider doing that bullish on America trade. This is the current one I have in my portfolio right here. Look at that. I'm risking 1,800 bucks to, if you'll allow me to round up, to potentially make 100 grand over the coming years. And I've been in and exited out of these bullish on America trades when it makes sense. Let me give you a perfect example. Let's look at a 2-year chart. Right here, April 27th of last year, I did a bullish on America trade right there. This was during Trump's magnificent, big, beautiful tariffs. Everybody remember that? Why do you remember the date, April 27th? It's my beautiful bride, Susie's birthday. So I remember I got out of that trade. It was a bullish on America trade that was years into the future. It made 15 grand. That was 100%. I think that was in 9 months. So you don't have to stay in the bullish on America trades. You can get out of them whenever you hit a nice profit target. Making 15 grand. I forget what the initial investment was. It was like 1,800. Man, I'll just round up. I think it was 2 grand. I spent 2, or I risked 2 to make, I think it was 120 grand, but I got out when it hit 15. Right. And then we had a little AI freak out here, and then I re-entered a bullish on America trade, got out of it before Epic Fury. So you can leapfrog these bullish on America trades years into the future, or like even a year into the future. Let me show you our Top Gun Options member area. Earlier in our live trade brief, look at that. I did a new one, excuse me, new bullish on America trade out a year, literally out to April of 2027. I said, if the S&P 500 goes up 20%, 20% in a year, look at this, folks. I did a bull call spread a year into the future. I think we're easily going to hit 20%. Those Trump trading accounts, or what are they called? The Trump accounts. They have to buy the S&P 500. Do you guys know about this? The Trump accounts, for kids, they have to buy the S&P 500 index. It's tax day today, folks. But look at this. When the Trump accounts fully hit the market in the S&P 500, we're going to go up at least 20% in the next 52 weeks. So you could do a trade today that risks 5 grand to make $95,000 by next April. Folks, I do this for a living. I do these things. This isn't BS. This is truth. Men lie, trades don't. And these trades absolutely print money. So real quick, if you want a copy of this biotech sector for psychedelic brief with the names I love, Compass, Definium, Atai, and Helix, just shoot me an email, wiz@topgunoptions.com, and I'll just respond to that email and send this to you. Please don't share it. I'll share it with you because you guys were on this brief, but this is all institutional knowledge, and this usually only goes to Top Gun Options members. But I'm in a good mood, and that's why I'm doing it here. But great names, folks. I am a absolute believer in psychedelic assisted therapy. If you have some time, you can head to nofallenheroes.com. That's my nonprofit. We give grants to veterans, first responders, and their families to go heal using psychedelic assisted therapy. So it's like that Hair Club for Men commercial. I'm not only a member, I'm the president. Psychedelics saved and changed my life, and I came home and started a nonprofit to do the same thing. So go take a look at the names in the psychedelic space. If you want that report, shoot me an email. Other than that, I'm going to put a bomb right through the target, plus or minus 1 second. Thanks, David, for having me. I appreciate it, man, and I'll see you guys next time.
All right. Thanks, Matt.
You bet, my brother.
I'd love to see that report if you want to send me a copy too.
I will email it to you right now, my friend.
Awesome. Thank you.
See you.
All right. Thank you to Matt for being here. And let's see, we have several more live sessions to go today. So next up is Chris Sayer of BigTrends.com. Chris, are you there?
David, how are you?
I'm good. How are you?
Doing well, thank you, and thank you for having us.
Yeah, thanks for being here. So let's see, I'm just checking my setup. You should be able to share your screen now. And okay. Yeah.
All right,
And I see
seeing my
loading.
platform.
All right. Yeah, looks good.
Okay.
Right. Are you ready to start?
Sure, we can.
All right. All right. I'm going to start my recording and then you can start your analysis. So everyone enter your symbols for Chris. And I am recording again now.
Thank you, David. This is Chris Sayer with Big Trends. If you're not familiar with Big Trends was started by Price Headley in November of 1999. So that means we're over 26 years old. I was actually one of Price's clients. Shortly after he launched Big Trends, I have a background in the financial services industry, and I've been a member of Price and his team for almost 15 years. I joined Price and his team in September of 2011. Lead consultant here at Big Trends. What you're seeing right now is the Thinkorswim platform. It's one of the platforms that Price and our analyst team use. It's one that I've used for over a decade now. But to be a Big Trends client, you can use whatever trading platform that you'd like. We are known for options trading. What you're seeing here on the opening chart, the Qs are QQQ, which is the NASDAQ 100. You're seeing a daily chart. You're seeing the percent R indicator at the bottom that stands for percent range. And you're also seeing at the bottom DMI plus, DMI minus, and the ADX indicator with the yellow line being a 25 threshold there. Anybody have any names they'd like to share? Let me pull this up here and see what we get. Chat, here we go. Deck. Somebody wants to see Deck here. Let's go. Deckers Outdoors. So we are climbing, Steve, with Deckers. You see this indicator at the bottom. The top one is the percent R, stands for percent range. We do not have a buy signal based off percent R yet. You do see, though, that DMI plus, the second indicator here at the bottom, is above the 25. You see the gray ADX line climbing, DMI minus falling. So it is getting in a buy zone for this double indicator confirmation, but not quite there yet. Looks like if we get another day closing up here, we would fire the percent R long or buy signal. PLMR for Steve as well. Thank you, Steve, for participating. Palomar Holdings, it would on a long signal, Steve, based off percent R on the 10th, which I believe was Friday's opening. It went long. We are down from that percent R long signal, but just like the Deckers, you do see DMI plus being over 25 here. With the ADX climbing, which recommends trend strength. DMI minus is falling, which is a good thing when you're bullish. So this is definitely a stock that you could be long. It's not a recommendation. Obviously, you need to trade and invest with what fits in your financial situation, but it is looking good right here, Steve. So thank you for bringing it to our attention. Rob is asking about Fubo. So let's take a look at Fubo here. Fubo TV came off a short signal, so it went short based off percent R back on November 21st of 2025. If you go all the way back there, you do see the DMI minus red line getting above 25, ADX climbing. So ADX can climb in bearish phases and it can climb in bullish phases. It is an indicator to indicate trend strength. Okay. So sometimes people get a little hung up on that, but as long as you see ADX rising, and if it's rising with the red line again, which is the minus, that means it's a bearish phase. If it's rising with the green line, that means it's a bullish phase. And then you can see the short came off based off the percent R indicator last week on April 4th there. And you also got a little bump with the DMI plus over there. You see the crisscrossing with those. So I would say no position right now, Rob, on Fubo. Home Depot, thank you so much for sending that. Home Depot came off a short signal back on the 10th. So last Friday, it came off a short signal with percent R. Now, if you look down here, ADX had been climbing as Home Depot was falling, right? And you see the DMI minus indicating that weakness. Now, what you're seeing with the ADX here is that it is rolling over, indicating that that weakness is ending, that there's some basing or stability happening. And that's what we're seeing right now with Home Depot. So I apologize if I'm pronouncing the name incorrectly. Ara, then I would say no situation right now to go long or short Home Depot. You're quite welcome. Thank you. Anybody else? Please submit the names, or I'll just go down a list that I have over here on the side of very popular names on the Thinkorswim platform. You can see over here to the far left, they have a preloaded list, if you will, of any stock or ETF that has weekly options. And if you're newer to options, weekly options just mean options that expire every Friday. When I first started trading and investing almost 40 years ago, I'm 57, been doing this since I was 18. All we had were monthly options. Now we still have monthly options. Those are the options that expire the third Friday of the month. And then the exchange started creating weekly options in about 2005. And now we have some securities that have dailies. So it's just a fascinating industry. If you're not familiar with options, check us out, bigtrends.com. If you have any questions, give us a call. We're in the office Monday through Friday, 9 a.m. until 5:30 p.m. Eastern time. Rob is asking about silvers. Let's take a look at silver here. Covered a short based off percent R last Friday. You see that silver is trying to pop there. ADX is rolling over, so indicates that weakness is ending, and you see DMI plus is trying to climb, get a right above DMI minus here. So in a basing area there, Rob, with silver, so no position on silver. Nobody's asked, but the two lines that you see up on the upper part of the chart around the daily price movements, the yellow one is a 13 EMA exponential moving average, and the blue one is a 34 EMA exponential moving average. Let's look at a name here while we're waiting for others to submit ideas. This is NVIDIA, very popular name here. You can see that percent R went long on NVIDIA this morning. Based off the percent R indicator, you see the 13 EMA crossing above the 34. Within the last couple days, you see the DMI plus getting above 25, DMI minus falling, and you notice the ADX down here curling, starting to curl and rise, showing some strength here with NVIDIA. So this one's looking very good. We do have a newsletter that trades NVIDIA. It has two systems within that one newsletter. If you're interested in that, please check out our company and reach out to us. We'll be glad to discuss that with you. Here's a name that a lot of people trade as well, formerly known as Google. This is Alphabet. Everybody should know Alphabet. Went long percent R last Thursday, the 9th, based off percent R. Again, you see DMI plus getting above 25, DMI minus falling, and you see the ADX starting to base and rise, indicating strength here in Alphabet on that stock. Again, these are daily charts. Let's look at Apple, a name that we traded today in one of our other newsletters called AAA Options. Made a nice win on that today. It's an intraday system. Again, we're looking at daily charts. So based off the daily chart, we are in a hold or a no action area on Apple from a daily chart perspective. We are getting the percent R above this 80 threshold today. So if we would get another close above 80 tomorrow, it would fire a percent R long signal. You see the DMI plus coming down here, crossing the DMI minus. ADX has not turned or based or flattened out. So a little caution here, even if Apple were to throw a percent R long signal on tomorrow's close, be careful with that until this ADX starts showing a little support there as well. How about Microsoft? Name that's in the news quite a bit. Very similar chart there to Apple. You see that the percent R is rising. You see definitely the strength in the DMI plus, but you do notice down here ever so slightly that ADX is starting to flatten and turn. So if I had to pick between one or the other, between Apple and Microsoft, right now, I would lean toward Microsoft. Not an endorsement for you to go out and buy Microsoft right now. Just telling you what we see. That's what we're doing today, doing a little chart review. Please do not hesitate to throw other names into the chat box. Love looking at these names for you folks. Let's look at Amazon here. Look at this move in Amazon. Nice clean picture here of Amazon getting long last Friday morning based off percent R. Good example of DMI plus taking off above this yellow 25 threshold. You see DMI minus dropping and crossing DMI plus. And look at here, again, this is a good representation of trend strength. You see ADX basing out and curling up and rising itself. And as of today, it's at 24.56, if you will. If ADX gets above 25, that really indicates some really strong strength there. So Amazon's on a ripper right now. Again, not an endorsement to go out and buy it, but that's what's happening with those indicators on this daily chart with Amazon. Taiwan Semi went long this morning based off percent R. You see the little arrow up here at the open on Taiwan Semi. It does have earnings coming out. We typically don't like to trade or invest before earnings. So be careful. They have, as you can see, tomorrow morning they're coming out with earnings before the market opens. So be careful with that. Again, you see DMI plus rising, DMI minus falling, but ADX kind of basing out, but hasn't turned in an upward direction there on that. Rob's got another one for us. Rob, thank you for your participation today. CIFR. What we got here? Cipher Digital. Not familiar with that one, Rob and others, but percent R went long yesterday morning on that name. There you see percent R above this 80 threshold. You see very clearly DMI plus above 25, DMI minus is below 25, and ADX actually started rising back here on the 8th. So we have really nice trend strength here in Rob's Cipher. Not a recommendation for Rob or others to go out and buy it, just sharing what we see using these indicators today. How about Broadcom? Big move today in Broadcom, up 3%. Went long on that one on Friday morning as well. Look at the move in the DMI plus indicator. Look at ADX. As I was saying just a minute ago, when ADX gets above 25, which is that yellow line there, really strong trend strength is happening here in Broadcom. See that it's catching the move with all the indicators in place there. Again, not a recommendation for you to go out and buy Broadcom, but that is what's happening there. Here's Meta. No signal on Meta currently. You do see that percent R is above 80. We need another close up above there. We will probably, if it holds, get a buy signal tomorrow morning on Meta platforms off the percent R indicator. Again, you're starting to see these names with the DMI plus rising. Look at how hard DMI minus is falling. ADX is based out a little bit, and it's trying to get back up above that 25 threshold. Anybody got any other names? Here's Tesla. Here's a name, as you can see, he's been on a downward slope. Okay, on a downward slope here, starting to rally a little bit, but in no signal here. Okay, no signal here on Tesla. It's in between the thresholds on percent R. Yes, DMI plus is rising and DMI minus is falling, but look at that ADX. It's rolling over as well. It's not even starting to base with what's happening there. KMI, is that Kinder Morgan there? If I remember correctly, yes, it is. Went short. Here we go. Went short this morning on Kinder. Why? Because this time percent R is below the 20 threshold. So it fired a short signal this morning on Kinder. You see the confirmation with the DMI minus now above 25, and you see DMI plus rolling over and getting below the 25, and ADX basing out and starting to rise again. ADX is a trend strength indicator. So it can, you want it to go up if you're short, you want it to go up if you're long. Okay. Some people get confused with that. So now that we have a short signal here, we want to see ADX continuing to rise as well as DMI minus continuing to rise as well if Kinder were to keep falling. Thank you, Aria. How about Walmart? This is a name that surprised a lot of people in the past year or so. It looks like it's kind of been chopping and basing here. No signal on Walmart. Let's zoom it out a little bit here. You see it fired a % R long signal last Thursday, got stopped out yesterday morning on that long signal based off % R. And then you notice DMI minus is now above this 25. Now, we would not get a full short signal until the % R indicator got below that 20 threshold for a few days. So we're in no action area here on Walmart. What do we got here? This is the S&P 500. It's an ETF by Vanguard, VOO. You see that trading the S&P, went long yesterday morning on the Vanguard S&P 500 ETF. Got the % R, multiple closes above 80. You see ADX is rolling over and starting to flatten out a little bit. Why was ADX rising? Because we had all this fall, right? So now we're looking for some stability in the ADX indicator. We're getting the jumped with the DMI plus. It's above 25, and you see DMI minus is dropping, not quite below 25 yet at 25.52 as of right now. With the S&P, JP Morgan had earnings today, I believe it was. Yes, yesterday. Had earnings yesterday. You can see that there with the icons on Thinkorswim. Went long yesterday morning on JP Morgan with the % R indicator. You see DMI plus above 25. You see DMI minus dropping. You do see ADX was rising into that earnings announcement, and now it's curling down a little bit. Okay, now it's curling down a little bit. So you want to watch this one real closely. How about Eli Lilly? No action here, but in my opinion, it's getting close to a short signal. It was on a short signal back here, March 6th. Covered that short on April 2nd based off the % R indicator. And if we get another close, today it looks like we're going to close below 20, currently trading at 19.86 there on % R on Lilly. So we would need multiple day closes below 20 there. But we do see DMI minus rising above this 25 level, DMI plus dropping, but ADX is trying to turn again, confirming that downward strength there. So keep an eye on the Eli Lilly. If you're someone that likes to go short or maybe buy puts, but not a recommendation, just an observation. This is another ETF that tracks the S&P 500, so we're not going to do that. SPY is the most popular. Not going to do that. How about ExxonMobil? Oils have been in the news quite a bit, right, with the conflict in Iran. So fired a short signal on ExxonMobil this morning based off the % R indicator. You see that right there with the little arrow at the open this morning getting short. You see the multiple closes below the 20 threshold here on % R. Very clearly, you see DMI minus rising, DMI plus dropping. The action happened right around what I consider that key threshold of 25, which is that yellow line. And hidden in there is the gray ADX line showing some stability. But again, we would want that to turn up and move in an upward direction if we wanted ExxonMobil to fall. Visa in no action area here. We see this. No % R in between our two key thresholds for long and shorts. We see the crossing of DMI plus and minus down there at the bottom, but both of them still below that 25 threshold, which I consider a key level. So no action here on Visa. Johnson & Johnson had earnings yesterday or this morning. Let's see when that was. Yesterday. Had earnings yesterday. It too is in no action area, although we're starting to get a little indication of maybe a fall in Johnson & Johnson stock price. We've got the DMI minus trending above the 25 threshold, but DMI plus is trying to hang in there. All right. And you see ADX is not turning in an upward direction to confirm a downtrend. So a lot of noise here with the DMI plus minus and ADX, and that's well represented here with the percent R indicator in between the two key thresholds on Johnson & Johnson. ASML down 6% today. Interesting, right? Earnings before the market today, so had a little earnings announcement. Now, although percent R says it would have gotten long this morning, this is not a signal that we would have taken here at Big Trends. We do not trade earnings announcements, so I'm just showing you a reaction to what the indicator would say. So it would have told you to get long this morning based off that earnings announcement. You see DMI plus and minus, but see how DMI minus is up above 25 here? To me, this is noisy action. ADX not confirming any trend strength, even to the upside. So like putting all those pieces together in the puzzle. Anybody, I love, again, I've been here at Big Trends almost 15 years, been trading and investing for almost 40 years. One of the joys of my job here at Big Trends is getting to know our clients on an individual basis. Cannot give individual recommendations, of course, but love getting to know how clients trade and how we can assist in that process. Are any of you, one, using the Thinkorswim platform? If not, what platform are you using? And two, are you using any of the indicators that I'm sharing with you today? Hey, Pat, good to see you. Thank you for your request. I believe that's Nokia, right? NOK. And Pat says, please. And of course, Pat, you're quite welcome. So Nokia, yes. So Pat, Nokia went long percent R back on the 7th. Okay, back on the 7th of April. You see that based off percent R. You see, this is a good representation, Pat, and others. See how DMI minus is staying below 25 and the DMI plus is above 25, just riding this trend. ADX is turning up. Caught a long signal back here with percent R and the other indicators as well back on February 10th. Closed that out on March 20th and then came right back into it, as I said, on April 7th. So given all the pieces of the puzzle there, Pat, would be a hold on Nokia, would not go chasing it right here. So thank you again, Pat, for submitting your Nokia question. Where were we? We're at ASML. Let's look at Micron Technology. No signal here, but getting close to a percent R signal. Had percent R above 80 yesterday. We're currently holding above 80 right now. May fire a buy signal tomorrow morning, but you can see we're running into this resistance over here. You do see DMI minus dropping and dropping hard. DMI plus rallying and ADX turning to a higher direction. So we're starting to get some trend strength here. We would definitely like to see that percent R confirmation if it fires tomorrow morning. Again, not a recommendation to go buy Micron, just one to consider. Here's Oracle. Got closed out on a short yesterday. Obviously, that was a losing trade based off percent R. You see the short was here, closed out up here. So nothing's 100%, right? If you've been trading or investing for any length of time, you know it's not going to be perfect. But look at all the shorts that it caught as it was falling here. But this last one so far did not work out. Now, we are getting the percent R above the 80 threshold. We are see DMI plus above 25. You see the minus dropping below 25. And we've got ADX turning up. So we're starting to see some basing and trend strength here in Oracle. How about MasterCard? Going to look at MasterCard. Very similar action, right? You've got percent R climbing above 80. You've got DMI bumping its head up above 25 today. You've got DMI minus going below 25, but ADX is still dropping. You see that right there, that gray line that I highlighted, still dropping. Now, I want to throw something up real quickly for you here. Can you all see my slides? Can you all see what I have there on the screen? What I have here on the screen for you is to thank you for attending today's session, that I'm doing something special for you. Let me get that up there. Where is that? It's not there.
Yeah. I'm still okay. Now I'm seeing.
We good? Great. All
Yeah.
right. Love the technology. So to thank you for attending today's session, I'm doing something special for you. So if you're one of the first 100 traders to act, then you can get access to a very exclusive coaching series. Okay. So Price Headley, again, is our founder and CEO. Price is a CFA. He holds the CMT, Chartered Market Technician, Chartered Financial Analyst. He's got a book, Big Trends in Trading. Again, we've been around for more than 26 years. Today, if you're one of the first 100 folks to go to the link that David and I are going to give you here in just a second, you can get this 10-session video training. You'll get a dedicated email address to our analyst team. You'll be able to have unlimited access to all 10 sessions from any device in high definition video. And we also make access to the slides. How do you take advantage of it? Well, we call the package the Technical Analysis Techniques. It's a 10-session high definition video training series for $1,970. Marking that out today. Since you're a part of David and his team's Timing Research event today for the first 100 traders, you get it for free, ladies and gentlemen. That's right. Tax day, right? Tax day is not free, but this is when you go to TimingResearch.com/big trends. Okay. TimingResearch.com/big trends. David, thank you for putting that in there. I'm going to throw our contact information in there as well. Should you all need to contact us, again, we're here in the office Monday through Friday, 9 a.m. until 5:30 p.m. Eastern time. We're based in Lexington, Kentucky. So don't forget to go get your free 10 video training course. It'll reside in your Big Trends account. You'll have unlimited access to it. You'll get a welcome email. In that welcome email will be that dedicated email address that you can contact Price and our analyst team should you have any questions about the content in those 10. Let me take that back here for you. Let's do this. Let's go in reverse. There you go. There's the 10 courses that you'll get access to: percent R, percent range, big trends bands, acceleration bands. Now, I talked about these today, this today, and this today. Okay. All right. So you're going to get access to all of that for sharing your time with me, with David and his team today. So remember, it's TimingResearch.com/big trends, all for yours today. Now let's jump back into the charts real quickly. I believe I've got about 2 or 3 minutes left. So there's MasterCard. Let's look at Costco here. We got Costco, no action area. We do see that the DMI minus is popping above this 25 threshold. ADX is trying to climb a little bit, at least stabilize. It came off a long signal yesterday, which would have been a loss off the percent R long signal. We had a touch here below the 20 threshold, but today we're bouncing off that. So we would need to see consecutive closes below that 20 threshold. How about AMD? Look at that move there. Not one to chase here, but this is a clear representation of trend strength. So percent R fired a signal back on April 7th, right? You see DMI plus, the green line, well above the 25 threshold. DMI minus diving, which also indicates that trend strength is to the upside. And look at this ADX, folks. ADX is just ramping. And as I taught you earlier, when it too gets above 25 with the DMI plus, super, super strong upside streak there. Not a recommendation to go buy AMD, just showing you the power of the combination of these indicators. We looked at the Qs earlier, I believe. Did we look at the Qs earlier? I can't remember. NASDAQ 100, there's that. How about Bank of America? I believe they had earnings this morning. That's right. Yes, they had earnings this morning. Again, we would have not gotten long Bank of America prior to earnings. You see that percent R did pick up on the upside action, as well as DMI plus minus dropping hard, ADX climbing. And again, it is above the 25 threshold as well for ADX. Chevron, I got a feeling it's going to look like Exxon that we did earlier. I think Exxon, we had a short signal. Exxon will probably fire one tomorrow morning, given the action that we've seen there. You see DMI plus dropping. You see DMI minus rising and being here above 25. ADX is diving. It hasn't stabilized and started to turn to the upside to show that strength to the downside there. So Chevron is in no action area. David, I got about 30 seconds left.
Yeah.
Okay, I don't see any more names that people have thrown in there. So again, folks, check us out. Go to TimingResearch.com/big trends. TimingResearch.com/big trends to get your free 10 video training series worth $1,970. Our compliments for you. I don't know if I have time to do Oxy. Let me throw it in here real quickly, I should say. No action there. Dow 60 on Oxy. We haven't even gotten below the 20 threshold here on %R. We do see DMI minus rising, DMI plus diving. ADX is diving. So to confirm a strong downtrend, we would need to see that stabilize and move to the upside. But we need more closes below 20 to get the full complement of indicators there. Dow 60. All right, it's 2:30, David. I'm getting off the air.
All right.
Thank you.
Thanks, Chris. Thanks
Thank
for your
you.
analysis. Thank you for being here.
Thank you.
All right. Thank you to Chris Sayer of BigTrends.com for being here. So yeah, go to TimingResearch.com/BigTrends to get your free course from them. And next up is Norman Hallett. Norman, are you there?
Yeah, I'm just catching my breath. I'm out of breath by listening to Chris. He's a powerful presenter there.
Yeah. Yeah. You should be able to share your screen and get set up. Yeah.
Okay, let's take a look.
And actually, I had a cancellation in the session after you, so if you want to take some extra time,
well, I think we can.
You're welcome to, or I have a different educational thing I can play if you.
Well, let's see how it's going. I do have.
Oh, and then also I was going to tell the audience. Then Jim, the option professor, will be here at 3:30, and then Harry Boxer will close out the day for us at 4 p.m. Eastern time. So, all right, Norman, I see your charts now.
Can you hear me okay?
Yes, sounds good.
Very good. Let's see. Let me open the chat now. Everybody, I'll go ahead and take a look at some things. Oxy, I guess that was from the. I deal in commodities. I deal in the futures market. So my analysis will be certainly the S&P, the Dow even has a nice contract, and the NYM, the Nasdaq, and so on. We can take a look at that. I have a little bit more basic view of things. I have relatively few indicators and believe that some of the normal indicators that you see in a certain combination is enough to get you into trades that have real potential. So that's kind of the way I look at it. And so I'd like to, if you've got any commodities or currencies that you're trading, let me know and I will take a look for you. I also have a bent toward prop trading recently in the last really couple of years. Written a book recently on prop trading that I'll show you that a little bit at the end if you'd like to take a look at that on Amazon. But the idea is that I try to keep things simple. I think a lot of the old strategies are the way to go, even in new time. So I'll be kind of adhering to that. I will be, and I'll kind of show you why I think the simplicity works as we go along. So if there's anybody out there that that has a commodity they'd like me to take a look at, I will do that. But let's get started with what I believe is probably what most people trade if they're trading futures right now. And this is the S&P contract. It's actually the micro, which a lot of the smaller traders trade, but if it's totally reflective of what's going on in the larger ES contract. And it really is an exact copy for all intents and purposes because of the fact that there's so much volume in the smaller contracts. Some of the smaller contracts like the QM, which is the half contract of crude, is not necessarily indicative tick for tick of the CL contract, the large contract in crude, but you certainly can get. So many times I'll be trading the larger contract, but still be looking at the MES, the micro chart, because it's telling us really the same thing. It really is identical. So let's take a look at this. I'm looking here at the, as a day trader, I'm looking at the 5. But let's look at, and give you my general impression here, because before I look at any day chart, any day trading type chart, whether I'm trading the 5-minute candle or the 2-minute candle or the 10-minute candle, I always look first at the daily. I call it an undertow. I believe that what you're looking at in the daily is going to influence all of the lesser time frames, and it can do that. In fact, any trading plan that you've likely ever seen. I know I've written books on trading plans, and I would have to say, I say with authority that any trading plan that's constructed well is going to be most accurate in the longer the time frame, the more accurate it is. In other words, the daily chart that we're looking at right now is more of a indicator of accuracy in its daily chart environment than the 5-minute, say, would be in the same commodity, in this case the ES or the MES. So I take a look at the longer chart for what I call the undertow, because it will influence on a general basis what's going on in all of the lesser timed contracts. So, I mean, here you're seeing something that is really at another crux point, another checkpoint. You're looking here at really hanging right at these the resistance level here, and a picture in this particular case, it always is 1,000 words in technical trading, but you can, and I will do that, you can draw a line that really defines what's going on right here. I mean, I just put it on there, and look at how we're adhering to that as far as a resistance level. So nothing to do, of course, right now, probably nothing to do at the end of the day. If you're a day trader, or if you're a more of a position or swing trader, you've already missed the boat. But I will say, I will show you a few things in this chart that as a trader, and using our loaded gun simple trading plan, which is which you probably have heard of if you've done any kind of trading. It's talked about a lot. It came out about 4 or 5 years ago, and I want to show you one of the triggers, one of the original triggers of the loaded gun simple trading plan that really gave it its name. And I'm going to show you how it operates in this particular environment. Here is the loaded gun signal. I think you can see it here. It really is just two candles. It has nothing to do with here, it has nothing to do with here. It only is observing 2 candles in a row. The first candle is a small body. The second candle is a strong movement, what I call an extension candle through the 8-bar exponential moving average. This is the 8-bar exponential moving average. And when you have an indecision candle, this first candle I call the indecision candle. This second candle I call the extension candle. So, sorry, probably don't need to see that, right? The extension candle. So when you have a hesitation where a small body, meaning you really don't, the market really doesn't know what was it going to do this day. This is a daily chart. It was indecision. It was trying to decide which way to go, at least to a large degree that day. Well, the next day it went from underneath the 8 through the 8 and closed above the 8 with some strengths. This is a loaded gun signal. And I call it a loaded gun because this is the barrel of the gun. This is kind of where the trigger would be, and the barrel of the gun is pointing higher. That's where we get, my wife hates the name, but I thought it kind of looked like one, and it was exciting to listen to, I guess, for some people. So I named it the loaded gun trigger. Well, this trigger, it can be very accurate. Here it is again in a larger form. You can see this is a larger hesitation, but a much stronger movement higher. I don't like to. I like to see this extension candle at least several times as big as the body. The more difference, the more I like the formation. So if you look at this, you've got this is telling you we're going higher by that measure. This is we're going higher. Now I'm looking here also at this is the 34 EMA. The 34 EMA is interesting because I look at it as a guardrail, and when I construct in my own trading plan, and when I coach traders who come to me after a losing streak of years, months, years, even decades of losing, I explain to them that you need to put the edges on your side. And a huge edge that you can have is when you have a shorter term moving average above a longer term moving averages. Now, average. So, I mean, you've probably heard of the 20 and the 50, or the 50 and the 100, and the golden cross and whatever, when those things cross and so on. I'm not talking to you now about crosses, and I'm not even talking to you about specific higher and lower numbers, although the 8-bar moving average EMA is really something that we've always called the golden mean. So I like using that. Some will argue with me that it's the 9. I like the 8. And I use the 34. You can use the 50 here. You can use the 20 here. But the idea is that I like the Fibonacci number. I have a certain respect for it, although I seldom draw the Fibonacci retracements on my screen. I generally don't need them in the way that I trade. But so what you're looking for, the first thing that you're looking for is the and I'm going into this explanation for you just so that I'm not seeing anybody request any particular market to, so I might as well teach you something, or at least teach you what I think could help you here. So I only take long trades when the shorter term moving average is above the longer term moving average. And I will only take short trades when the short term moving average is below the longer term moving average. Okay. A lot of times when you get these crosses, you're going to get chopped up. So I look for an established trend when I can, look for an established trend and a loaded gun signal within that established trend. This is one right here. Okay. And this is, we don't have quite the established trend here, but well, let's see what it looks like. This is pretty damn established up to this point. So I'm focusing on this one here because it's the first one I pointed out. The size of the bar compared to the others doesn't matter, except for I don't like it to be the smallest or one of the smallest. This is a sizable, it's the same, pretty much the same or bigger than, except for this one here, of most of these previous. So this is a take, okay? And when I say it's a take, I always wait for the close. People say, well, should I get in one? No. In the candlestick analysis, you really need to wait for a close. Otherwise, you're playing with fire. Okay, so in general, I'm looking at a buy here. I wait for this candle close, and I buy the first tick, as close to the first tick as I can in the next forming candle. And I stay in that. I stay in it until we have 2 consecutive closes below the 8. Okay, or we cross the 8, or we cross, or we cross the 34 as another stop. So I'm in here. I'm riding it here nicely. You know, this may concern some, but why? It hasn't closed there. So again, we're people that wait for the close. If you're with me, here you have one close below. Okay, and looking for 2 consecutive closes. We may be taking our profit here, but no, we have another close here above. So we're here. Here's one close. Now this one, when I say that, now you're moving, I can't give you my entire loaded gun simple trading plan because I'll give you some of how I get in, but a lot of the importance is where I get out. And here there are some ways to defend going up, but you know, when you're crossing these moving averages and you're losing, you should be out at least here. But we would have been out before that. Not important for you to know why in this particular juncture. But I just wanted to show you the value of a trigger like this. Let's take a look at, and we've got, this is another trigger. All right, here we have it again, small body crossing the 8. Really like this when it's after an accumulation like this, and we have what we call a squeeze between the moving averages. So this would have been a take for me, would have been a nice trade. This would have been a take for me. And it likely would have, well, I don't know if it would have broken this. I don't think it would have been. It would have been a scare, but we don't get scared because we don't take that big a position when you have the ability to really move like this. Here's another loaded gun type signal, a small one, so you would take a minor position, but you would have done well. Would have been out here, and now you've got a mess. So again, here's a loaded gun signal, but I'm not taking it. Why? I don't go short. Why? Because the 8 is above the 34, right? So there's no trades in here. I'm seeing nothing here. This is one that I wouldn't take, although if you did, you would have made money. Here's one right here that I like. This is a take, but you wouldn't want to ask for any more than this particular resistance here. So, right, if you were long here, you wouldn't take it because you don't have much of potential here before. One of the things I like to stress is that you really need to honor, especially strong situations like this. So here we have a top. So to answer the question of the day here, which where are we going? Well, the answer is I don't know. Okay, and that's the only educated answer I think somebody could. We can argue geopolitics, but it's not going to help anybody. You're looking at a very strong ceiling right here. We're at that ceiling right now. So where it goes, only the future bars will tell. But if I were trading, but let me give you now a little less. I'm continuing to look at the if you want to look at copper or gold or whatever, I'll do that. But I'll just keep talking unless you stop me. But remember, I said I look at this chart, the daily chart, before I go to the 5-minute or 2-minute chart that I like to trade. So I use the same analysis, but here we have a trend. I mean, look, the trend is your friend. You can see that a lack of trend is not your friend. You know, this is, once you get to this point where you have a cross, this right here from here to here is, I'm not going to say it's free money, but it's high probability money. So right in here, you know, I'm looking here at, if I was trading any of these days here, the last couple of days, I would be favoring the long side. What does that mean as a day trader? It means the fact that I would have a higher position value. In other words, I would take on more contracts if I was going long in the short-term chart than going short. Why? Because the undertow, what's going on here in the daily chart, is showing us higher over the next few days, or the last few days. Next few days, right now, I don't know. So I have no opinion, and really neither should you. I don't think. Go ahead and have your opinion. It's okay with me. Let me show you what this same chart looks like in the 5-minute. So now we have a tendency to want to go long in this, just not because I'm seeing what happened today, but because I've just shown you that this trend, the daily trend was long, and now you really want to favor the long side. So let's take a look at what we have here. Look at this, interesting. Okay, isn't that a nice loaded gun signal right here, right? You have I don't pay much attention to tails, believe it or not, and neither did the Japanese when they were using when they were formulating the candle system. But I do give it some credence at the bottom of runs and the top of runs. I think a lot of mistakes that traders make is that wherever you see a long tail like this, it means it will go, in this case, goes higher. It did happen, but really the Japanese said it needs to be at the top of a run, or this, for instance, would have more value. You have several tails here, but let's not get into tails because I pretty much ignore them. Well, I'm talking about the bodies here. Here's a very small body. Look at that, followed by a nice strong body through the 8. All I'm looking for. Following the trend, really like it. So if I said to myself in the beginning of the day that I'm taking anywhere from 2 to 6 micro contracts today in the micro S&P, this would be at least a 3 or a 4. Why? Because it's with the trend. It's a strong. It's a strong, very small body here means that in this 5-minute period, people just didn't know what to do. during that 5-minute period, it opened and it closed. But then they decided, okay, when you take a trade like this, you want to put your stop in a reasonable place under this formation. I usually put it under the loaded gun formation. These two candles, the lower of where that formation ends. And so you would have been in this again. Remember, I talked about when you're in. Now you've got your stop down here, and now we're looking for 2 closes below. No, we're back to 2 consecutive closes below. 1 consecutive close below. Okay, 1 consecutive close below, 2 consecutive close below. I would be out here. Okay, now what's interesting, I would be out here because I would be if you were new to my system, because I'd want you to follow the rules. Once you start to get better at analyzing and winning, once you are on a winning streak, then I can talk to you about a nuance that you can use in here that may have kept you in, but it's not important. The best thing to do is follow a tested, proven trading plan. That would be here and you would get out at the second close. Yes, it's a green candle. Maybe it looks like it's going up. I don't care. 2 closes below the 8, I'm out. And what did you do? Sure, you left this behind, but you would have probably stayed in for this. And you know, in this time, in this half hour, you could have found another trade in another market. Okay, so we would have had a pretty good day today if I was trading based on the tendency. Let's look at the 2. If you look at the 2, is anybody enjoying this? Just looking at, you can at least say yes if you want. Here's the 2. This would have been a nice take, right? Very small, one side of the 8, nice movement higher. You'd be going long here on the next candle. That's a nice move, isn't it? And you'd still be in it. Look at that. Here's another. Here's one that you may have taken. It would not have worked out, but you may not have taken if you were being coached under me, because you don't want to fight such a near-term high right here. But even if you did, you would actually, in our system, be out here. So you would have had a very small loss. Let's take a look. Oh, look at this. This is interesting. A nice loaded gun signal. So I think you know, you can. We have other signals to get you in and out. But the idea is, I wanted to show you the value of the system that we kind of named after. Let me show you some of the markets I'm looking at, since I'm not seeing anybody that is suggesting that I look at any particular charts. The crude oil has to be looked at right here. There's a small. You can take a look at a loaded gun signal here that worked pretty well. Another one here that looked fairly well. You know, and this is what the daily. So of course we're in an uptrend here, and you can see how we seem to be holding the 34 here. I kind of like the Fibonacci. If you had a 50, it would probably be here. The 50. This is the 34 EMA. So both would have kind of held you in if you're somebody like me that likes to get in and out on a closing basis if your stop is not hit. So we're in a tentative situation right here, I think, but it looks like there's a lot of interest in sticking with this area right here because of all this accumulation and commitment on a daily basis. And if you look at the news, there's still a lot of what the heck's going to happen next in the news. Here's the 5 minutes. So if we looked at, again, if we looked at the daily, we're really not sure. I don't have a favor one way or the other, but I would probably be looking long. I think we've probably had enough correction, and we may be looking long, but what have you? We'll see. Looks like on the day trading basis, it looks like we've been held really nicely here. This is the 5 minute chart. You can see that this is a beautiful loaded gun signal on the short side. See what I mean? Small breakthrough the 8 and really nice run. Again, big. Don't be afraid of big candles, ladies and gentlemen. They give you the big moves. We also scalp. We scalp half our positions, and we measure what we want to scalp based on a certain mathematical formula that I give you based on the length of the extension candle. So the longer the candle, the more we ask on a scalp. The shorter the candle, the shorter we ask on a scalp. This is another loaded gun signal. This is straddling, which is good enough. Movement through the 8. Look at this nice movement here. So I hope you take that into consideration in your own trading. Let's take a look at this is the crude. Let's look at the 2. Again, these are big moves. So you may want to use the QM or the micros. Here's a look at this. Here's a loaded gun signal. You've got the 8 below the 34. If you're using the 34, the 20, or the 30, or the 50, you'd still be you don't want to deviate from the 8 or the 9, whatever you want to use. But here's a small candle. movement through the 8, even you got a little tail if you're into that, and boom, you got a nice movement here. Here's another one that is pretty good, but I don't want to talk to you about that because I've already described it being above, and you may have gotten in here, but that's another discussion. Here's another, just by this basic rules that I've given you, you would have gotten in and you would have gotten your scalp, and that's about it. Here's another one. Look right at the cross. It's a beautiful thing. The bigger the squeeze, the closer the squeeze, the better. Look at this run. So, what do I think here? I think nothing. I think that you have to trade in the short term, and you can't favor one side or the other. But I do think that my personal opinion, and it means nothing except for coming from experience on the daily chart. If you're looking to take advantage of a more broad, if you've been long the S&P, I'm sorry, that's the crude. Let's look at the S&P again. Because I'm kind of running out of time, and I think really kind of the lack of, if anybody asks, I'm going to leave it to you, David, to fill in the next time from 3:30. This is the MES here, so let's take a look. Again, that daily chart, if I were, hey, listen, if I were in this and I was really worried when this happened, and now I've got it back, and now you're up against, I would be peeling off part of the general investment that you made in the general markets. If you're if you're in the SPY or whatever, I think you really want to peel some off here, because you got very lucky here, I believe, and you never know if luck is going to continue. But if you're dying to be long, keep 30 positions if you have to. But I'd be out of most or all here, waiting for a new direction. That would be my advice to you. I mean, the problem is imagination. It's funny. It makes a cloudy day sunny, makes a bee think of honey, but not necessarily in trading. Imagination will kind of kill you. Anticipation is okay. In other words, by anticipating that something is going to happen and then putting in orders to meet that anticipation, if it does happen, that's good anticipation. And one other thing that I'll show you real quick that I've noticed here, when you see an accumulation like this, I'm going to call, I'm not counting this because we broke it, but if you start here, that's my dog, the mailman. If you start here and you see this accumulation, and then you see a breakdown like this, if you wonder how far this breakdown can go, you're selling here and you're wondering how far it can go. An old trick we used to use is measure the horizontal length of the accumulation, and bring that same horizontal length, make it vertical. And you can see this is pretty darn accurate to what you can expect to exhaust this run. So this accumulation, if you had a compass, and that's what we used to have, we used to put our pin here on the compass when we had paper charts we traded from before computers. Put your pin here and you put your pencil here, and you just swing the pencil down. You would have been pretty accurate on. I always used 70 or 80% of that measure, and you really would have been very accurate. So if you're already wondering where to put your limits, if I was short here and got short in here, my first limit sell would have been right above this area, right? I never asked for the entire, you've got movement here, you've got support here, right in here. It's a pretty much low hanging fruit. I'd be taking my first chunk out here. And if we broke here, then I would be using 70% of this accumulation swung down probably in here. And then I would go for what I call lewd and lascivious for the remaining couple of contracts. If I had 5 or 6 on, maybe I'd only have 1 left. I'm really a bird in the hand kind of person, because in commodities, in the futures market, 1 contract can get you a lot of juice. So there's no reason to overplay your hand in that particular way. I do want to recommend or suggest or beg you, not beg you, but give you a suggestion. This is a book I just wrote last October. It's got really good reviews, as you see. And it's about, if you haven't tried prop trading, and you may want to consider that, where you use their money and you get the profit. In many of the firms, 90% of it, some 100% in the first couple of 10 or 20,000 that you make. And they do that because most traders are not successful prop traders. You still have to trade. You still have to be successful in trading. And it's no different here than anywhere else. It's just that you're paying fees along the way to test. So I explained it all in the book, the positives and negatives, but how to cash in on prop trading. So if you look up my name, Norman Howlett, or if you can remember the title, Their Money, Your Profit, you can go ahead and check out the book. It's only 13 bucks. And it's only $5 for Kindle people. So you can, and I see, thank you. I appreciate that link. You buy the book, and please do leave a review. Be honest about it. Unless you don't like it, then don't be quite as honest, maybe. But don't, you still want to go to heaven. So don't do something else with your time. You don't need to review things and be negative. Although, unless you really hate it, then go ahead and do it and protect people from buying the book. But I think you're going to really like it. All right. Thank you, David. Appreciate the opportunity to present, and really always enjoy being helpful.
All right, thanks.
Anthony.
Thanks, Norman. Yeah, great analysis. So thank you for being here. Yeah, everyone check out Norman's book there. And me.
I saw Wally almost stayed. Was he thinking about it?
Oh yeah, he was on a few hours ago. So yeah, I think he was listening in to a few of the other.
He's probably sleeping. Probably, But I take a nap right after these things. All right, David.
All right. Thanks, Norman. Okay. All right. So I had a cancellation in this spot. But I just talked to Jim, the option professor. He's logging in now. And he might actually do a full hour of analysis and looking at the charts you request. And then Harry Boxer will be here at 4 p.m. to close out the day for us. So. All right, Jim's logging in now. Jim,
yes,
yeah, okay.
I'm right here now. I'm just had a couple of things I had to do here. Okay, and I have to open this thing up and put my chart up, and then I can share, and we'll be all set. Where are you? Here you are.
Oh, there's some background noise. Is there like a TV on or something?
There is a TV on. It's called Bloomberg. Nobody wants to hear Bloomberg in the background? They got a lot of smart things to say. I'll just turn it off. That's the easiest way to kill Bloomberg. Turn them off. Better?
Yes.
All right. So now let's go to share screen. And now let's go to share screen. And then we should be rolling. And are we okay there now?
All right. Yeah, looks good. So everyone enter your symbols and
we'll get started because we got a lot to talk about here, guys. How about all-time highs in different sectors? And some stuff has already moved and some might move. And so we got a lot to talk about. And then, of course, we want to talk about your stuff. So please get those symbols up there and we will start talking about those. But before we get started, give you some time to figure out what symbols you want to look at. Let me talk about the market real quick and give you a little insight on what's going on right now. We're going to use the S&P 500 as a guide here. And you all can see that, I hope, very well. And so basically you can see on the S&P 500, we've gone up there and made a new high to here today. RSI, as you can see, is up there very nicely as well. You can also see on the weekly graph that it's breaking out to the upside as well. And you can see from the 20-year graph, it is up there testing the high again. Now on the RSI here, the thing you have to remember is last time we were up in this neighborhood on a long-term chart, we're at 75 RSI, and right now we are at 62. So that's a divergence, and that's not good. So if for whatever reason it has trouble up here because the news changes and it rolls over, and if it ever takes out 6,500, you can see how that would be a big mess, because then you'd have a double top up here with a divergence. And if you took out 6,500 for whatever reason, it could give you the nice big drop down to 5,700 that some people think could still happen. So keep that in mind as you look at the markets. Now, what I'd also like to do is give you, but also on this RSI, to be clear, if it's just starting out here and it's going to go up towards 75 or 80, then this thing is going to be jamming up here through the roof. Now, so that's why, I'm not saying this is a double top, but I'm just trying to say there is a divergence up here. Let's look at anything else that might be telling us there's a divergence. Up here, all the RSIs were in the 60s, 60s, 60s. And right now this RSI is in 60s. So we have history that on the weekly graphs, when the RSI got up into this neighborhood, that it did pull back. You got a big traffic jam on the moving averages right in here at around 6,700 to 6,800. So right in there, that's where all the averages are. And we're now a couple $100 above that. So that would be called extended by any measure. But like I say, if it's going to just scream out of here, that's one thing. But if the news were to change at all, this is the neighborhood that they could have some vulnerability. Because of why? Because it's hitting the high area again, and the RSI is lagging, which is an indicator of exhaustion. Okay, now let's talk about the 1-year graph. 1-year graph, all of these high points were in the 60s pretty much, 60s, 60s, right around the high 50s, 60s. And now we're up here, and I would imagine we're higher at 70. So that's very positive because the RSI is making a new high as we're speaking. So that's not bad. On the 1-month graph, again, everything's all systems go. You got a big gap down here. You got a gap way down here. Of course, that would be the breakaway gap. That would be the runaway gap. And then maybe we could have an exhaustion gap. But we're up here to 89 on the RSI on the monthly, which in my world is a 120-minute graph. And up here, your RSI was around 76. And so it's made newer highs. Now, let's look at our 30-minute graph, because, a lot of you guys are short-term traders. So you want to see if this thing is losing steam or not. So over here, the RSI was 89, right? Now we're way up here. RSI is 82, 85, still very strong. And up here, your RSI is at 82. So there's no big divergence here. There's nothing really showing you anything. And again, if you're a short-term trader, you'd at least want that red line pointing down before you got any kind of friskiness about selling it, because you would like some moving average to be telling you you might be right. And again, right now you got 69.50 as a support zone. So this thing looks like it is very, very strong here. And, there's no question about it. Of course, if you've gone to the seminars that I've been giving on the options, we made that very clear when we were down here in this neighborhood, because you see, when you revert back to my long-term average, that can be about as far as it's going to go. Now, once we reverted back there, and the news on the market on the war was still bad, yet the market was not making any lower lows, and the red line was turning up, that's a pretty good evidence that you want to get on the buy side of some of these things. And again, right now, people wondering, because I have people who ask me all the time, how can the market be going up when we have a war? How can the market be going up when oil's at $100 a barrel? Very simply, because the focus has turned from what? From a war that is going to end sometime and a passage that is going to open at some point, to the reality is that we have 4% and change unemployment, so everyone is working. The wages are going up very nicely. You've also got tax refunds coming in, and you've got tax credits and all that out there. And you have got the possibility, because just imagine if oil were to go back down towards 70. What would that do to the inflation rate? It would collapse the inflation rate, because outside of food and energy, there is no inflation. You just saw that with the producer prices. So imagine if they cut interest rates in the second half of the year and you get earnings up 17% or better. And you got a consumer that's been indoors freezing his butt off in most of the country, and now he's got spring and summer. You don't think they're going to go out and spend money? So obviously that's a huge backdrop of a tailwind, and that's what people are focusing on now. And the earnings are coming out very, very strong on banks, and they're expected to be strong across the board. And the investment is continuing. We just had a big deal with ASML where they're putting all kinds of money into it. You had a big deal with Bloom Energy. So there's still, there's $650 billion worth of CapEx coming. I mean, that's a lot of money. You're going to stand in front of that? I don't think so. So again, that's why we're going up here, because the focus now is on everyone's working. They're going to spend money. Earnings are going to be there. And it's even possibility that interest rates may drop. Many of you might not understand what I'm talking about on that, so I'm going to show you. This is the commodity index for the Goldman Sachs Commodity Index, okay? Now, as you can see, if you have been going to the meetings and if you get my newsletter, you have seen that I said it was breaking out back in October, November, and January. And if this is breaking out, since 50% of it is energy and the other 50% is pretty much agriculture and metals, that those three sectors are where you'd probably want to get in. And obviously, things that we had on the newsletter, like what? Freeport-McMoRan, Newmont Mining, Coeur d'Alene and Hecla Silver, Alcoa Aluminum, all big, big moves. And how about Exxon and Chevron and Schlumberger and Halliburton and Devon Energy and anything that says oil on it? Boom. And then what about CF Industries, because they deal in the fertilizer, and other companies in that area. So big move. But now we've got a problem. And what's the problem? The problem is that this index looks like it may have peaked up here at 780. I thought it was going to just fill the gap over here at 710. So it went way beyond what I thought. But of course, when I thought it might fill the gap at 710, the darn thing was at 560. So that was still a pretty good ride up to 710. Now you see it's up here in the 711 area, whatever. So obviously it's given up a lot of the goose. This is also why your oil stocks are giving up the goose, and CF Industries giving up the goose, and Newmont Mining's giving up the goose. You understand? Because if this thing has peaked out, those three areas are going to be a rough racket looking forward, right? So what am I saying here? I'm saying that there's a possibility you come down and fill the gap sometime in the second half of the year. And that means you're going to go down towards 610. And that means energy, metals, and agriculture could have problems. Now let's turn to the price of crude. But this is my thesis now. Just like it was that it was going to go up in January, now I'm changing my tune. Okay, can you see here? This is crude oil, right? And can you see it went up to 120 bucks and now it's back down here? Well, I think it could go down and fill that gap, which is between 65 and 70 bucks. Well, the darn thing just hit 90. It's not that far from it, really, right? Could have trouble going past 75 because the highs are there, but it wouldn't shock me. And if it goes down there, what do you think inflation's going to do after looking at that PPI from this week? It's going to go down. And if it goes down and you got a new Fed guy in there who wants to cut rates, maybe he's been told to cut rates for all we know, then maybe they'll cut rates. And imagine if they make monetary policy easier with all the strength going on. That's how you get to 7,500 and 7,700 on the S&P. If you're wondering how the heck it ever gets there, that would be a way of it happening. Now, I'm going to try to come up with something here on this right here called long-term trends, because I think this is really, really informative for you guys, and I'm trying to be informative today, right? So let's give you a hand with a couple of things that I think is very important. Now, this is going to be a chart on some things I think are kind of important. Now, you know that Buffett indicator they talk about, which is market cap to GDP? Do you understand why people think the valuation of the stock market is quite high? Because this goes back how many years? Many years, right? And basically, you're looking at the highest level of valuation in the history of mankind almost, right? So that's pretty darn high. So that's why people think it's a little bit overvalued. But what they have to figure out is that earnings, if they keep growing, will grow into the valuation. And that's why when Besant and Trump say our number one goal is growth, is because they know very well if growth ever dried up, do you know what would happen to this stock market? With the valuations at this level, it would not be pretty. And of course, it's not that much different than what? if we personally kept taking on more debt. Well, we're going to go to war. That's 30 billion a month. We're going to do this. That's more billions. We're going to cut taxes. That's more deficit. Okay, if you're going to take on that kind of debt, your income had better be good. Your growth had better be good because you're taking on a ton of debt. And that's what's happening basically on a macro picture. The federal deficit and the fiscal deficit are extremely large. And so you definitely need growth to keep this thing going. So that's why they're very hyper on growth. That's why they want those rates down to make, money cheap. And so there you go. And that tells you why they're trying to do that pretty clearly. All right, let's go to another thing that I think is important to know. And that is, as I scroll down here, oh, by the way, if you want to know why real estate's having trouble, I'll just show you a chart for that one. This is the home price versus your income. And can you see the home price versus your income is also at the highest price in the history of mankind. And that's a problem as well. So sometimes the market will correct. And when it corrects, obviously incomes to the price of real estate could get more favorable. And with real estate sales being so bad, that's why it's happening, because again, it's hard to sustain at an extremely elevated price on anything. So that gives you a little insight into the real estate picture. Okay, let's keep going here to give you some other charts here that are interesting to me, hopefully interesting to you. And this would be Bitcoin versus the money supply. Now, you can see, to me, it looks like Bitcoin has bottomed versus the money supply ratio, and that might be favorable to Bitcoin, which has essentially hit their lows at 60,000, and that would correspond to the highs here and the highs there and the highs there area. So this is not an unnatural neighborhood where it might turn. And I've noticed some of the stocks that I look at are turning up, and I'm very happy about that. And it looks like they may have a bright future if, in fact, this is the lows. And there's a reason why it might be, and that's because the relationship between the M2 money supply going up, also known as printing money, and the value of Bitcoin, the relationship seems to be at a very big crossroads here. And I'll show you some stocks in a minute. Okay, so there's another chart that I thought was interesting and very, very timely. Okay, now here's one last one here. And that is the money supply growth versus inflation. They're printing money, guys. They're printing money again. Okay, so you can see here, you remember we had that COVID crash, right? And if you want to know what a panic button looks like, there's a chart on a panic button. What does that mean? That means the Fed balance sheet went from like 4 trillion to 9 trillion. That's a panic button. This is called the money supply. Do you notice this goes back to 1950? Do you ever see the money supply at that level? No. So that's why you had inflation. Everybody wants to blame it on everything else, but when you print that kind of money, you're going to have inflation. So what happened after that? Well, you remember in 2022, they dropped that money supply all the way down here, and the stock market didn't do very good, did it? But where did it bottom, really? It really bottomed as far as what this run we've been on around 2023. So can you see the money supply bottom there? So they start printing money. Now, does that chart look like it's pointing up with the black line or down? To me, it looks like it's pointing up. Also, the red line's pointing up, which is inflation. So they are printing money at a faster pace than the inflation rates. And it looks to me like they're both ready to pop up a little bit, but certainly the money supply does. So if they do increase the money supply significantly, it could be very good for asset prices, and that's why you don't want to fight the tape with bearish stories that may not be accurate. So that's the stuff I wanted to show you to give you a backdrop on what might be happening on the money supply side as well as the Bitcoin side. So let's go back to the charts here. And let me show you some things that I think might be interesting right now, which I have thought for the last month looked interesting. If the Bitcoin was going to be turning, now let's take a look at that. Bitcoin for June. Okay, let's go to the 1-year graph. Come on now. Okay, so you can see it goes down here towards 60 and the RSI is at 17, right? Then we're back over here and the RSI is at 31. That's a big divergence. And then we go over here and the RSI is at 40. That's more divergence. Do you know what this is telling me? That the selling is dried up. And this tells me the trend has turned up. So that's why I'm using 70 as a very important number. And definitely 66 here. So 65 to 70, very important numbers. If you ever took those out, then that winter where it's supposed to drop 80%, which would take you down to 30 grand Bitcoin, is still on the table. If you can't take out these numbers and they appreciate and they continue to matriculate to the upside and they keep hiking the money supply, then I think it's got a brighter future. And I haven't said that since it broke 107, where I thought it was dropping very sharply, which it did. So is there a reason to possibly change your tune? Yes, there is a reason to possibly change your tune. But again, you have to be always alert because things can change very dramatically. At any rate, and of course, there's a tug of war going on at the Fed. The one guy doesn't want to leave. The other guy wants to get approved. He can't get approved, and the other guy doesn't want to leave. So there's a big, what they call mess. And a mess is a situation where you don't know how it's going to play out. So that's why you have to be flexible. But right now, the evidence that I see looks like it might have bottomed and it might be turning up. If that's true, then I've thought that these companies might be of value. And this is called Robinhood. And as you can see, I'm not the only guy in the country who thought that. So that's why it's popping very nicely. And I'm very happy about that. Next one would be maybe even a SoFi, which is a little bit of a fintech deal. That's another one that I thought was hitting a low point and is turning up a little bit. So you keep an eye on that one. Of course, this guy already took off. And this was HUT. And as you can see, it's already ahead of itself a little bit. But that's a pretty good move here from 50 up to 75. And then, of course, some of the other guys that have some relationship with the crypto, which is IREN, is another one that's had a nice pop off the lows, running into some resistance here. But I'm talking about over the next weeks and months to come. These wouldn't be bad to keep on your radar, because if you look at the 5-year on IREN, does that look like it might be taking off to the upside? It might be doing that. So that's why we're keeping an eye on it, because there's a lot of room between the highs of 75 bucks and the 35.40 that it's coming out of. Okay, so there's that. And then basically, some of the normal suspects in this area is your Coinbase. And Coinbase, if you look at the chart here, it looks like the low here was 23 on the RSI, and now the RSI is up at 45. So, it's starting to smell like a turn a bit. And then, of course, you have got the worst of the worst here, which is your MicroStrategy. MSTR, I believe is what it's called. MSTR. Okay. All right. And then, MicroStrategy is another one that MicroStrategy, I'm not getting it. So anyway, the name of the company. It used to be $400, $500 a share, dropped down to $100. Now it's 130, 140. That would obviously be one. And then Bitmine would be another one that might benefit if Ethereum and the other one is going. And of course, that was at $70 and went down to 20, 15, or whatever it went to. So there are some of the ones there. The other area that might be interesting would be quantum computing, because, they are still pretty desperate on compute power and capacity and all the rest of it, and speed, right? And so basically, I was thinking that D-Wave might be something that could be a good deal down here, because again, $46 goes down to 14. If you're doing options, you say to yourself, hey, listen, who's selling calls at 14 on anything that used to be at 45? Somebody who thinks they're going out of business, right? So if they're not going out of business, how much call premium are you going to get on something that's already dropped 80% in price? Probably not that much. And what's your risk going to be if you do it naked or uncovered? It's going to be unlimited. So you're going to get $1 or $2 in premium, and you're going to have unlimited risk by selling calls at an 80% discount to the former highs. Maybe that's not a smart idea. And so That's sometimes the way I look at some of these options is the seller getting a better deal than me? Is he taking less risk than me? Does he have a better opportunity than me? And then you make a judgment call. And if you're correct, then you can get some activity that looks like this. And if you're incorrect, obviously you can lose the premium. When you sell them on an uncovered basis, you lose a lot more in the premium. And that's the problem with the sell side if you don't have a spread in there or a covered situation or something like that. Okay, so there's some quantum things that look like they they have a future to them. This is Rigetti. There's one that was on my list here from last year that has really had a very good time of it, form factor, and that is all the way up here in the 140 area, and you can see that that's been a steady uptrend. Some of the best stocks are the ones that are in uptrends and then they revert to the mean. Those are the ones that obviously can bounce right back up, like some people call like a tennis ball, a fresh tennis ball, bouncing. But I'll give you some of those so you get an idea what I'm talking about. SanDisk was a great company, and it had a pullback here from 750 down to 550, and then boom, next thing you know, it's at 950. Another one is Micron Technology, which you guys are all familiar with. And then Micron came all the way down to my line here. That's called reversion to the mean. You buy it against the reversion to the mean, and you're right back in their face again. So that gives you a little bit of an idea of stocks that are in good uptrends, and then they have a reversion to the mean. Let's just see if you guys had a question or two on a stock that you would like. Okay, DBD. Let me take a look here. DBD. And there you go. Let's get this off. DBD is Diebold Nixdorf. Okay, not one of the favorites that I have, but let's take a look at it. I like to look at the big picture, so it's on an all-time high, right? Then I look at the 5-year picture, and I can see it had a reversion to the mean. Just like I say, when they revert to the mean, that's your entry area. When it's at all-time highs, that's not my cup of tea, but it could be others because maybe it's going to just keep going without stopping. But it's always nice to, try to get it on a discount and then have it pop. And then the RSI here, used to be up in the 74s, and with the new high, it's at 69. Not a big divergence, but not making new highs on it. How about over here? RSI is up here is 78, RSI is 71, and up here we're at 69. So again, not a big divergence. You got a gap there of some significance, and you got all the support in here. So like I say, it looks like a stock that could keep going because it's in an uptrend, but it also wouldn't shock me if it pulled back towards 80 or 78 to fill the gap and maybe test this area here. So if it did have a pullback from its current 85, between 78 and 80 would be an area that I'd be monitoring to see if it's going to stop. So that's pretty much what I see there. If you go to the short-term graphs, like I say, you have the high point up here at 78 with the RSI, and now over here you got the RSI in the 63s. So yeah, it's losing gas in the legs. Hasn't turned down yet, but if it starts breaking under 84.5 and you get that red line turning down like you did here, you could have a reversion to the mean. And the mean from this level could be either a little guy, 84 or 82, or it could be more of a full Monty down here to fill this gap and come down to, like I say, 78. So that's why I say if it did come down to the 77, 80 area, it would be of interest to me if I really like this stock. That would be, in my view, a little more opportune time to try to get in. Let's take a look here on the chat. ASST. Okay, well, what do you have here is a stock that's also breaking out. Let's go to the 20-year. Hadn't been around that long, and obviously it's a very sad story from 650 down to whatever it went to. So obviously it's a story stock, and is a story that came out in 2023, and it was a very good story at $700, and it became a very, very sad story as it went down to $9 or $10 from 700. So that's a pretty big drop. I'm not that familiar with the company, so I don't know exactly what they do. But I can tell you that it's a flatliner down here. And then if we go to the shorter term graphs, it's still a flatliner down here, but the RSI is definitely gaining strength, which is a good sign. So if I go to the 1 month graph, I can see here that down in this neighborhood was your obviously base building. And once purple turned up and green turned up and blue turned up, that's when you get on board at 10 bucks and you should be enjoying the ride. Now there's a gap there that it could come back for. This is where the averages are. So it's a little bit away from it. And so where are you here on RSI? 71, 76. And now you got a new high with 74. So no real help on the divergence front. Again, if you got in at a good price, you know, you're having a good time of it. Let me just show you one other thing on the 5-day. 5-day shows RSI up here at 79 and 87. And up here it's at 72. So there you got a divergence on a short term. And that's why this is at risk of coming and pulling that back. Now, let's talk about some ideas as a trader where we maybe use options as a replacement. What does that mean? Let's say you bought it at a good time at 10 bucks and now it's trading, it hit 13 bucks and change. So let's say you're up $3 a share, right? So you can sit tight, keep it going, no problem, right? No time limit on you. You can hold it till the cows come home. Or you can say, you know what, I got $3 to the good here, and maybe I'd like to be in this stock for a long time, but I don't want to risk any money beyond the $3 I've already made. So what could I do? Well, let's take a look at the options. And again, I don't know this company, but I'm just trying to tell you what I would be looking at possibly doing. And I would go out along, say I really believe in this company. You obviously think this 9 or 10 might be the bottom, and the darn thing used to be 700 bucks. Lord knows what they're into. I don't know, but you go find out if you're going to do it. And say you went out till 2028. That would give you all of the rest of this year and all of next year. That's a pretty good long amount. And let's say the stock is trading at 13. And say you wanted to get into a call spread. Now again, you know, a lot of people are buying this one here or trading this one here at 635 for 15 bucks. But if you want to take a long-term, shall we say, vertical call spread idea on it, and you had $3 to spend, you might be able to buy something like the $8 call and sell the $22 calls, try to get it done for $3, something like that. And that means your risk is $3 in case it never gets above, if it stayed under $8 for the next year and a half, you would lose the premium, which is the difference between $8 and $5, which is $3, which is your gain you have on the stock right now. Now, if it goes to 22 or better on January 21st of 2028, the difference between 8 and 22 looks like 14 bucks. So that's 1,400 bucks of potential value, $300 of risk based on the example I'm giving. And you've got a year and a half to see it happen. So that's another way of handling the situation if you wanted to convert a stock position into a limited risk vertical call spread and do it with a lot of time on the clock so you can give this thing a lot of time to figure out if it wants to recover or not. And so again, that's another way of doing things that maybe some people don't think of because they haven't done options for 4 decades and it doesn't come to them as naturally. But that's an alternative. It's an alternative. Again, so whenever you have something like this, you know, you can either hold the stock, you can sell the stock or some of the stock, and then also you could possibly replace it with some type of a limited risk option strategy. And so you got more than one thing to think about when something has gone your way. And it's all about risk management and your level of risk that you want to take and your suitability to risk and your tolerance, right? So that's some examples there. What I'd like to do now, if there is more questions, I'll answer them. But if there's not, I would like to share with you. Oh, ASST is in crypto. Okay, well, that's good because crypto, like I just made a big case on, might be very much turning around, which is probably why the stock is turning around, correct? Okay, So what else might be turning around? Because, you know, we all know the stuff that's gone way up lately. And, you know, a lot of them are the same culprits that went up last year. You know, the Teradyne had gone up a little bit. And of course, the SanDisk went up a little bit. And this NBIS might be another one that might get back on the bicycle a little bit. If you put up the 1-year graph and I get this stuff off. See, you know, they're going back to where they were making money beforehand. You see, you know, they had the little drop here, but then they said, okay, the world's going to continue, right? And the Strait of Hormuz and the conflict will not last forever, right? So that's what they're betting on now. They're betting that the guys that were winning before are coming back in and they're going to win again. And that's why even a stock like this, which is, you know, starting to play catch up quite a bit. This is NVIDIA. You know, again, it comes back here, you take your shot. Now you're getting paid for taking your shot. Is it going to keep going? Well, let's take a look at things, see how it looks. No, it looks like it's breaking out to the upside, right? And it looks like the RSI's got a lot of real estate above. So, you know, and again, the tip, you know, you look for things that are tipping you off. Here's your tip. That's your tip. Yeah, semiconductor index, you know, it made a new high right here on April 9th, April 10th, which would have been last Friday. And so if you're wondering why everybody's been stampeding into the market, it's because it looks like the AI trade is back on. Now, again, on a short-term basis, let me tell you where the risk is. The risk is like I say, on the VIX. This is the VIX. You see how far it's come from 36 down to all the way down here? And it's breaking under this averages. So for all we know, it could be going way down because look at the VIX has broken the RSI. So it is definitely broken the back of the VIX with a big gap up there though, right? So let's go to look at the weeklies and see if that tells us a different story. And it does. It tells you you're right onto the support of the VIX. Where's my moving average here? 1764. Where is the low today? 1740. Where did it close? 1798. Is Thursday sometimes a reversal day? Sometimes it can be. So would I be looking at what? If this VIX is at a low of 1740 today and is going to go back up because it's bouncing off that 1765 number, which it closed above. And then if I look to my 20-year graph, I can see the RSI, the moving averages are at 1764 again, 1775 again, and 1666. So we get a lot of action in between about 1750 and 1650. A lot of action there. And these are all averages that have served as a little bit of support when these things sometimes come back down. So, but that RSI is pointing right at 50. But it did it here too, right before it took off again. And let's look at the 5-year. Yeah, the RSI is right here, tugging that low area. So again, between the 7,000 neighborhood making a new high, between that SMH making a new high, but having a lot of gaps right underneath it, and the RSI, excuse me, the VIX is clearly into some area where it has had some moving averages of which could be support. And support on the VIX is not good if you're bullish, because that means if it holds this support and goes back up, the price will come down on the stock, at least temporarily. And it wouldn't shock you really if it wanted to on SMH, because it's had such a big run, to possibly come in and fill some of these gaps if the news changes. And of course, the former high here at 420 would be some type of support, and an overshoot down to 400 would clearly fill the gap and also hit this line. So looks great, new highs, but again, you have to be a little bit concerned. And let's see if there's any other reason to be concerned on SMH, because if SMH comes way down, I'd imagine the whole board's coming down. So here you go. You've got the RSI at 74, made a new high. RSI 79, made another new high. RSI at 80. Right now, RSI is 74. So it's losing a little bit of steam, but you don't even have the red line turning down. So a break under 445 here and the red line starts turning down could indicate that you could come down to fill the gap at 430. And on a full Monty, go down into the 420 to 400 area. If the news were to change, and of course, there's a lot of news out there that can change either way. So that's what I would probably keep a little bit of an eye on as far as the stocks are concerned. How about stocks that might be at low prices that might be worthwhile to take a peek, especially if the world is going to change? What world did we talk about? If you recall, we talked about the price of oil in the $100 range turning into a $70 range if things get resolved over there and go down and fill that gap on the commodity index way down there at 610 or between 65 and 70 on the crude. That would be a major change, correct? Now, how about if that were to happen, what would the inflation rate be? It would be a lot lower than it is now, probably, right? Right. How would the consumer feel if he got a $5 gasoline fill up back to $3.75? He'd probably feel pretty good and go spend some money. And how about the consumer that's been tied up in a winter shack all winter, who now has springtime and summertime temperatures? Probably would like to go out and spend some money too. So that's a great backdrop if that's going to happen. So if the whole landscape might be changing, let's take a look at some stocks that I caught on my radar. I'll tell you something right now on Tesla that I wanted to show you because a lot of you guys trade Tesla. I think it could go up and fill that gap before the year is out. And that's between 460 and 480 ballpark. So that's a heck of a potential there. I would be looking at Tesla very seriously, particularly on a longer term basis, if you have strategies like longer term vertical calls or something, because this could have a pretty good future to it. And like I say, the jury's still out, but it did come down to this green line here around 350, which would be a natural place for it to maybe stop. And the RSI you can see is kind of stopped too. So I know you guys trade Tesla a lot, so I wanted to mention that. Okay, let me give you some other ones that I have found. This one here came on my radar. And there you go. This is OMC, Omnicore Group, and it's had a nice drop, and it looks like it's consolidated here, and the RSI looks like it wants to turn up, so I'd keep an eye on that one. I'm just going to give you the names, and then basically I'll explain how you could discuss further details with me. But this is another one. It looks like people want to go on holiday, and this is called Expedia. And then another one here would be Intuit, which I thought looked pretty good as a double low. You see you have a low here of 18, and then down here you're at a low of 25. So again, it's awfully cheap. You know, it used to be $850 a share. It went to $350. That's a $500 haircut. And again, I'm thinking from the terms of you're starting to sell calls down here after it's dropped $500, maybe that's not the sharpest tool in the shed. Maybe there's a little bit of risk to selling, you know, because again, if you've been selling calls, you've been coining money for a long time. So your confidence level of selling calls on Intuit is probably extremely high. Unfortunately, there is a point in time where that stops working. And maybe this is a neighborhood where that point is. Let's turn towards a couple of other ones here. I showed you coin. This one looked a little bit interesting to me as far as, you know, being on sale. Because this is an RSI of 26 and change and stuff. And then the RSI is down here in the 39 area. That's a pretty big difference. So I thought that was kind of interesting from that standpoint. You know, I'll show you one that had the same kind of setup that worked out very nicely. It's called Affirm. You can see, you know, again, it had its divergence down here, and then it turns up. And then, of course, it pops. So, you know, something that goes for 100 that goes down to 45 has certainly been discounted. And then these are the kind of pops that I think could happen if the news changes across the board on many of these stocks that I'm going to be mentioning. But I just want to give you an example of what we're kind of looking for if, in fact, these things can happen. The one thing that's good about these is sometimes the options are extremely cheap, which means your cash out of pocket is not too bad. This one came down to a good support zone. This is called Akamai, and it's been a good market, but it came right down to some support. So this is a neighborhood where I would be looking very closely to see if it's going to hold, because it's kind of a, you know, an area where it could hold. And this stock has proven it can go up and down quite a bit. So volatility is not an unhappy thing. If you're looking to be long volatility, it's nice to find stocks that can be volatile. This other one is just similar to Affirm, and this is Upstart, and you can see Upstart kind of is playing the same deal here. Right there as it's taken off. Again, they're both in the point of sale financing. So, you know, when people need to buy something like a Jiffy Lube, they go in to get a oil change for 40 bucks and they find out they need a brake job for $3,000 and they don't have the money. Well, they point to the sign that says Affirm there, and you go call up Affirm and they give you the money so you can get your brakes done, that kind of thing. And so more and more of that might be happening, and especially in the spring and summer when people are a little bit happier and they have money because their stocks went up or whatever they're happy about. Okay, what else did I see? You know, this was a good one. A lot of young people like to have banks that don't say, like, you know, B of A on them. And Chime is that kind of a thing. So this baby came out at 40 bucks and went down to 15 bucks. Again, you know, 16 bucks, whatever. If this thing has a legitimate business, you know, and it becomes the thing to do, fintech or whatever, you know, there could be a future to it. So I just thought that looked like it had turned, and that was interesting to me. Workday. Another one where you have the RSI down here at 23, and now we're over here at 36, and we're at a lower level. I don't know. I mean, it's got gaps above. I mean, it used to be $280 and now it's at $110. I mean, are they going out of business? If they are, you know, stay away. But if they're not, maybe there's a story to be told here if the winds have changed low. The Zscaler, you know, those cybersecurity ones, you know, again, they have been whacked. 340 bucks down to 120. What do you want to sell calls down here? Maybe. But again, if you're wrong down here selling calls, you know, you're not going to be very happy because there is a lot of potential here if it got moving. And I'm looking at RSI, you know, when it goes from 19 and then it goes down to 33 and now we're in the area of 32. So it's something to keep a little bit of an eye on because the news could certainly change on it. Cybersecurity is probably going to be a big deal. So we'll have to, I mean, because of, you know, the war in Iran, you know, there might be some people out there trying to do stuff. The IGV, which is the software, really discounted, as we all know, right? Really discounted. But again, you've got a 30 against a RSI of 45 and 50 now. So again, this relative strength is picking up here. And so who are the players in this thing? You got to know. Well, one of them I've been talking about, and it's been on the letter to pick up, is Microsoft. And again, I thought this was a real big bargain down here. And so bottom line is that it's turned up. And look at the gap it can go to, 440 to 480 on the right circumstances. And you got a purple and a gold line to go after too. So this thing could have some good potential. Again, in the short run, because I just showed you the VIX is on support, because I just showed you that some of the RSIs are not the best, maybe it'll pull back a little bit and give you a better entry level. But if we had a talk in 3 or 6 months, is it possible it could go up and fill that gap? It's possible. And again, some of these other ones like Oracle, they just struck a deal for energy with Bloom. And that's not Oracle, that's Royal Caribbean, which also, again, if Expedia is going up, wouldn't this be something that could be something to keep an eye on? Because what do you think you do at Expedia? Don't you do the cruises and stuff? So again, I would watch RCL very closely as well. But anyway, I was looking for Oracle. Yeah, now Oracle, like I say, you had all these lows here, 20 RSI, 39 RSI. 38, 56. So again, you know, this thing here, and if you look at the longer term graphs, it's kind of logical why it might stop down here. You know, your gold line is down here. So there's some reason why it would stop. I'm not saying it's going all the way up to the high, but when you go from 340 down to 120 or something or 130, you know, that's a pretty big drop. And these guys are in the heart of those data center build outs. So if these data center build outs are going to be profitable, you know, you would imagine these guys could make a buck on them because they're right in the middle of it. And the other ones that you might not know of is ServiceNow. Again, you know, used to be 240, went down to 80 bucks. You know, your RSIs, you know, were down at 19 and now they're at 31. So it looks like the selling might be drying up. So that which makes it interesting. Another guy is Adobe. And so basically you're looking at, RSI over here at 28, and now we're way down here and the RSI is 44. It looks like the selling might be drying up on some of these things. And, used to be 420, 100, 410 bucks, and now half price only, So, there is some definite stuff on sale down here. And that's why I wanted to spend more time. I was only supposed to go for 30 minutes, but I thought what I saw on the Bitcoin possibility and its relationship to the money supply, the fact that the money supply looks like it might be going to grow a lot, which would be very asset positive, might be, and again, showing you that if this oil were to go down and fill that gap, like the Goldman Sachs Commodity Index, go down and fill that gap, then you could be looking at a darn good opportunity on some things if you keep your eyes open. Again, what else is in that index is metals. And if you look at the price of the gold, it is trying to make a recovery here. But, as I look at the chart here, let's go look at the 20-year graph. So it still held the support. That's why I told people 4,000 is a very key number, and it bounced off nicely from that. On the weekly, again, came down to the blue line, which correspondingly to the other one, and the RSI came right down to 50. So like I say, if this RSI starts going back to 60 or something like that, and we break above the red line, which comes in at 48, if you start seeing 4,900 or better, then of course that might be telling us that these things have not topped and we're going a lot higher. But if it can't get above that 4,900 area, and even the blue line here comes in pretty much where we are now, which is 40, well, that's 4,900 again. So 4,900 is a pretty key number on gold. If you can start getting above that, it might be time to get bullish again. But if it can't, and if it starts breaking underneath 4,600, then you might be seeing gold going further down. And again, this RSI looks like if it started to turn down, gold could, what kind of a pullback could gold have? Well, look at these lines if it started to really break underneath these numbers. So there's a lot of real estate underneath. And again, if oil were to go back to 65, it wouldn't shock you to see gold, lose 500 bucks or a grand. And then the other thing is on CF Industries, which benefited from the petrochemical deal. These guys have fertilizer. You need petrochemical. That looks like a blow off top to me. Okay, possibly. And again, that would fit into what? That the Goldman Sachs Commodity Index has peaked and that it may have, under certain circumstances, the potential of going down and filling that gap. And if that were to happen, you're going to see energy, because it's 50% energy, not doing as well. And then you're going to see the metals and the agriculture not doing as well. And you've even noticed some of the stocks, are having a little bit of trouble, like the CF Industries. I think Newmont Mining has lost some air here. It used to be 130, 140, and it's pulled back all the way to 100. Now it's back up again. But again, like I say, it seems like it's either going to be like if gold gets above 4,900, maybe this thing's going up to make new highs. But if it doesn't, then it could have some more trouble. So, that's something to keep an eye on. I think that the Bitcoin money supply relationship is something to keep an eye on. Quantum computing to help these people who need speed in their compute might be something to keep an eye on, because these things haven't been totally bid up. In fact, they've been discounted dramatically. And of course, your software stocks you saw have been discounted as well. But again, they're not the leaders right now. But over the next 3 to 6 months, if things were to change, maybe the circumstances for those stocks might change as well. What I'd like to do, if I could now in my last moments, is explain how we could have an ongoing relationship as far as me giving you information and helping you with things. I'm Jim, the option professor, and today I was just sharing with you all my opinions. I don't give advice, so it's just opinion and views that I share. But I've been doing this a long time, and I follow all the markets very closely. I didn't even go over some of the international markets, which I'm keeping an eye on, because these commodity-based countries like Mexico, they've been going pretty good. And Brazil, they just had the largest inflow into BlackRock into Brazil. And you can see that one's going pretty good. So on my alert, I'm giving you kind of like a global view. I'll talk about what? our stocks, and I'll break it down to tech and what sectors look good, energy, whatever. Then I go into things and the small caps, of course, and then I go into what interest rates and the commodities might be doing, and then I get into the international picture. So I give you a really full view every single week on what I'm seeing, which helps you on a one-stop shop to get a lot of information in front of you that could be very helpful. Now, the other thing, so that comes out every Sunday night into your inbox. And we also have a webinar every Tuesday. And we also have got coaching. So you get my cell number where you can text me if you had a question on something, and I could help you. If I have the answer or if I have an opinion on it, I could share that with you. And again, so it's nice to be able to text somebody and get some coaching. Now, right now, we have a very big special going on where if you get the annual subscription, which is discounted $100 down to $897, which is really a low amount because you're getting ideas every week, you're getting a review every week, you get an options course, which costs $395 for free, 6-hour course, and you get coaching, which is $200 an hour, and you get 8 hours for free when you get the yearly at $897. So you're getting a lot of stuff and a lot of stuff that I think can help you. But of course, it is nice to talk to somebody if you have a question, because it's not easy to get anybody on the phone nowadays. You know that. And again, because I've been doing it for quite a while, it doesn't take us 10 hours to answer your questions because most of your questions are going to be fairly direct. So, but you do, if you have a question on, how a strategy works or what the use of the risk is or whatever, or, what would be an entry level, concept, what is an exit strategy, like I just showed you on that situation earlier. So there's more than one thing you can do when you're exiting, and risk management is a big part of this thing. So the bottom line is that it's a very strong deal for the year at $897. You could do quarterly at $297, but you don't get the as much coaching, but you still get the course for $395. So right ahead, you're ahead of the game right there. But I know a lot of you guys are besieged. Believe me, I've been in this thing a long time. So I know you get 9 million people trying to have you do 9 million things. But I feel pretty good that my expertise and knowledge in this thing is pretty high. And my ability to explain it to you is pretty good because I've been doing seminars since the 80s. So I hope I can explain it after that amount of time. And there are all different kinds of guys out there. Some people just starting out. Some people have done it a while. Some people have done it a long time. But we all can learn something more. And we all can probably sharpen our pencils just a little more. So again, I also get ideas from other sources because I've got subscribers who are telling me, hey, Joe told me about this or Harry told me about this. And then we look at them through my prism and we see if there looks like it has any merit. So if it does, that's good based on what we're looking at. And if in fact, maybe changing the strike price or expiration date might enhance it, possibly, that can be discussed. And also, just sometimes it's a great idea. Just go ahead with it. But the bottom line is it's nice to have a sounding board who you can talk to about these kind of things and get new ideas every week and get a coaching session and get a full course so you can look at it on your own leisure. And if you have a question, you can text me and we can handle your questions. So it's a very strong deal. And like I say, I know there's 9 million people out there, but I don't know if there's a better deal out there from the standpoint of expertise and hand-to-hand contact, as well as ongoing information coming your way. So that's a pretty good deal. Take advantage of it because it's not going to be around forever. And again, I think we're entering in a very, very exciting time because again, a confluence of a break in the price of oil, a break in the inflation rate, the ability for them to print money, meaning increase the money supply, while they might be able to cut interest rates, is a cocktail that I would not want to step in front of. Now, that doesn't mean on a short-term basis we can't pull back. I already told you how the VIX is on support, but I'm talking about the next 2 months, 3 months, 6 months throughout the year. Because again, we're already going to be in May before you know it. And again, we got the election in November. So there's all kinds of stuff going on here. And I don't think it'd be a terrible idea to get the option professor information and also to be able to text me if a question comes across. So we're at the top of the hour now, which is definitely my limit. And again, I'm Jim, the option professor. So I hope you give us a try on this thing. Give us a shot. I think you'll be happy, and I'll try to do my best to have a good experience for you. So welcome aboard if you do join up. And if you have any questions that haven't been answered, you can always shoot me a email, optionprofessor@gmail.com. OPTION, singular, professor@gmail.com. All right, guys, I tried my best to give you some stuff that would work for you. I hope there's some value you got out of it. And of course, I hope you sign up so we can have more conversations in the future. I'm going to send it back to David now. And thanks a lot for being with us today. And don't forget, every Monday, Timing Research has a webinar. You should try to attend that as well.
All right. Thanks, Jim. Yeah. Be sure to check out Jim's link there and or email him. And if you're new to Timing Research, we do a panel discussion every Monday at 4 p.m. Eastern Time, and Jim, the option professor, is the moderator most weeks. So that's always on TimingResearch.com. You can join us for that. Good start to your week to find out what's important to look at for the week. So, all right. So to close out the day for us is Harry Boxer here.
I am.
Hey, Harry. How are you?
All right. Not bad.
All right.
Okay. Hell of a day today. Hell of a day. Hell of a day.
Yeah.
Hell of a day this week. Incredible market.
Yeah.
Just incredible. I cannot believe the market took back the entire loss. And it only did it in what, 11 days? Phenomenal.
Yeah.
All right, Jimmy, I think you did a good job. Hope this time you did a good job.
Okay. I think okay. Harry, are you ready to start?
I am. I wanted to see if you could see my screen. I shared it.
Yes, I see Bird.
Okay. Yes, folks, this is Harry Boxer, the technical trader. Been doing this quite a while and quite a few years, but the tech trader itself came to be in July of 2001. So this July it'll be 25 years. And but I've been doing this for over 50, and I think I'm getting it right finally. Folks, if you have any questions on any stocks, whether it be long, short term, whatever kind of time frame you want, I'm going to give you a technical rundown, and I'm going to analyze your trade and give you my opinion. Please post the symbols as soon as you can. If you have anything at all that you want me to look at, please go ahead and do that. And then we'll start off. Now, I just want to start off with today's trade of the day, BIRD. Now, look, this doesn't happen every day, of course. A stock that goes from 2 to 24. But early enough, if you come in my room and we were in pre-market, we saw a pop and a pullback. Okay, and when the stock broke out here, I gave a day trade on it. I think it was under 3. And the stock kept running, popping. We had a flag in there, a little coil in there, another little one there. And there's no reason to sell a stock that continues to do this. We had a stop underneath here, underneath there, and underneath there, and then again there. We kept raising our stop. In my room, the tech trader, we always use stops and targets. And when you're trading a stock this volatile, this crazy, I think it traded 275 million shares today. I could be wrong. It could be more than that. But the bottom line is, when you're trading a stock like that, with the ability to ramp up and or roll over and die, you must have stops it. I told my people to sell half their position at 12. From 2 to 12 is 6 times your money. I also told them that when it got up into the low 20s, to put a stop at 20 when it got to 24. Several of us, I actually told everyone in my group that at 24, this stock was too fast and extended. I advised selling my your entire position. And the rest of the day did this, as you can see, really basically gone nowhere. It doesn't mean tomorrow won't gap up and run and be 30 or 40, but it's one of those crazy stocks. They went from a retail organization to an AI overnight, and so everybody got excited. But And that's the kind of trade you'll see at the techtrader.com. But let's get to it because there's people with questions. And anyone who's listening, please post your symbols and I'll continue to give you my take. For Steve, a look at gold stock EGO. Now, looking at the overall chart, this is a bearish chart to me, and here's why. When I see a major move that takes a stock from last year's early year low, well, let's call it March. In March, the stock was trading at 1330. It did a 1, 2, 3, 4, 5 wave, Elliott wave, explosive move with a fifth wave spike. They got it up to 50.67. Okay, so it went from 13 to 50 plus. It was more than tripled. It then came down hard and bounced, and I told everybody in my room that I felt gold and silver stocks should be shorted on the next bounce. This bounce here rolled over. It bounced again, but this is where the break occurred. And quite frankly, if you're and Steve, I'm not a bull, I'm not a bear. I'm a technical analyst. I tell it like it is. In my opinion, I'm not sure where the market's going, but it looks like it's going higher. And this stock looks like it's going lower. So does all the Bitcoin-related stocks too. So gold, silver, and crypto all looking dire, in my opinion. There's still a ton of stocks that look good, though. In the case of EGO, it's a 1, 2, 3. This is a wave 4 bear flag. See it? And today was not a good day, down 156 or 4.3%. So in essence, the stock rallied back to resistance at the declining tops line, near lateral price resistance, and rolled over. From yesterday's high alone at 38.15 to 34.74, we crack here. We'll probably make a run at 30, 31, retesting the low from March. And then the channel bottom looms down here in the 25.6 range. That's my target. So if you're long the stock, my personal opinion is move away from it. OPEN for Devendra. Mr. Patel, this is an interesting stock. I've been following it for a long time, but it's going nowhere. Now, what I would do, and I've told all my people, is never a reason to try to pick a bottom. When a stock's in a downtrend like this has been since it spiked up and exploded last September into the low teens, I think the high was 11 or 1087, and then they dropped it down to 4. And quite frankly, you can see that it made a new low 2 days ago at 412. The prior low in February was 426, but pretty much a double bottom. Now, if it's building a base here, the first thing you want to do is start to take out some declining tops lines, take out declining moving averages and volume weighted average prices until I see this at least Avendra, at least above 4, above 5, sorry. Above 5 with volume is where I would start to get interested. Why? Because it takes out the declining tops line, lateral price resistance from this prior spike high, and all 3 moving averages. And once we get to that, we're clear to sail up into that 550, 570 range. And then that's the key. Once you get to that, then you complete a base pattern. And then you're off to the races up into the 6, 7, 8 range. But for now, if it fails here, this can still go lower. And quite frankly, when you look at this pattern, if it does fail, this is where I think it might go. As low as, I would say 3.25, 3.5. You got to be careful with anything this cheap, this low price, until it breaks out. Okay, so that's my take on Open Devendra. This is the kind of analysis work I do all day, every day, intraday. I have live webinars. I show the charts all day, intraday. When we do our day trades and swing trades, you'll get the intraday patterns and my suggestions for targets and stops all day, and they're updated nonstop all day as well. I'm the hardest working guy on Wall Street. Come join me at thetechtrader.com. Okay, let's move on. We have Elizabeth that wants to know about MU. Well, everybody loves MU. I like MUU. That's the ETF for it. Now, it isn't that much leverage, but it's half the price. And it is twice the leverage. So in the case where MUU, let me show you this, MU went from 3 at the low 311 to 465, 100 let's call it 155, 154 points. What did MUU do? It went from 102 to 213, 222. It went up 120 points, but it was only a $100 stock, so it doubled versus about a 35 to 40% gain in MU. So this is one I really like. But Elizabeth, you got to be cognizant of the fact that let's go back to MU for you. Right, you got to be cognizant of the fact that there's multiple tops up here in this range. Now, recent high in March, it reached 471. Today, it reached 464, 465 yesterday. So we're right at that level, at point that if the market blows off, and this one gets above that range, it might be a $500 to $525 type stock or more. But at the same time, any stock that's gone from 65 to 450, that many times multiples is extremely volatile. If this market ever takes a hit and the semiconductors lead the way to the downside like they did here, then this could suffer and suffer quite a bit. I would put a stop for me right under these moving averages. Say under, and here, let's see, 398, 398, and the moving averages are about 408. So yeah, I would say stop under 398. That's a little way from here though. So when you go back to an hourly chart, that gives you a better feel for it. Elizabeth, watch this. This is the hourly chart trend line and trend channel. So as long as the stock maintains that, yeah, you can go up to 500, right? If it breaks down under this red line, which is your 50-day moving average, that's where I stop out. So if you can draw a line across those peaks, you'll see that there's a moving average there too. That is a key support level. I would stop under 4.25, 425. Do not let that go into 425. That's my take. And CLS, favorite stock of one of my traders, who gave me this stock when it was trading way down there. Let's take a look. Yeah, we've been trading that one. He's been trading that since it was in the 20s and 30s. Now, on a long-term basis, phenomenal chart. Nice parallel channel. And breaking out here. So the squeeze is on. I'm sure this is a fairly heavily shorted stock. It might or might not be, but the bottom line is I think mid-channel line around 460, 450 would be my target. But I would also like to see something that's been up 7, 8 days in a row back and fill a little bit and do some testing of the breakout points. Say support around 345, 350 if tested, or if it creates a flag or some sort of coil or continuation pattern, then we're looking for 475 to 500. In my opinion, that looks right at this point in time. It looks better than MUU because it's already broken back out of this entire trading range. And folks, keep putting the symbols up if you want me to give you my take. Up next, HCSG. And that would be for Steve. Well, Steve, Healthcare Services Group was going along nicely in a rising channel. 1, 2, 3, 4, fifth wave up, and then a 1, 2, 3, 4, 5 wave down. Here's what I do when I see this type of thing. It's a break of the pattern, but it hasn't broken price support. Hang on a sec. Right across here. When you see a low, a high, a gap, and a moving average test, and another test, and another test, obviously that's where you want to put a stop underneath that. I would stop under 19. No, maybe I'm wrong. Hang on. Yeah, I would stop under 17 and a half. And what I'm looking for is a breakout above 20 and a half, 21. Now, on a short-term basis, and we can look at an hourly chart too, you'll see that the stock has come down in a nice orderly 1, 2, 3, 4, 5 wave decline, nice Elliott wave move to support and a bounce. At this point, lateral price resistance around 1980, 85 is where you want to see it break out from. This is the V bottom with the right hand extended flag type pattern or platform right there. So what we want to do is wait for this pattern to break out. The measure move on this one tells me we probably should get up to about 21, 20, 21, maybe stretch it to 22. That's where there's a double top up here. And that's where you may have some resistance. Call it 22.25. So I'm looking for a move that takes us to a 3, 4, 5. And I don't want to see it break down immediately here. If it breaks under 1890 and it's right there, it could easily break back down towards that low. And if it breaks that low, then you're in big trouble. So this is an iffy stock. On a long-term basis, it looks like it broke out. It's got a nice platform on the moving averages. That's always a bullish pattern for me. So yeah, I do like it, but I want to see the breakout over, say, 1980-20 with energy. Once you get above that, then you may be on your way to 22, 24, 25. That's my take, Steve, on HCSG. Pat B wants to know about Amazon, and boy, has that come on strong. Look at this move. Just when it looked like this stock was dead. What I mean by dead was left shoulder, head, right shoulder, breakdown with two breakaway gaps to the downside. You don't get much more bearish than that. And then a bear flag. Now, until the market turned around, this was headed, in my opinion, down to 175. But the breakaway gap took it back above the declining top line and the moving average and triggered the big short covering run, in my opinion. Amazon's gone from 199 to 252 vertically. There's some resistance right there. The all-time high, which was reached back here on the spike high at 250, 258 and change. If we get above that, momentum can easily carry this one somewhere up around the 285 to 300 range. What I'd like to see it back and fill in here a little bit without too much deterioration. Yeah, a flag would be great, a coil, something like that, and then maybe a setup for around the 299, 300. Does it look good? Of course it does. Is it overbought? Yes, short term. And Amity wants to know about Apple. Well, Apple was looking like a dead sister, meaning at some point, this over here, it looked like it was about to get killed. But with the market recovery, this thing turned around, took out the declining top line. Today was a big day for it technically. Let me show you why. When you pop up through resistance, back off and retest, pop up again, and then sit there for a week and consolidate near the moving averages, and then break out, very bullish. I think you got a shot now, 275 to 280 range up there for a test of this area where there's resistance. Beyond that, Apple might very well make a run at the all-time high, which was reached, let's see, back in December, 288-ish, 289. And on a much longer-term basis, if Apple continues to press higher, I'd be looking for 330.40. But first, you got to get up through and take out 288. Is it a bullish chart? Well, it wasn't until recently, but I have to say it turned bullish by breaking back above the moving averages and through the declining top sign out of this down channel that it was in. And a nice retest of the January lows here with a test of 3 times in this range. So it held, say, 245, 243, 245 zone. It was also a low back here in October. Big support level. Notice it held. Now that one looks good. Folks, I'm not seeing any new symbols, so please put them out there if you want. Steve wants to know about Harmony, which is I believe, it says gold, but this really started out as a silver stock. Oh, you're talking about Harmony Biosciences. That's different. This is not the gold stock. So Harmony Biosciences, I call this a funky chart. Too much volatility back and forth. Multiple resistance up there. Multiple support down here. If you buy it or you're in it, you don't want this stock underneath 25. Take my word for it. It could collapse into the 19 range. So, and what I saw today was a bearish engulfing bar. And where did it close? It did close at the upper end of the range, so it isn't terrible. Let's see in the next couple of days, this thing can get back above, say 30 and a quarter. If it does that, then it may be on your way back towards 34, even as high as 37. But I don't like the volume pattern. I don't like the technicals. And I don't like the chart pattern. It's just, there's too many bullish charts for me to be playing with a stock that looks like this. Anybody else out there with a, oh yeah, we have some more messages here. More symbol. There you go. Hang on, I'll be right with you. Looks like MYRG. Yeah. Oh, that's also for Steve. Let's take a look at MYRG. Steve, if you like what you're hearing, come to thetechtrader.com and check us out for free for 2 weeks, no credit card. Just pop in, put your name in, create a username, and start enjoying the ride for the next couple of weeks. Freebies on me. This is much more like it. MYR Group Engineering Construction is a monster. But, of course, any stock that goes in a year from under 100 to over 320 is obviously vulnerable. Now, today's high is right on the top of the channel. So for me, I'm since I'm a trader, I usually trade at resistance. This is resistance. The 329.80 range that attacked today, closing 9 points off the high, by the way, has me thinking, look, it depends on your time frame. If you're telling me long term, then you have to endure the pullback and look for more upside, which is now 365 target. But anything down underneath, say, 250 would get me out. Absolutely 100% out. You see this line right there? Right there, 250 out. You don't want to get below that. It changes everything. Pat B, Nokia, and Oracle. Well, what's wrong with Nokia? Nothing. This is a bullish chart. This is now the highest level Nokia has been since 2011. So we're looking at a 15-year high. But when you build a 15-year base and break out with volume and OBV, it's usually very bullish. It has had, since this low, a 1, 2, 3, 4, 5. Not sure that it isn't vulnerable enough to get a pullback, but momentum could carry this quite further. The measured move is right about where it is. So for me, I'm looking for a little bit of a pullback. I would stop on a 780, and I would be looking for 15, 16 range. That looks good. Right, Pat? And Oracle, I like Oracle's ETF ORCX. Now, Oracle got crushed here. But of late, it's doing very well. Formed a nice base, broke away. Today's high was right on resistance. You can see this low, this peak, and it right across here. If we can punch through here, I think the next shot would take us to 185, and then maybe 205, 210. So 185 and 205, 210. I would implore you to look at ORCX, which is a double leveraged ETF long. Look how much this has come down. Now, when Oracle was flying, this was 181. He took this from 181 down to 22. So you can see what kind of leverage it has both up and down. If Oracle makes a big move, this is probably 45 and then 60. I'm not kidding. So keep an eye on that. I like Oracle. I do. IBIT for Elizabeth again. Elizabeth, I don't like anything crypto. I may be wrong. And you can see how it's right at resistance here. That would be a bear flag. This is a 1, 2, 3, 4. So if it craps out here, this is extremely vulnerable for a move down into the high 20s. Not kidding. Should it break out? It's going to take some energy to do that. I would look for a move into the high 40s. I would be careful with this stock. It doesn't do a thing for me, and it looks bearish. ALK for Emily. So, yeah. Alaska Air. Well, the whole air group may benefit from the oil situation. There's also a lot of rumors about mergers, not for Alaska, but for Delta and American and whatever. This is a 1, 2, 3, 4, 5 ways down, and it's near support. Nice bounce. What I want to see on this one, and it does look like an inverse head and shoulder pattern. What you want to see is this. If I can get this, and this is a little bit of a bull flag, see it? So if it pops through here, I would look for a move towards 52, 55 range up in that zone. In longer term, should it get back above the 60 range, which is secondary target. So 55, 60, and maybe 78 long term, but right now it has things to prove. It needs to break out with volume. It is a promising pattern in terms of a reversal, but it hasn't really broken out a reversal just yet. HIMS, well, they got legislation going on and all kinds of stuff. HIMZ is also intriguing. Here's HIMS. HIMZ is the ETF for it. This is also a double long. Today, this was up 86 cents at 2.84%, while HIMS was up 1.3%. You can see how the daily chart has improved. Now, resistance, 27.5. You get through that, you're looking at 32.34. I like anytime I see this kind of a test and then a retest with a higher low, it's often a bullish situation for me. I like to break out of what looks like a coil. I think the immediate test of 27.7 and a quarter a half, 27.5-ish is where I think this could go short term over the next couple of days, provided the market cooperates. Do I like it? Not particularly. I don't hate it. Nike, well, they had a pretty good report. There's another stock that got whacked. Again, there's so many bullish charts. Why would you want to play with this stock? There's a big gap there. There's resistance at 47-ish, 46 3/4. And then you have to fill that gap. This is a bearish chart all the way. Is it reversing? Yeah, but look at the volume on the upside versus the downside, and the underlying technicals look like crap. I'm a seller at 46.5 3/4. About a point from here. Doesn't mean it can't go to 50, 51. It might. Again, but what I counsel to all my traders is always, why pick a stock and try to pick a bottom when you're in so many stocks that are in beautiful uptrends, right? Exactly. So Emily, be careful with Nike. SBLK, look, this is a shipping stock, and the shippers have done very well. This is an FRO. Looking at the overall chart pattern, it's in a nice rising angle. This is what I'm talking about. Why wouldn't you want to be in this stock versus Nike? This already made a bottom, V bottom here. Broke out, retested right there. Tested again, created a new rising channel. It did a 1, 2, 3, and this is 4. I think you're going to probably retest. If you want to make a higher high, you're going to have to go through 27. And once you do that, your target is 32. AGX. Well, what's to say about this stock? Well, anytime a stock goes, ready for this? This is 2 years ago. 40 to 614. you obviously have some room to the downside, but momentum is phenomenal in this chart. I've been following it for a year. It broke out and continues to channel up. At this point, pretty powerful chart. I would stop under today's low, under 550. My immediate target is 655.60. And once you get through that, if this does accelerate, you might see 700. That's a good chart. Underlying technicals are belying the trend. Here's what I'm talking about. You make a higher high price-wise, a lower high on the unbalanced volume. That tells me the stock may be being distributed. You must be careful on this one. 100% stop under 500. I would probably stop half under 550, the rest under 500. Anybody else with a symbol before we call it good? We only have a couple minutes to go, folks. Just want to say that if you come to the techtrader.com, let me see if I can share that. One sec. I'm not getting that data, but bottom line is here. Let's share that screen. Just a minute, folks. Yeah, for some reason I've not been able to bring it up. Oh, there it is. There it is. Share. Okay. This is my website. That's me. We're technical analysts. We're experts. We trade technically. Intraday 1 minute charts on day trades and 5, 15-minute hourly charts on swing trades. We have several hundred people online with us every day asking me questions, and I'm giving ideas as well, and I'm giving them ideas. And anytime you get an idea from me, it includes price points in terms of where you can sell it, with what the support resistance is, or where the stops are. So come join me and check us out. And if you like what you see, look forward to seeing you. I think that's it for today. If there's any other questions, Hive Digital. Let me take a quick look at Hive for Elizabeth. Well, Elizabeth, it's one of those, if I'm not incorrect, is this crypto? I think it is. If it's crypto, I got to tell you, I don't like it. Doesn't mean it can't go. It is a falling wedge of sorts. It has broken above the moving averages. That's a good thing. I would say lateral price resistance comes in right about.
We're still seeing your site, Harry.
Oh, sorry about that. Yeah, I'm gonna have to share that in just a moment. Back to my charts. Okay. So there's Hive Digital. You can see it now, right?
Yeah, I see Hive. Yeah.
Okay, so Hive had that big run when the crypto stocks ran, and then it came down and really got bombed from 8 to under 2. I think it's on the verge of breaking out. It did have a little bit of a gap yesterday above the moving average, which I like. I would say my target, if you want a target, would be about 340.50. I would trade it out there. That's just my take. If it gets there. And if there's nothing else, let's see. Do we have any other questions? I don't think so. So I'm going to call it good for today. Thanks for being here, everybody. Come join me at thetechtrader.com. You'll find out that I'm the hardest working guy on Wall Street, and my ideas are impeccable. You should be able to make some money just in a free 2-week trial. That when you come on board, I was told that a lot of people make enough money to cover the 2 years worth of fees. So this is what it's like at thetechtrader.com, and please join us, and I'll talk to you guys later. Thanks for being here.
All right. Thanks, Harry.
Yep.
Thank you for being here to close out the day for us again. So this has been another Analyze Your Trade event, and a lot of good analysis today. So I did live stream the whole day to YouTube. Actually, it's still live streaming to YouTube. So the full uncut unprocessed archive is on YouTube immediately. So if you missed anything for today, and then I'm working on processing the individual recordings, and I will have those posted probably later tonight. And what I did, Elizabeth, thank you. What I've done the last couple times for AYT is I post the link to the individual sessions, a link to each individual session, but then I've also posted some notes so you can see what was covered during each session briefly. So if you want to see what I'm talking about, that's the one link I just posted is from a few weeks ago. That was from the March 26th session. So today's session or today's archive page will have notes like that. As soon as that takes a little while to process all of that, but that will be there. And if you're new to Timing Research, I've been hosting events on Timing Research for over 12 years now, since 2014. So, and the full archive of all Timing Research events and shows and everything are permanently archived for you to review at any time. So, all right, that's it for today. So if you have any feedback, you can reply to any Timing Research email that comes directly to me. Or there is a Timing Research a contact page on the Timing Research site. Also, anything you send there comes directly to me. If you have any feedback, questions, comments, ideas you'd like to see for future events, anything that sort of. Oh, mark your calendar too. Our next big 3-day educational event is in about 3 weeks now. That'll be May 5th, 6th, and 7th. Really excited about that one. I have a great lineup set already for that one. So the theme for that one is going to be Active Traders Playbook, covering strategy and mindset. So we're going to have up to 30 educational presentations. I got a few new people on board, a few people who haven't been on in a while. And then, of course, many of our returning favorites to join us again. So again, May 5th, 6th, and 7th. And that'll be from starting 10 a.m. each morning and going till as late as 8 p.m. Eastern. And to join the room, you don't have to, I mean, you can register beforehand and reserve your spot, but you can just come to TimingResearch.com during the day, any of those days, and or during any other Timing Research event, and there's always a link on the main page to log directly into the room. So, all right. Unless anyone has any questions, that's it for today. Again, full archive for today is available on YouTube for immediate review, and then the individual sessions will be available soon too. So, all right.